data sharing is definitely present. Maybe Alphabet will appeal that side of the decision, but it doesn't seem to me like it's going to be meaningful data sharing to the extent that we could see business altering implications here. Maybe it's a little data on these long tail searches or not seldomly done searches that it helps the competitors who don't have as much data to catch up there. But again, those are the exception to the rule, not the main searches. It doesn't really have to share its data on the advertising side. So I think Google is looking really, really good after this decision.
All right. Reading a lot of articles, listening to a lot of people talk about this decision, Alex, and one of the things that people seem to be pretty excited about is the idea that this opens the door at least for Apple to get paid to integrate a chatbot into Siri. How big of a tailwind could that be for Apple?
That could be a massive tailwind for Apple. Now, the caveat here is generative AI monetization is still in its infancy. And it may not come from Google, right? Maybe it comes from, there's a competition where you have Gemini in one area and you have OpenAI competing there. Maybe even Perplexity gets in the game. So I think that this is going to be a broad competition to get generative AI into mobile operating systems. But that being said, I expect there to be real monetization figured out on that front. And it could be a very big business, both for Google and for Apple.
All right, Alex Hanchowitz, really good to see you. Thank you very much. Appreciate the time and the insight. Coming up here on Worldwide Exchange, the growing fight for talent in the AI arms race. The CEO of Unifor is here talking recent major acquisitions to take on big tech's biggest players. We're going to be right back after this break. Stay with us. Welcome back to Worldwide Exchange. The fight for the best and brightest AI talent just continues. Meta confirming it's bringing over Apple's lead AI researcher for robotics, while Bloomberg reports 3 other members of Apple's team are leaving for other companies, including OpenAI and Anthropic. OpenAI also making a big move yesterday, buying Static for about $1 billion and appointing the startup's CEO as its chief of applications. And just last week, business AI company Unifor announced it's buying Orbi AI and plans to acquire Autonomy. Both startups have AI talent that previously worked at Google DeepMind and elsewhere. Joining me now is the co-founder and CEO of Unifor, Umesh Sachdev. Umesh, thanks for coming back.
It's always fun to be back with you, Frank.
All right, let's talk about these acquisitions. So, were you acquiring the companies and the talent came with them, or was this specifically focused on the talent at those companies and integrating them into Unifor?
Well, we're very excited, first of all, with these two acquisitions. They bring a lot of technology to us and the people, the talent. But why were these important for us right now? The state of AI adoption in business is at a very interesting point. There are some industry reports talking about AI agents are not going to succeed and majority of them are going to fail. What we see at Unifor, over 2,000 customers, while we are not seeing a broad-based adoption of agentic AI in businesses, we're seeing very deep adoption in specific industries and use cases. We're seeing a Big Four consulting firm change its entire business model and codifying their knowledge in small language model, fit-for-purpose AI agents. So customers look to us at Unifor, and they want very high velocity AI innovation, especially in agentic AI. And these two acquisitions, RB AI and Autonomate, give us a huge shot in the arm of taking this new innovation back to our customers and talent, which is very scarce right now in the industry. We get a big turbo boost to our engine as well.
All right. Talent is scarce, according to you, and it seems like it's very competitive. You have to pay up for the talent. At the same time, it's not really clear what companies are going to use generative AI for, or AI, even enterprise AI, what they're going to use it for. How do you know you're hiring the right people if you don't completely know all the applications that companies are going to use AI for?
That's an interesting point you're leading me, Frank. The state of AI research in the industry is at a fork in the road, and we have two paths ahead of us. One part of AI research is going after super intelligence. Companies like OpenAI and Grok are chasing this ambition. The second fork in the road are fit-for-purpose AI. Companies like Unifor, we are going after business AI, delivering productivity and automation to businesses. Anthropic is delivering coding efficiency and Copilot. Perplexity is going after search. AI research talent, a lot of people don't understand, happens to be very mission-driven. And at this point, the AI talent, which is very scarce in the industry, is choosing to either go down the path of super intelligence and get very excited about that mission, or they're getting very excited about working with companies like Unifor, which are every day delivering real business applications to over 2,000 customers. And we have an opportunity to keep innovating at a high pace right now.
All right. So you want to innovate at a high pace. I got to ask, you're competing with a lot of big tech companies like a Meta and Alphabet, OpenAI. How are you getting talent outside these acquisitions? Obviously, an acquisition is one thing. But how do you compete with them when they have billions upon billions of dollars to throw at this talent?
Well, like I said, AI researchers, a lot of people don't understand. Compensation is obviously important in any field, but AI in particular is at a point where these researchers, these engineers, the people who understand the deep science of AI and can apply to business, that's a very tiny talent pool. And this talent pool is very mission driven. At Unifor, we give them the opportunity to join forces with us, work with the mission of delivering automation to over 2,000 businesses, several of which are Fortune 500 companies, and make real impact in the job of these people. So how would we know that AI is working, Frank? We just came out in the US from the Labor Day weekend. It gave me a chance to spend time with my family. A friend I know was playing football, etc. And if in a couple of years, if we have to assess if AI is working or not, in the US, if we have 3 or 4 more long weekends because of AI, we will know we are delivering productivity in business. And that's the mission that we are able to use to attract the best and the brightest in the industry.
As you talk to me about your relaxing weekend, it leads me to another question. Why is your weekend so relaxing? When are you going public? How come you're not getting ready to do that? We're seeing a lot of action in the public markets. Why isn't Unifor one of those companies?
Well, two separate topics. Do I believe that the public markets are beginning to open up in a good way for tech IPOs? Yes, we are beginning to see some very interesting IPOs. And my friends at both exchanges tell me that the pipeline for tech IPOs is very healthy. There's a lot of anticipation for some mega IPOs. Companies like Databricks and Canva and Stripe might be in the pipeline. At Unifor, again, we've always said that we'll go public when it feels right, when the time is right, when the markets are right. Right now, if I can grow my customer base from 2,000 to 4,000 to 8,000, that's a recipe for me to keep attracting the best and the brightest talent. And I think if I continue down that path, going public at some point would be a natural outcome.
All right, Umesh Sakdev, great to have you here. Congratulations on your 2 acquisitions, and always looking forward to talking to you.
Always.
All right. Coming up here at Worldwide Exchange, we got a lot more for you. As we head to break, we're going to check on some of your morning movers and trio of ratings upgrades. Redburn moving Chipotle to a buy. Needham also moving TransUnion to a buy. Raymond James moving Regeneron to outperform. You see Chipotle up about 1.25. TransUnion up about 1.75. Regeneron pulling back just about 0.5%. Stay with us. Back to the markets, investors look to shake off the stumble to start September. Take a look at futures right now. Still a bit of a mixed picture. NASDAQ up around 0.5%. The S&P up around 1/3%. The Dow just fractionally lower right now, looking like it would open about 10 points lower. For much more than trade day ahead, let's bring in Chris Morangi, Portfolio Manager and Co-Chief Investment Officer of Value at Gabelli Funds. Chris, thanks for joining us.
Great to be here.
All right, first off, why don't we start off with this Alphabet, Apple news. Does it change your thoughts when it comes to mega cap tech and the Mag 7 in any way?
Not really. I mean, this is a relief. Obviously, we get some certainty, an outcome that is much better than feared for Google and for Apple. Google we've owned on and off on the value side. It is in many ways a value stock. But it's basically a market multiple. Obviously, one of the overhangs has been AI. This doesn't really address that so much, but it does perhaps get the government out of their hair.
All right. As we're looking at the markets right now, we saw a bit of a stumble going into the start of September yesterday. We also saw a bit of a spike in bond yields. Does that change your view of the equity market, the idea that we're seeing the long end in particular move up with the 30-year very close to 5%?
Well, obviously, we're dealing with the potential for a return of inflation, debt long term, and let's call it some attack on political norms, all contributing to that rise in the long bond. That obviously has an impact on equity markets, but for the most part, we're seeing a pretty decent earnings backdrop, and the potential for rate cut keeps us fairly bullish.
All right. Your word of the day today is deals. Now, what deals are you talking about in particular?
Well, when I sat here just after the election, we were talking about the return of animal spirits, a more favorable regulatory backdrop, and moderating borrowing costs. That thesis took a little bit of a hit with some of the trade noise and some mixed signals from the administration, but it's game on. And I say that not just because the deals are up, but because of the kind of deals that are getting announced. 3 deals in particular that we're following: Union Pacific and Norfolk Southern, the combination of Nexstar and Tegna, and then third last week, AT&T buying a significant chunk of spectrum, potentially from EchoStar, were unfathomable, 6 months ago. We'll see if they get approved, but the fact that they're announced means that investment bankers are dreaming big.
All right, so your pick for us today, though, is MSGS, Madison Square Garden. No deals there.
Well, there are lots of deals in the sports area,
Yeah.
actually, including, and most notably, a sale of the Los Angeles Lakers for a notional $10 billion. Today, there are very few ways to participate in sports assets. MSGS is one of them. They own the Knicks and the Rangers. It's 24 million shares. The stock is just under 200, a couple hundred million of debt. So for less than $5 billion, you get the Knicks and the Rangers. The stock's worth at least double that. I think one of the issues is, listen, the Dolans are not going to sell the company, but they could sell a stake in one or both of the teams. And if they sold, say, 10% of the Knicks at $10 billion, that's $1 billion they could return a quarter of the float.
In all fairness, though, but isn't it kind of an odd time to go into sports franchises, at least in the public markets, where a lot of the owners are trying to get out of the sports franchises?
Well, it's an interesting point. I mean, obviously, this is an exclusive club.
Yeah.
Look at what's happened to gold and Bitcoin. They're stores of value. Sports teams, there's 30 NBA teams, 32 NHL teams. They're limited supply. They've been great stores of value over time. And that's why wealthy individuals are buying into the market and why public market investors have limited opportunities, but probably should.
All right, one thing I want to talk to you about is the oil market. We just read a news alert just a short time ago. OPEC's considering increasing output at their meeting coming up, possibly also in October. How does that shape your view of the energy market in particular? Energy has been actually one of the leading sectors over the last week.
Yeah, we haven't historically been that involved in energy. Obviously, it's good for the consumer, and we like that because we are involved in a lot of consumer stocks.
All right, right now we're looking at WTI and Brent crude pullback. WTI actually pulling back deeper, about 1 3/4 of 1% on that report. Brent crude down about 1.5%. You mentioned gold very quickly, obviously a safe haven. We've seen that move higher. But your pick, MSGS,
That's
Madison
right.
Square Gardens,
There's
invested in sports.
there's crispness in the air. We're a month and a half from the NBA starting, a month from the NHL starting. It's time to play.
There you go. Chris Morangi, great to see you. Thank you very much. Before we let you go, one more look at futures. We've been talking on one long, bit of a mixed picture when it comes to futures. Taking a look at those right now, you're seeing the NASDAQ move higher on the back of that Alphabet and Apple ruling, up just about 0.5%. The S&P up around 1/3 of 1%. The Dow pretty close to flat right now. That's going to do it for us here on Worldwide Exchange. Have a great day, and thank you for watching.
Good morning. It was a big win for Google in that antitrust case that dogged it for years. A judge ruling that the tech giant will not have to divest its Chrome browser and Android operating system. President Trump says he wants the Supreme Court to give him a quick answer on whether his global tariffs are legal. And I talked about this yesterday. Treasury Secretary Scott Bessent reportedly is set to begin interviewing candidates to succeed Jay Powell as chair of the Federal Reserve. It's Wednesday, September 3rd, 2025, and Squawk Box begins.
Good morning, everybody. Welcome to Squawk Box right here on CNBC. We're live from the NASDAQ market site in Times Square. I'm Becky Quick along with Joe Kernan and Andrew Ross Sorkin. And here we go. This morning, this Wednesday morning, take a look at what's been happening with the U.S. equity futures. Mixed picture right now. NASDAQ is up pretty significantly, up by about 165 points. S&P futures are up by 30. The Dow is flat, basically down by about 3 points. It does come after the worst day for the S&P 500 in over a month, all the way back to August 1st. There were a lot of superlatives yesterday, maybe key among them, gold's at an all-time high. You've got the 30-year at the highest yield since July 18th, and then you've got the 10-year, 2-year spread at its steepest level since April 22nd. Take a look at those yields this morning because, again, the 10-year is sitting just at around 4.3%, 4.27. The 30-year is almost at 5%, and then the 2-year is a little weaker this morning. It's at 3.65. Gold prices again at an all-time high yesterday, and they're up a slight bit today, up by about $10, $3,601 an ounce.
Shouldn't we be happy about the yield curve steepening?
I guess so.
I mean, after all the, McDonald's yesterday, a big piece in the Journal today about the middle classes
Right.
is totally strapped
Yeah.
at this point. And I think the recession fears are starting to. It's so
Trickle back
weird.
in.
You could argue either case.
I mean, if you're going to see Fed cuts, they can do it because inflation has not been as high as has been expected, but you've also got a weaker job market and questions about what's happening to the
We'll see
economy.
Friday. You'll see Friday. But 75,000. But and then I was worried someone else would reference the Moody's economist. I would never mention this guy, but he's calling. I wouldn't. I just I don't think he's going to mention. Because you're fairly fair, but and I'm not. But Zandy, if he's ever right, I'll have a heart attack. But he, now says we're on the cusp of a recession.
We'll see.
We'll see.
Well, I guess I'll cite anyone to talk about.
You look at these ideas of two economies, dueling economies, and that's also what the McDonald's CEOs and other people who told us yesterday and talked about some
He
of
said
these
it.
issues.
He just said it. And
Yeah.
Ray did
But
too.
they're not-
Washburn. Remember
Ray
all the things
Washburn said
Ray?
the same thing, but what Chris Kempczinski said, the McDonald's CEO, is that he's not getting the trade down impact.
Right.
Normally, you would see when there's pressure on the lower end that higher stratas sort of trade down and start eating more at McDonald's. It hasn't happened.
Tale of two cities.
Right.
Right. But he, the most important thing he did say is the chicken snapper is back to step.
For forever. Let's also take a look at crude oil. It's actually taking a leg lower just in the last hour. Reuters is reporting that OPEC Plus is going to be considering another production hike at its meeting this weekend, and as a result, that's a big pullback. You had seen WTI yesterday up pretty significantly. This morning it's down by about 2% to 64.32, and then you've got ICE Brent that is just below $68 a barrel.
And then there's the big news that happened in court yesterday. Alphabet shares jumping as investors celebrate what they see as minimal consequences stemming from a key antitrust case involving Google and, of course, its search bar. Eamon Javers joins us right now with more. It's more than just the search bar.
Yeah, there's a lot to this, Andrew. Good morning. Both Google and the Department of Justice released statements last night highlighting parts of the decision they liked, disputing the parts they didn't, and hinting at future legal wrangling. Now remember, appeals in this case can come after a final judgment is issued later this year, so this could still go on for a couple of years. Google said in part in its statement, now the court has imposed limits on how we distribute Google services and will require us to share search data with rivals. We have concerns about how these requirements will impact our users and their privacy, and we're reviewing the decision closely. An Assistant Attorney General Gail Slater posted on social media that, quote, the court didn't order all of our requested relief, and we are weighing our options. Now, the court said Google will have to share search data with competitors, declined to force Google to sell off its Chrome browser and Android's operating system, though, and it said that Google can continue to pay third parties like Apple for distribution, but can't enter into these exclusive search engine agreements. So Google has said all along that it had planned to appeal this decision, so the case could continue well into 2027. Next steps include both parties submitting revised final judgments by September 10th, and appeals can begin after that final judgment has been issued by the court, guys. So we're not out of the woods yet, but a significant win here for Google in that they avoided the worst possible scenario, which is a forced breakup of the company. Back over to you.
Eamon, here's the thing that I'm still trying to figure out. They effectively say you can't have an exclusive deal on another device, but we can't really take your right away effectively for paying to be on another device. So, Apple stock moved, Google, the whole idea being that they're going to be able to continue the deal that they currently have with Apple, which makes them maybe not the exclusive provider, but effectively the default provider, and a lot of people therefore say the exclusive provider to a phone like Apple. Does this give Apple some kind of new opportunity, not only to get money from Google, but to say, by the way, I know you're going to pay us all this money, and you will be the sort of default thing, but we may make it more accessible for somebody else. We may actually now charge other people to be sort of the second default version, so that we can, because the court says X.
Yeah, I think that's smart, Andrew. I mean, you look at this, and the court is saying, you can continue to pay them, but you can't have this exclusive arrangement. And what the court said here was interesting. The judge, Amit Mehta, writing in documents yesterday that, it would just simply be too disruptive to Apple to force them to stop these payments because that would be damaging to Apple's business. And also, he's talking about the rise of AI and saying that This is a situation where so many AI companies are being started, so much money is gushing into this industry. He said over the 5 years that this case has been proceeding so far, remember it was filed at the end of the first Trump administration back in 2020, the AI landscape has changed enormously, even in the last year as they were arguing this case. So his point is, so much change is coming to this industry and so many potential new competitors are coming. He doesn't want to disrupt things artificially by saying you have to stop this payment stream, but he does want to open the door to other entrants in the market.
I'm naive about all these things. I defer to Sorkin on this stuff, but I have said I don't think Google's future looks that bright because nobody uses. They do now, and I know there's AI on Google as well, but I use something else. And like so many times, the government takes 5 years to do anything. By then, the market's already moved. The free market
That's been their argument the entire time.
It has, though, hasn't it? It's like, okay, now the horse has left the barn. It's this is not the problem anymore. Google's got problems at this point because everybody uses generative AI. But does this help Apple, who has lagged with generative AI? Are they going to ride Google now?
No. The idea actually
Can't
is,
they use?
Well, it helps
the
them.
benefit is that they're going to use Gemini.
Gemini. That's what I mean. Can't.
So
Now they can, and no one will say you can't do that. And Google can't.
But
This is why I
Gemini
asked
is-
you. You're
this-
looking at me like I'm.
no, but Gemini. I know you're a perplexity man.
It's just easy. It's all
But Gemini is basically, I think, long term likely to catch up, if not be
Okay.
better. I mean, some people would say Gemini is way better.
Can you help me move? See, I have perplexity right on the first thing.
Right.
Can you move something else to the? Can you move that back and put something else?
Well, that's the thing about Apple. All you have to do is go to the browser.
You know,
and
I know
it's
how
the
to do that.
default. It's
Right.
the default search on.
That's right.
You don't even have to. By the way, all you have to do is be in the browser and type anything into the thing, and that goes to Google.
I know how to move this.
Okay, I just want to make sure.
But you understand. I've got like 4 pages of those things. But when one does disappear, I do have trouble figuring out how to.
These are issues. Eamon Javers.
Yeah. Go ahead, Eamon.
Yeah, just going to make one last point, which is that the judge in this case said kind of exactly what Joe is saying, which is that it's hard to predict the future. He said you got to approach this with some humility. He said this part of the trial requires, or this part of the legal proceeding requires a judge to look into a crystal ball and predict the future of an industry that he's not an expert in. He said that's not a judge's forte. And so he acknowledged that he doesn't know where it's going to go, but he sees a lot of change coming. And so he seemed to have been more comfortable, sort of more or less standing pat, rather than ordering some huge breakup of the company, given all the changes that are just over the horizon.
I know there's people that could come up with a better example, but I thought SiriusXM. It's like, okay, we're going to stop the. We got Spotify, but we're going to make sure Sirius that they can barely survive by getting together.
What about what Tom Malone told us this week on the program, where he said net neutrality? That ruling changed it so that all of the old guys, the cable companies, and all of them lost out to these newer companies like a Netflix that are free riders on the cable networks, the internet.
Can you think, or either one of you think of another time where the market moves so quickly that by the time the government's
Microsoft.
efforts, it was like they were fighting last year's battle. They're fighting last year's battle.
Microsoft and Internet
Because it takes so long. It's a 5 year. Did it really take?
But that's what we've been talking to, whether it's
Microsoft.
Cantor or any of the guys on.
He's coming on, I think.
Oh, but we've talked to them about this over and over.
Microsoft and
and over.
Internet Explorer, and it not only cost Internet Explorer, it also cost them their ability. Bill Gates will blame it to this day on why Microsoft lost out on the phone. He got beat by the iPhone because he was so busy fighting all of these battles in Washington.
And then argue that the DOJ should let the market work and maybe be less
Here's the
activist,
question.
or would AT&T still be?
Well, AT&T might still be
Ma
exist.
Bell.
And so my question to you is it different in a technology space?
So fast. Well, because it's moving so.
If I told you we were talking about, the agricultural industry, would you say the same thing? If I told you about supermarkets, would you say the same? I mean, this is.
I would say the same thing with supermarkets. I think it's an outdated view of what they're doing with supermarkets.
I want the government to run all supermarkets and all rent control.
But that's. There's a guy for you. There's a guy for you. You're gonna have to move to the New York City.
Me and Apple. Me and blah blah blah. Both love.
Good for you.
I'm gonna turn you around.
Hey, Eamon, thank you.
The social democrat. He's not. That's what I'm hearing now. He's not a socialist. He's a social democrat.
So take a look at the Social Democratic platform, and then you can get some real ideas
And
about what's
that's
coming.
socialist democrat is redundant anyway.
Oh. All right, when we come back, much more on the markets this morning. Our next guest firm is bumping up its earnings estimates for this year and for next year. We'll have more on that right after a break. Squawk Box will be right back.
Futures right now, as you can see, mixed with the NASDAQ on the Google News sharply higher, S&P up a little as well. Join us now, Alicia Levine, Head of Investment Strategy and Equities at Boney. No, wait a minute. It's BNY, but it's BMO. BMO, you pronounce BMO, right?
But we're
But
BNY.
you're not Boney. Okay.
We are BNY.
You're BNY. Okay, I was just briefly was confused. I wasn't, actually. So, Alicia, you've been really confident, I think, about the market's potential to ignore a lot of extraneous things and continue to move higher. But you're very good at mentioning why it shouldn't be. And it just quickly, you say, tough September trading, tariffs, rising yields, Fed drama, jobs data. There's a lot to worry about. You still think we go higher because of one thing, earnings?
Earnings.
Yeah.
So it's really an earnings-driven market. We raised our earnings expectations for this year and next year, and with it, our S&P target for the end of this year and next year as well. And I think what you're seeing, and you started the conversation this morning and somewhat yesterday as well about with the disconnect a little bit between
Chaos.
the market,
Yeah.
economy, and the real economy, and the bifurcation in the consumer. And what's happening really is that corporates are able to produce earnings, produce margins. At the same time, while some of the macro data is less than stellar, some concern over what's happening with the labor market. The bifurcation in the market economy and the real economy is notable, but ultimately the market is focused on earnings and margins and free cash flow, and we are going up and to the right. And so therefore, we think the market can drown out the noise, even though there is a lot of volatility in the policy choices.
But that's where the rubber meets the road. These two numbers, 2025, I don't know where people were for earnings growth for 2025, but you say it's 11.5% at this point, which is higher than anyone thought. And then, what's going to happen next year? What about tariffs? What about the Fed? 13.4% earnings growth in 2026.
That's right.
So if you knew that, and if we could say for sure that you were right, you really could ignore a lot of the noise, I think, because that's the one thing you'd like to know with corporations, how they can grow.
I mean, that's how the market trades, right? The market trades on the fundamentals of the corporate sector, and so that's what we're focused on. The noise is noisy, right? So it's very easy to get distracted about sideline conversations, but I think about this as, we have to stick to our first principles. What do we know to be a fact? And what we know is that earnings create the momentum in markets. And if you're beating earnings to the extent you did in the first quarter and the second quarter, and I suspect in the third quarter as well, then you're in a place where the Fed is cutting into an increased earnings cycle, which will be bullish for markets, even though there are concerns all over the place on policy choices.
Alicia, I love that. That is so Yogi Berra-like. The noise is noisy, but you got to tune it out. You got to look and see what's around.
And so, our clients also ask us, how come you were able to see through this? How do you do this every day? How do you wake up in the morning when it's all around you? And I say, well, I look where earnings expectations are going. I hear what corporates are telling me. And what we see is that ultimately, let's look at the earnings that came out last week for the retail sector. Much better than expected, because everybody thought the tariffs were going to be very difficult for them. The consumer is not holding up on their revenue side, and they were fine. They were much better than expected. So I think what you're seeing is a reacceleration. And if you look at the way assets are trading, it's telling you there's a pro-cyclical bent here. So financials are doing great. Industrials are doing great. The equally weighted S&P hit a new high last week. Like all these things that have sort of been dead, taken over by the Mag 7, the assets are now broadening out. It's telling you that the economy is muddling through better than expected.
I've watched the market and argued, look, the market is telling us that things are going to be okay. But then I always think, the markets might be wrong. They've been wrong a lot. And I thought yesterday, when we were down over 500 points, I was like, okay, some of the roosters are coming home. I don't know, chickens are coming, but they don't roost. But it almost looked like things were coming to roost. Yeah, and any day we worry, any day we feel like it could happen. If something goes over 5%, the 30-year or the 10-year goes back to 4. We always think something's right. But if you knew that the markets move was based on the fundamental reason, and that is that we're seeing better than expected EPS growth, then you wouldn't have to just say, well, the market's telling us something. Nebulous.
It's good that we're all kept to our knitting, right? It's good that there are concerns. Investor sentiment is not that high. In fact, it's pretty bearish. It's the most hated bull market, but we think we're in it. I think that the earnings will keep it going. And the one risk here, the real risk, and I sent you the notes here, the risk is that the margin growth and the free cash flow that have allowed the market to be in a higher multiple regime.
Right, from tariffs could go down, right?
That's the risk here. The risk is that the margins start getting clipped from the tariffs, and at the Mag 7, they're spending so much that the free cash flow ultimately over 2 years goes lower. That's your risk to the market.
Okay. So, but as a result, 6,400 holds. By the end of the year, you're 67 possibly, and then for next year, what, 7,400 by the end of 2026.
That's the top. We do.
And that's not even. That wouldn't be that much of a gain this year.
No, I mean the numbers are getting big, right? And then when you think about where earnings are going, if you're growing off a base, we did this in mid to late August. That means by the end of 2026, the increase is quite.
That'd be 10% though next year. Anyone would sell
right?
over 10.
Which is not unreasonable.
No,
It's not
and good.
The Fed is cutting into increased earnings cycle, with assets telling you there's a cyclical growth upswing. That is the thing to remember. That is the key thing. Can bond yields globally, jolt the markets? Of course it can. You can easily have a 5 to 10% sell-off. That's normal. But if you're playing the long game, and we play the long game, we're focused on earnings and we're focused on the direction.
BNY. So you're head of investment of BNY Wealth, head of investment strategy and equity.
Correct.
Everybody reports to you.
I can't say that.
You want to say that?
I can't say that.
But a lot of people. How about a lot of people?
Some people do, yes.
Some. Humble. Yeah,
All right, when we come back this morning, we've got lots more to talk about. Treasury Secretary Scott Bessent reportedly getting ready to kick off the search for the next Fed chair. We've got the details on that story right after a break.
back to Squawk Box this morning. Treasury Secretary Scott Bessent will reportedly begin interviewing candidates this Friday to be the next Federal Reserve Chair. The Wall Street Journal reporting that interviews will continue next week. They'll be conducted either in person or via video conference. Among the nearly dozen candidates that have been mentioned as potential picks to head the U.S. Central Bank, National Economic Council Director Kevin Hassett's on that list, former Fed Governor Kevin Warsh, we've had him on the broadcast, and current Fed Governor Chris Waller. We've actually had all of these folks on, and don't miss an exclusive interview with Governor Waller today on Squawk Box at 8:30 Eastern Time this morning.
And China's President Xi Jinping saying that the world is facing a choice between peace or war as he hosted a giant military parade commemorating the 80th anniversary of the end of World War II. That parade was meant to project China's military and diplomatic power and featured missiles, tanks, and drones. Russian President Vladimir Putin and North Korean leader Kim Jong-un joined Xi, but Western leaders mostly stayed away. President Trump fired off a Truth Social post as the parade got underway, saying that he hoped Xi honored American sacrifices in World War II. He said, "Please give my warmest regards to Vladimir Putin and Kim Jong-un as you conspire against the United States of America." Kind of an interesting concept, saying that the world has to be choosing between peace and war as you're standing next to Putin, who is going after Ukraine, looking to expand his empire constantly, questions about what happens in Taiwan too. So sure, it's a choice between peace and war. It's just a question of who gets to make that choice.
And I also think it's interesting because you saw him come to, I don't remember, to Davos now a couple of years ago, where he basically made this whole argument. This is when Trump didn't. This is back in the old administration, former administration, and he basically made the argument that China was going to bring the whole world together. So it's sort of a very interesting sort of distinction between that speech, which was probably now 6 years ago, and today.
Peace and war between whether anybody stops their ambitions to continue to spread.
Putin constantly lulls you into sort of I don't know, he's the most dangerous man in how many decades? Don't you think most brutally dangerous? I don't know about Xi, I guess maybe, but we're seeing it more and more with Putin. I mean, in the minute you forget some of the things that have happened in Ukraine, he reminds you very, very quickly. Avoid all umbrellas when I'm walking around. Coming up, more of today's top stories. Yeah, I'm going to stick me in the poison. Including a recap of the big move higher in the shares of OPED. Later this hour, we're going to speak with the CEO of Mexico Stock Exchange. Its returns this year have more than doubled those of the S&P 500. As we head to breakers, we'll look at yesterday's S&P 500 winners. 5 things to watch ahead of the opening bell. I get all tied up. Will you count just to make sure that?
Sure.
Okay.
Ready?
Yep. Okay. Alphabet shares jumping on a legal win for Google antitrust against U.S. antitrust authorities. A district judge ruling the company will not have to sell its Chrome internet browser, though he said Google would have to share data with its rivals to increase competition in online search.
That was one.
You do realize that there's a number on the screen.
Oh.
Holy moly.
Okay.
Are you able to read?
For those of you who watch television,
But I'm reading above that.
Look at the screen.
I'm reading above that, and when I do look at the screen, it's to make sure my toupee is situated properly, and
number 2.
you call me that?
Number 2.
Yeah, thank
Number
you.
two. Number 2.
Do head.
Number 2.
I was like, you know what? Not everything is everybody. I was going to say something. OpenAI buying product development startup. I'll tell you at the end. StatSig for $1.1 billion. The company helps clients test features and use real-time data in their operations. Is that 2? Okay, now moving on to 3. Activist hedge fund, Holdco Asset Management, reportedly planning to put pressure on regional bank Comerica to sell itself. Wall Street Journal says if Comerica doesn't move towards a sale, that Holdco will likely nominate 5 directors to the bank's board later this year. And moving on, earnings, shares of cybersecurity company Zscaler rising in the pre-market. The company forecasting annual revenue above Wall Street estimates. And finally, number 5, I think Disney will pay $10 million to settle allegations from the FTC that it unlawfully collected children's data for targeted advertising. The FTC had said Disney allowed personal data to be collected from children who viewed kid-directed videos on Alphabet's YouTube without notifying parents or obtaining their consent. I was going to tell you, as we were crisscrossing the country and you have to stop at rest stops and stuff to do your thing, there is a service out west called, you know how it's got milk? It's got poop. And it's labeled on all those, yeah, that's the name of the company. That's all past the building.
Wait a minute, like meaning
on those
there's a
porta
bag
potty,
that you
well, it used to be called a porta potty. This on the side of it says if you want to order a bunch of them, if you're doing construction or something, you need to look up the company got poop and order some of those.
Good advertisement.
Everybody poops. As you do tell kids that, right? When they wish they didn't have to.
Okay, when we come back, so
Look
if
it
you
up.
want to be a digital creator, lots of people do, but making millions isn't as easy as it may look. We're going to talk to 2 YouTube stars showing others how it's done. And a reminder for you, you can get the best of our Squawk Box show in our daily podcast. Just follow Squawk Pod on your favorite podcast app and you can listen anytime. We'll be right back.
Welcome back to Squawk Box. Join us right now to discuss the creator economy, future of media, and so much more. I watch these guys on YouTube almost religiously. Colin Rosenblum and Samir Kudri, co-hosts of the Colin and Samir Show on YouTube. They've got more than 1.5 million subscribers. They're also co-founders of the Published Press, and they're hosting a huge event. It's their first summit here in New York this week in Brooklyn. Good morning to both of you.
Morning. Thanks for having us. Thanks for having us.
So, before we just I want to get into the whole creator economy thing, but how did you get into this yourselves before we sort of establish, because, you know, we've got an audience that may not be watching YouTube but they may know you.
Yeah, I mean, I grew up in Los Angeles.
Right.
I always wanted to be in Hollywood, and I was a video editor. I got my first job at a studio. I edited on a film called Ides of March.
Yep.
And I would walk as slowly as I could from the entrance of the studio to the editing room, because I always thought maybe someone would stop me and go, "Who's that guy? Put him in the movie." It never happened.
Just like in the drugstore.
Yeah, that's right. Yeah, it never happened.
I can see it.
And what I learned quickly was if I wanted to do that, if I wanted to be on camera, I wanted to make my own ideas, it wasn't going to be in Hollywood. It was going to be somewhere where they couldn't say no,
Right.
which was YouTube. So in 2010, started my first YouTube channel. That's how I met Colin, and we've been making videos together ever since.
Yeah, that channel was called the Lacrosse Network. I was one of maybe 2 people making videos about lacrosse at the time.
Do you think, by the way, there's like an alternative universe? And so there's what might be described as like mainstream media, which might legacy media, old media, and then sort of new media in the YouTube world. And there are all sorts of celebrities and people who oftentimes, like my kids, will be like, "Oh my God, that's a rock. That person's way bigger than, I don't know, J-Lo." I would think that J-Lo would be big, and they would mention some other person I never heard of in my whole life. And
I just want to give you a really interesting stat about this. So there's a stat from YouTube. They did a study. 47% of Gen Z say that they're a fan of something that no one they know personally is also a fan of.
I was gonna say, I think it's an age factor too. They get so much of their content online.
It is, but
Versus-
we're getting into the point where like the fragmentation of fame is at an all-time high. So we absolutely can walk down the street together. There could be someone who's a massive fan of you,
Right.
and then 3 blocks
one of
later.
the things that you guys preach all the time is this sort of idea of owning your own niche,
Yeah.
right? And so what I'm curious about is everyone says they want to own their own niche, but at the same time they're desperate for views, right? And total numbers. Everybody always wants to have the most numbers at the bottom of their video, and sort of how you deal with that dynamic.
I mean, the way I look at it right now is views are actually incredibly available, right? If you study algorithms, if you understand how to get views, you can find viewership. I actually think the difficult thing now is building brand, right? I think that's what creators need to look at now is how do I actually leave an impact on a group of people? And that's why you often say, go to your niche, right? Find an underserved community that's actually waiting for you and wants to hear what you have to say.
You guys are big evangelists for YouTube, but I want to understand the economics of YouTube, because there's a lot of folks who say YouTube great as a quote-unquote distribution platform. It is not great as an economic platform unto itself, meaning the ability to solely monetize just off of the ads, that the check that YouTube will send you is not going to pay the bills. That what's going to pay the bills is you know, having a different kind, an influencer deal on a brand, talking about, AG1 or whatever the product is, and that's really where the money is.
Yeah, that's definitely true. I think depending on what your scale of viewership is, if you're doing in the tens or hundreds of millions of views, then YouTube AdSense is going to be great for you. But if you're more like us and you have a niche audience, like we make our money through sponsorships. But sponsorships in our industry now, I think, are becoming pretty significant, largely because 50% of our viewership on our channel comes from connected TVs. And YouTube has been dominating the living room, right?
And people are now watching in the living room. That's it. That is the big distinction that I think people have not totally caught up on yet.
More people watch YouTube in their living room than watch Disney or Netflix or Hulu, right? And so YouTube is the most watched app on connected TVs. And if we look at some of our friends, like Mark Rober, in the past,
who's been on
past 6 videos, he has averaged 24 million views a video, and his average runtime on his videos are 21 minutes. So if we're just taking a step back, we're all watching TV now, right? There's a great quote from Barry Diller where he says, TV is TV no matter what pipe brings it forward. And I think that's the moment we're at, which means now that, you look at our event tomorrow, we have sponsors like Microsoft, Adobe, Spotify, Google. We've worked with brands like Visa this year. We have brands that haven't traditionally been in our industry that are now stepping in.
When you think about the YouTube numbers, we all talk about this all the time, or the numbers on X, or the numbers on Instagram. I posted something the other day, has, 400,000 views, but 400,000 views, if you actually look at the chart, you'll see that, after the first, 9 seconds, 50% of the views aren't really there.
And 2 likes. That was the messed up.
That was the sad part.
And so,
How you doing? You recovering from that?
so the question though becomes how much you think the numbers that we're seeing on the screen are actually valuable numbers. I keep thinking about it in the context of podcasts that are going on for 4 hours, and I'm thinking, I don't do anything for 4 hours these days.
Yeah.
So are the advertisers who are capturing the ad in our, even after the first half hour, is that actually really getting listened to?
For us, one of the key metrics that we track is watch time, right? So for our episodes, people are watching upwards of 50 minutes, right? So we track that, and that's super important to us, and it's important to advertisers. And for us, that's also why YouTube sort of sits alone against the other platforms, because you do have audiences who are sitting down on the couch ready to watch for long periods of time.
We've been talking all morning about this Google antitrust case, and I'm curious. YouTube is owned by Google. Do you worry at all that it is the central and only real platform that people can really make a living? I mean, I don't know. Maybe you think Substack can become YouTube, but is there anybody else out there that you think even has a shot to get to this kind of place that you talk about?
Yeah, I think we have creator friends who make money across all platforms, right? We have a lot of friends who are solely making money through Instagram or solely making money through a newsletter. I think YouTube's different because it's long form. And long form, like the fact that independent creators can make their own episodes of what used to be reserved for television or Netflix, that has a different scale of monetization. It always will. Short form content has, a lot of opportunity for monetization, especially because that's where most e-commerce and CPG advertising is. But long form creates a level of depth within an audience that's unparalleled. So even if, let's say, 10% of an audience is still watching at the end of a video, and that's when maybe the final ad runs, that 10% is extremely engaged, and that matters. So I think it's a filter for that.
It also depends where your audience is. You mentioned the published press, which is our newsletter. That's a business-focused audience. They're in their emails.
Right.
They're not necessarily watching our YouTube videos. So you also have to think about where is your audience, which platform. They may be on Instagram and not on YouTube.
Okay, final question because we got to run.
Yeah.
Because there's a lot of folks you got a question?
Fine, after yours.
Okay, just people we have a lot of folks who are buying advertising on these different platforms. What do you think is actually the most effective right now?
I think working with a creator directly is extremely effective. I think if you do both, like run the media campaign across YouTube, but then work directly with the creator. We have gone from, okay, maybe you think of us classically as an influencer. Okay, we're making bespoke content about our personal life. To now, like, we're making regular formats, and we know a lot about attention, and we know a lot about how to build trust online. So I would say working directly with a creator is going to be the most effective way to spend.
No, it's just, so you made it, Samir, what you wanted to do.
Yeah.
Obviously. But is it doing it for you? Are you still thinking rom-coms or action hero or something like that? Or this is...
If Hollywood calls, he's picking up.
I'm here.
And people see you so that you don't need to walk into a drugstore like Lana Turner.
It's very surreal. I think being on the eve of our big event here in New York, the fact that people have flown in from Asia, the Middle East, from all over the world because of content that
Bigger than a Hollywood star.
Bigger than us, I know.
It's truly surreal. It's unbelievable to walk down the street in Mumbai and have someone want to take a picture. It's crazy.
Right.
But the thing that I think is the best is that we get to make stuff on our own terms. If we're excited about a piece of content, if we think it's ready to go out, it goes out. There's nothing else. There's nothing.
You don't do anything for 4 hours? Nothing. I got something.
You do a show called 3 Hours.
No, I got something for you. I bought it off of TV. I did. On those ads. I've got something for you.
Okay, you tell me about that later.
No, I'm gonna bring you one.
Thank you so
Thanks
much.
for having us.
Bring you one.
Great. Congratulations and good luck on the event.
Thank you. See you there.
Coming up, Apple reportedly losing more of its top AI talent to competitors. We'll bring you details on that story after the break.
pitch.com.
Dollar Tree out with quarterly results, earnings of 77 cents a share, which included a 20-cent positive impact from the timing of inventory mark-on and tariffs, was much better than the 41 cents the street had been expecting. That's on revenue of $4.57 billion. That is also ahead of expectations. Dollar Tree's raising its full-year guidance for earnings, sales, and same-store sales, and yet that stock is down by about 2.3% this morning. We will continue to keep an eye on that.
Got more AI brain drain at Apple. CNBC confirming the company's lead AI researcher for robotics has left the company for Meta Platforms. This after a big heated battle for a lot of talent in the Valley. Meta Platforms has been also, stealing, but they would say in a good way, trying to steal talent. Apple declined to comment on the move. It was first reported by Bloomberg, which says that 3 other Apple researchers are leaving the company's large language models team for positions at OpenAI and Anthropic. The Apple team helped start up the company's Apple Intelligence technology last year. When we come back, a lot more on Squawk Box. The CEO of Mexico's stock exchange is going to join us. We're going to talk about investor interest in the country amid tariff uncertainty. Stay tuned. You're watching Squawk Box on CNBC.
All right, Macy's just reporting its numbers. Courtney Reagan has the details. Court, what are you seeing?
Yeah, Becky, I mean, much better than expected, frankly, a quarter. And Macy's is pointing to its overall strategy as the driver. So earnings coming in at 41 cents. That beats consensus for 18 cents on stronger than expected revenues of 4.81 billion versus 4.76 billion. Now, the retailer also increasing its guidance, but with caution, and now expecting full year earnings in a range of $1.70 to $2.05. That was from $1.60 to $2, so an increase on both ends. On net sales of 21.15 billion to 21.45 billion, that also is an increase from 21 to 21.4 billion. Total comparable sales, so whole business all in, grew 1.9%. That's the best performance in 12 quarters. Now, the Macy's business itself, those comps grew 1.2%, Bloomingdale's up 5.7%, and Bluemercury up 1.2%. I spoke briefly with CEO Tony Spring, who said, I look at it as the beginning point of the impact of the bold new chapter. That's the strategy. Momentum has a beginning, and this is that opportunity. And then when it comes to guidance, while the retailer did raise its full year earnings, it is still below the initial guidance it had given for the year back in March. And when I asked Spring about that, he told me it is the impact of tariffs. Quote, tariffs are real, it's a component of the business, but we have tailwinds, a better customer experience. That's a newer assortment, less redundancy on our assortment, and now a business that's growing across all three nameplates in our portfolio, and a healthy inventory position. Inventories for the company, if you'll notice in the release, a little bit down, in fact. And remember, they're going through closing stores and they're trying to run through some of the spring merchandise to make sure that 50% of what we'll see during the holiday season is going to be new. That is what Spring says the customer is really responding to, the fashion and the newness. Maybe the basics and the active, that's an area of the business that if he had to point to softness, he would say that's where it is. Back over to you.
Okay, Court, thank you very much. And by the way, keeping an eye on that stock, it's now up by about 4.9%. We saw it even above 7% in the knee-jerk reaction. We'll continue to keep an eye on that stock as well. And a programming note for you, don't miss an interview with the CEO of Macy's tonight on Mad Money. That is at 6 p.m. Eastern Time. Mexico's benchmark index is up about 20% this year, just year to date. That is double the gains of the S&P 500. It outflanks what we've seen in Canadian stock markets as well. And joining us right now to talk about the Mexican market, the geopolitical backdrop, is Jorge Alegria. He is the CEO of the Mexican Stock Exchange. Jorge, thank you for coming in today. It's really great to see you.
Becky, it's my privilege to be here. Thank you very much. Good morning.
You know, it's shocking to think that the Mexican stock market is up by 20% when you think about the tariffs and the change in trade policies. What's happening?
Well, yes, and also if you consider the movement of the Mexican Stock Exchange Index, and then the currency is also strong, so that gives close to 30% return in dollar terms. So it's doing well. I think what we are seeing in the Mexican market is we are benefiting from a reallocation of funds from developed markets to emerging markets.
Meaning that there are funds that are coming your way that would have gone where before? Where do you think you're stealing market share from, essentially?
In basically the U.S. and developed markets.
Yeah.
So they're moving to emerging markets.
Why?
Diversification. And I think also valuation-wise, the emerging markets are offering also attractive valuations for global investors now.
Yeah, JP Morgan and others have said 2026 is expected to be a very strong year for the Mexican stock market as well.
Yes.
What are the challenges you face? You're looking at trying to make sure you can bring more and more businesses onto listing on the Mexican Stock Exchange. What do you run up against?
Well, we are investing a lot in technology to keep up with what we are seeing in other markets in terms of development. So we are rebuilding and refurbishing all the post-trade operations for the exchange to be ready to cope to international flows, and also the technology in terms of speed, provide access to international players in the same way they access the US markets or European markets. They need to access the Mexican market with the same capacity, the same speed, the same technology, basically. So this is where we are putting a lot of attention and money.
You were here yesterday at the NASDAQ ringing the opening bell. Does the NASDAQ see you as a competitor? Are you working with them on anything? Why would they allow you to do that?
It's an interesting thing because, yes, In general, we see Nasdaq as an ally. They provide us with technology for the post trade. We are also upgrading our derivatives platform with Nasdaq technology, and we have this alliance with them. Also, we have a strong business relationship with CME Group. We just licensed our benchmark index, the Mexican S&P IPC index, to be traded as a future in CME as well. So we in the Mexican market, we need to establish this kind of alliances with international players to attract foreign investment into the Mexican market as well.
How big of a challenge has that been over time? You're here in New York this week, also with a lot of meetings. What are the goals of those meetings?
This is the so-called Mexican Investment Week. So yesterday we had private equity, full day of meetings. Private equity in Mexico has been thriving as well. And what we see is, well, all these huge investments that have been made for the last 10 years or so, the best way out for some of them is the Mexican listed market. So this is like the playbook, right? But we need that to happen in
They can list on the Mexican Stock Exchange rather than here. Why would they do that?
The Mexican companies, because they are in Mexico, their customer base is in Mexico, so it's good for them also to have the financial visibility in Mexico. And there's nothing wrong to do a dual list. So what we have done in a very successful way is a Mexican company listing in the U.S. market and also in Mexico, and that gives visibility in both markets and take advantage of Mexico open economy, free flows. So that's I think the best.
I just have a question since you're talking free flows.
Free flows.
A lot of free flows.
Yeah, but new highs in that
Right.
market.
But how you think about tariffs? Hey, look, BYD sells in Mexico, right?
Yep, pretty much.
Do you believe 10 years from now that Mexico will even make cars? If BYD can sell into Mexico, I assume at car prices that are competitive, if not more than competitive, what that's going to do to everybody else in the marketplace. I mean, that's sort of the idea here in the United States, is we're putting tariffs on things because we think we actually can't compete, to be honest with you.
I think we are starting to see, we are in an early stage of this adjustment in flows, right? Between the Mexican economy and the rest of the world. So still, if you see in terms of trade, I mean, the Mexican trade activity with the U.S. is huge. It will be continued with the amount of infrastructure, especially in the car industry in Mexico, is huge, right? That will stay there for many years, and it's still growing, right?
Jorge, I want to thank you very much for coming in.
My pleasure. Thank you very much for having me.
You're welcome. Thank you.
Okay. It is just after 7 a.m. on the East Coast. You're watching Squawk Box right here on CNBC. I'm Andrew Ossorkin along with Joe Kernan and Becky Cook. Take a look at U.S. equity futures at this hour. I got some green on the screen, about 16 points higher on the Dow, 34 points higher on the S&P 500, 180 points higher on the NASDAQ. We'll explain why you're seeing that movement on the NASDAQ in just a moment. Take a look at Treasury yields right now. The 10-year and the 2-year, 10-year at 4.2, the 2-year sitting at 3.6. Among our big stories, which is affecting the NASDAQ, the court filing, this part's not actually affecting the NASDAQ, but an attorney for Fed Governor Lisa Cook saying she never committed mortgage fraud and said statements that she made on mortgage applications don't give President Trump legal cause to fire her. FHFA Director Bill Pulte planning to hold a press conference tomorrow morning with what he now says is new information connected to Cook's mortgages. She did not get into the details of that defense, but this is the first real full-throated defense of sorts from her about the actual merits of the allegations. Meantime, Treasury Secretary Scott Bessent is going to begin interviewing candidates this Friday to become the next Federal Reserve Chair. According to the Wall Street Journal, we're going to watch a lot of those names, including this one. We're going to hear from one of those potential candidates. That's at 8:30 a.m. this morning. Fed Governor Christopher Waller, who is on that very list. President Trump says he's going to ask the Supreme Court for an expedited ruling to overturn an appeals court decision that found most of his tariffs on other countries are illegal. That court delayed its decision from taking effect until mid-October to allow the White House time to ask the Supreme Court to take the case.
And Google shares jumping after a U.S. judge ruled the tech giant will not have to spin off its Chrome browser. Joining us now, Jonathan Cantor, former Assistant Attorney General, now a CNBC contributor and distinguished law professor at Washington University in St. Louis. Good to see you, Jonathan. And we talked about this, and I wondered what your comments would be, and I don't know if you saw our discussion. I think maybe I'll just let you talk and then go into some of the nuances. I made the case that by the time the government's able to do something, a lot of times the markets have moved, and it seems less consequential because things seem to rectify themselves. But then we said AT&T might still be Ma Bell if you don't actually make the effort. What do you say in this case? Was it worth it?
Sure. Well, yes, it was worth it. I mean, the government secured a significant victory that's historic in terms of the precedent. I think the court here had an opportunity to do something bold and transformative. Instead, it did something nuanced and watered down. And so I think there was a real missed opportunity to really change the market in a significant way. That having been said, of course it was worth it. And I think your point about Ma Bell is right. I think you can make the same point about US v. Microsoft. The remedy came at the time when the internet was transforming how we use computers. And there was an argument that a remedy wasn't necessary there, and there was an argument that the case wasn't necessary there because of all that transformation. There's a strong argument that we wouldn't have Google today if we didn't have the US v. Microsoft case, because that allowed companies like Google and its browser Chrome and its search engine to get access to consumers regardless of which machine they were using, including Windows, which was at the time the dominant distribution mechanism, and it made sure that companies like Google had the ability to transform how people engage on the internet. So I think, yes, it was worth it, but I do think that this is unfortunate in terms of being a weaker remedy than it could have been, and the court really missed a golden opportunity to transform and really open up competition so that this new generation of AI competitors have the opportunity to compete in a full-throated, in a fully impactful competitive fashion.
Because I think the government feels like it proved its case in terms of something that needed to happen. So the remedy just, how would you characterize it? Somewhat toothless? Disappointing, I think you said.
Yeah, it is disappointing. I think the court really had the opportunity to do something transformative here. And the decision that the court issued a number of months ago was quite bold, and it gave the court a lot of discretion to impose a remedy that didn't give Google the benefit of the doubt. And I think the part that perhaps gives me the most heartburn is the court kicked the can down the road in terms of the issue about whether Google can continue paying companies like Apple billions of dollars a year for distribution. It said that Google could, but if it turns out the remedy doesn't work, then the court is willing to revisit it and then revise the remedy. And I think that for a company that has, like Google, that has been found to violate the antitrust laws, something more definitive would have been far more preferable in this instance.
Jonathan, can you explain, though, and this is the thing I've been pondering all morning, this distinction between you can't pay for exclusivity, but you can pay to be the default search on a phone, and what that ultimately means. So if you're Apple selling them this access to be the default, does that give Apple an opportunity to say, hey, we saw this court's decision, we're going to make it the default, but we're also going to add 2 or 3 other options? Or does it mean that nothing changes? Does Google still pay for this same amount of money? How do you see that playing out?
Andrew, I think the reason you're confused is because it's as clear as mud, right? So the court on one hand says that Google can't pay for exclusivity, meaning that, for example, all devices that Apple ships, Google can't mandate that they all ship with the Google default. But the problem is the devil's going to be in the details. And the court asked both sides to go back and propose a new remedy that captures what the court is instructing in its opinion. And I'm not sure they're going to know how to do that, because, for example, what if Google pays a price that is equivalent to exclusivity and makes it so that there is no incentive for Apple or anyone else to use any other product? The court is relying on the fact that enough VC money will be behind the OpenAIs and the Perplexities and Anthropics of the world so that they could actually compete on price. But again, I think the decision here is confusing, and I expect additional rounds of litigation to figure out exactly how to implement the remedy.
Jonathan, we're watching Apple shares up 4%, probably on this news. Do you think investors are rushing into things and maybe they should think twice before assuming that these payments to Apple can continue?
Well, I think the court has made it clear in its opinion that Apple can continue getting billions of dollars from the likes of Google, and at a minimum, it'll be able to use Google as a stalking horse to drive up the price of distribution for Perplexity, Anthropic, and OpenAI as a alternative. So I think the court was clear that some form of payments will continue, and that probably is why you're seeing shares of Apple go up the way they are. I think that's unfortunate, and I think a missed opportunity for the court. But how it pays for and what it pays for, though, is still unclear, at least in my mind, and I think going to be litigated going forward.
Okay, all right, Jonathan, thanks. We were interested in where you stood. Not totally surprised, but I think AT&T probably is a good. If you don't try, nothing ever is going to happen. You can't really just say it wasn't worth it.
You miss 100% of the shots you never take.
Exactly. How many times did Babe Ruth strike out?
Right.
A lot, I think. All right, see you later.
All right, before we head to a break, let's take a look at two earnings movers this morning. Macy's shares are moving even higher after the retailer beat earnings estimates and raised its full-year guidance. That stock is now up by 10.5%. Now, Dollar Tree had a lot of good news too, at least it looked on first blush. They beat estimates and raised its full-year forecast. But the guidance for the current quarter is disappointing the street, and you can see that stock is now down by 7.8%.
Coming up, we're going to talk about opening access to private markets with the co-CEO of Blue Owl. We're going to do that next. And later, the CEO of eBay is going to join us as the company celebrates its 30th anniversary. Squawk Box, come right back after this.
Welcome back to Squawk Box. Joining us right now with a look at the interest rate environment, President Trump's executive order aiming to broaden access to private markets and retirement plans, and so much more. We got a lot to talk to with this gentleman, Mark Lipschitz-Azil, your co-CEO of Blue Owl, oversees 200. I can't even believe this number now. This is crazy. We've known you a long time now.
Yeah.
$284 billion in assets under management, sir.
Great to be here.
Congratulations on that.
Thank you. Well, it's very nice of you. Appreciate it.
Let's talk. Well, let's do interest rates real quick, and then I want to get to sort of the larger private markets situation.
Yeah.
I think we are going through almost a generational change in the financial market potentially. When you think about where the interest rates are today, you think about the Lisa Cook situation, you think about the tariff situation. Are you surprised that this is where we are?
So, I'm thankful to be in the business we're in, where we do, as you know, products that are intended to be durable to whatever rate path we're on. So, at some level, this sort of, let me call it, generally speaking, higher for longer, I'm not surprised about at all. You know, we've seen this, and we talked about this the last time we were together, when we just look at the fundamental, number one, just cost structure for American businesses in general. Well, certainly inflation is well off its peak. It's not gone. And number two, like, what's a normal cost of capital? Part of this is relative to what? You know, we had this long distorted period of time where rates were zero. That's not normal. Having, you know, treasury rates in the 4-something range is rather normal.
But given everything you know from your own portfolio in terms of how businesses are doing, do you look and say, Jay Powell's too late and he really needs to cut interest rates, or do you say, I don't know, I want to wait it out?
Business is good in our portfolio.
Okay.
The reality is we have about 400 companies now that we lend capital to, almost all here in the U.S., so a reasonable indicator, and business is good. I mean, the last quarter's performance, on average, we have businesses that were performing basically double-digit growth.
And so does that suggest, what does that suggest?
Well, it suggests to me the economy is sound and solid. So
you don't need to go lower.
I'm thankful that I don't have to forecast the rate, as I said.
Right.
So I don't know the right path. I have a lot of confidence in the Fed, and I have a lot of confidence that we'll get there. But I don't know if it needs to go lower sooner. I do say this with confidence. We're in a world where we're going to be in I think higher rates overall for longer, number one, and two, there's a lot of exogenous variables that make it awfully hard to say the answer to.
Does this whole Fed independence idea concern you, and do you think it will appear in rates at some point or in the market?
Look, at the end of the
moment, it does not, obviously.
At the end of the day, I think we have incredibly durable markets, and I have a lot of confidence in those markets. I really do. And we have a really durable economy at the moment. And
so you think all of this other stuff is noise to you? How do you?
I don't like to minimize the significance of anything when we're talking about the Fed, the economy. But at the end of the day, I do believe we will be fine, and we will endure through. And in the grand scheme of things, yes, a lot of this is noise as long as we continue to have a sound economy underneath it.
Mark, if you did think that the independence of the Fed was in jeopardy, that might actually appear on your radar screen at some point. Let me just say about Lisa Cook, because I know how we've covered it here. If she had 3 different properties, all listed as primary residences, and renting all of them out, if that actually turns out to be true, but what's alleged, would removing her trouble you in terms of this administration trying to pressure the Fed? Is that something that you would say, wow, I don't like this and I'm worried about Fed independence?
Yeah, we're way out of my depth now. I'm an expert in lending.
You're the person, you got 280
data centers for leases, data centers for companies.
You would have thought the world was ending based on how certain places have covered this. So you're not ready to sell $284 billion worth of treasuries because of angst about this situation then? That you haven't done one thing differently because of this?
We're here to provide capital.
That's what I mean. You're the one that's one of the people controlling where bond prices go.
We are certainly comfortable continuing to be a provider of capital. In fact, right now is a good time for us to provide our long-term.
So this is part of the noise that we've been talking about noise a lot lately, and sometimes you have to ignore the noise to make your investment decisions, I guess.
We spend a lot of time looking for the signal. That is for sure. And there are some wonderful things in the marketplace for us to fund. I mean, there are.
Let me ask you a different question, which is at the beginning of this, I said there's almost a generational change happening in the world of
financials, if you will. This idea, and it comes from part of this new Trump bill, to make private investments more accessible to the public, into possibly 401ks. It's possible we're going to see a flood of these sort of semi-liquid instruments and other kinds of things in the marketplace. Is this a good thing? Is this a dangerous thing? What is this to you?
You know, well phrased, which is to say there's this generational change, and that I think is real, and that is good. Will there be a flood? I hope not. There should not be. You know, this is about walking before you're running. It's about creating an opportunity for retirees to participate selectively in private investments. There are clearly advantages to private investments. You know, if you look, again, we're in a mundane side of the private investment world, right? We do things like direct lending. But in direct lending, the data over any period of time is in. Look over a year, 5 years, 10 years, 20 years, rough justice. You have private lending performing about twice as well as the liquid alternative, about 5% of the liquid market, not 10% of the private
Here's the
market.
issue, or the concern that I have in terms of how you make it right. One is the disclosure that comes from a private institution is obviously not nearly as robust as what you get from a public institution. That allows potentially for fraud or other things. I'm not suggesting that's going to happen from you, but from others you just don't know, right? Two, you have this semi-liquid, sometimes, depending on what the vehicle is, these semi-liquid vehicles, which in theory work when they work, but in theory actually don't work when they don't work. Like, that's actually part of the theory, which is they're built so that, you know, firms can put up gates effectively, and that creates its own problem on the other end. And so, yes, if you're a retiree, and look, if you have 20, 30 years, maybe this is a fabulous way to do it. The question is, if you're hitting 65 years old and all of a sudden you need that money, now I'm looking very far out, and in that moment you can't get the money, well, that's a whole other problem.
This is about doing it right, and I agree with you. I'm not an advocate for all alts all the time, you know, let's sort of, you know, spam the waterfront. I think what we ought to be doing, though, is making prudent options available for sure, because today we have this odd island around 401ks. Remember, other retirees are benefiting from direct lending, from private real assets or GP stakes, because they're part of defined benefit plans. So we have this island we've created, and I genuinely say it's not fair to those retirees. Now, they do need to be well advised. It should be well regulated. I'm sure the DLL will do it.
But let me throw one other thing into the mix right now, and it's a sort of current issue. Most private equity firms right now are holding onto a portfolio that they can't exit from. And the only exits that are really happening are these sort of what I call hot potato deals, where everyone's selling their pieces of their portfolio to each other, frankly, and there's all sorts of marking games, which is another piece of this problem in terms of disclosure. But nonetheless, my concern is you have a flood of retail capital that comes into this space, and this becomes the opportunity set for all of these exits, and who is holding the bag? The retail folks.
So we're not in private equities, you know. My strong view is let's start in the places that are lower volatility. Let's start in the places that are safer. We don't have that issue in private credit. We don't have that in real assets. Let's do data centers where Microsoft is the tenant. I mean, there's a lot of very low volatility, low risk ways to participate. Let's work with great, our partner is Voya. Incredibly prudent firm. These are people that take care of their 10 million clients. So it has to be done right. Again, you will not hear me say this is about let's just go for it all the way in. Let's in fact start with some really prudent products. Let's do this smart, let's do it well, and that will be good for retirees, and that will be good for our industry.
Okay, Mark, it's nice to see you. Thank you, appreciate it.
All right, coming up, conservative commentator Ben Shapiro is going to join us to talk about President Trump's industrial policy, among others, Ben's new book, and a lot more. Squawk Box will be right back.
Time now for today's Aflac trivia question. How many regional Federal Reserve banks are there in the United States? The answer when Squawk Box returns. The answer to today's AFLAC trivia question. How many regional Federal Reserve banks are there in the United States? The answer, 12.
Well, vintage.
Local governments have been tapping into a new source of revenue, raising taxes on the vacation homes of the wealthy. Robert Frank has that story. Good morning, Robert.
Tough group to feel sorry for, but this is a big source of revenue right now. From Rhode Island and Montana to Cape Cod and even LA, a growing number of local governments are taxing the real estate of the wealthy to raise revenue. So let's take Rhode Island. They have a new property tax on non-primary residences valued at $1 million or more. That was just approved by the governor. It adds an extra $5 for every $1,000 in assessed value. It's also known as the Taylor Swift tax, since Taylor bought an oceanfront estate back in Watch Hill back in 2013. Her property is currently assessed at $28 million with property taxes of $201,000 a year. So the new tax would add another $136,000, bringing her total annual property tax bill on that vacation home to $337,000. Montana also passing a tax on second homes and investment properties that's going to take effect next year. It would raise property taxes 68% for vacation homes, but lower taxes for full-time residents. And in Cape Cod, the town of Falmouth considering a special transfer tax on homes sold for over $2 million. Now, similar taxes, they've had kind of mixed success when you look at what's happened with revenues. LA's new mansion tax on sales of over $5 million, that was expected to raise up to $1 billion a year. So far, it has raised less than half that. But look, a lot of this is aimed at these two housing markets that we have right now, where a lot of Americans simply can't afford a home. And the top end of the market, the luxury market, the vacation home market, has been booming because of all cash buyers at the very top. So a lot of this money in Rhode Island and Montana is either going to property tax relief for full-time residents, or in Rhode Island's case, it will go toward housing affordability programs. So this is number one, states grappling with Washington, D.C. tax cuts, but also with this sort of voter resentment and anger over what's happening in the housing market.
Well, and there's different ways you can go at it. In Europe, I think in Spain in particular, they have now come up with some new laws that say you're not going to be able to rent out houses, because there have been all these people who've gone to resort towns, bought houses, and plan to use them as an Airbnb. And that creates all kinds of problems with affordability too. So I guess this is the alternative.
It does, and Montana's grappling with that because a lot of the local people are bought those Airbnb properties, and that's their source of income. Right. So these are sort of mom and pop small businesses that have used property as source of income. They're losing that. So what they've done in Montana is say, look, we're going to tax, unless it's a long-term lease on a rental property. If you're doing short-term leases, we're going to tax those like a second home.
It makes sense when you think about the hotel taxes that they
exactly.
have to pay. So
whereas the Airbnbs don't.
Why should you get to do the same thing as a hotel and not have to pay?
That's right. But we're going to see, I think, and you're already seeing legislatures talk about that. We may even see it in New York, depending what happens with the mayoral race. Efforts, we had the pied-à-terre tax proposal in New York that was killed a few years ago. But I could see in a Mamdani administration that certainly could come back.
They're never even worth anything if they're rent controlled, so your taxes are going to be 10% back.
Yeah, because that always works so well.
Yeah, probably does that.
Thanks, Robert.
But it never hurts supply.
Okay, coming up in the next hour, he is on the list, folks. If you want to know who could be the next chair of the Fed, this guy could be it. We'll see. Fed Governor Christopher Waller is going to join us on the expectations for September rate cut and the pressure from President Trump. As we head to a break, check out oil prices. Reuters reporting that OPEC Plus is now going to consider another production hike at its meeting this weekend. Squawk Box coming right back after this.
closes.
Welcome back to Squawk Box. Check out shares of Campbell's earnings of 62 cents a share, coming in 6 cents better than estimates. Revenue of $2.3 billion, roughly in line with expectations. For the full year, Campbell sees earnings coming in below the street's expectations. That's pressured by weak demand for snacks and ready-to-eat meals, as well as higher costs from tariffs. But the company said it is raising its cost savings target by 50% by the end of 2028 and plans to use the savings to help offset tariff headwinds. Joe?
Coming up, conservative commentator Ben Shapiro is going to join us next to cover a wide range of topics. And later, the CEO of eBay will join us on the Squawk Set. Did he say it's their 30-year anniversary? How weird is that?
Yeah, they've got a 30, we've got a
We've got a 30. Amazing. Not necessarily related. Squawk Box.
NBC.
We're on, Vince. Yesterday, President Trump said he would ask the Supreme Court for an expedited ruling to overturn an appeals court decision that found most of his tariffs are illegal. Joining us now is Ben Shapiro, co-founder of the Daily Wire. His latest book, Lions and Scavengers, The True Story of America and Her Critics, is out. We could have started rolling the cameras. We're almost ready to do that.
I think we should start a YouTube show during the commercial break.
Where we
No
just talk
joke.
about-
That's what I
That's the name of the show, During the Break.
Yeah, during the break.
So Ben, we're going to
Bingo. Look.
You classic conservative. We're going to talk about all these things. We'll just say before we started, we were kind of talking about how President Trump, there are certain things that classic conservatives probably like and certain things that rub classic conservatives the wrong way. Someone here, I won't mention any names, might have made the point that the counterfactual would have been Kamala Harris and Tim Walz.
Yeah.
So as bad as it gets for classic conservatives, the counterfactual, to some people, and again, I'm not going to mention any names, to some people, it was quite frightening at what the alternative would have been. I'm not mentioning any names. And it was a binary election.
Yes, I mean, I think that is always the math that conservatives are trying to do is, are you grading Trump against what would have been if he had not been president, which obviously would have been much, much worse from a conservative perspective, or are you grading Trump against what you wish he were, which would be like, say, fewer tariffs, less command and control economics, less taking stakes in companies like Intel. So, I think that it's fair to critique President Trump on all those things, and also to keep in mind that the alternative would have been massive taxation, massive overregulation, a shutdown of the economy in many ways.
Can you still say, and I said this, can you still say don't sacrifice the good for the perfect?
I mean, I think always. I think
That's
always.
what we have to say. And I'll just say one thing about Intel, and this is where I finally found some solace. The CHIPS Act gave them that money with the craziest conditions attached to it. Perfect democratic, the way they do industrial policy. At least at this point, isn't it better to get a 10% stake for that, giving them whatever it was, $9 billion, and saying, you gotta have child care and DEI, you gotta, pay union wages? Isn't this less bad? Can't you say, okay, it's all right?
I mean, I think that it is less bad, and then the best would have been rescission, right? I mean, the best would have been if Trump actually wanted to cut, he would actually try to rescind a lot of that spending in the way that he has done.
Just don't even give it to him at all.
Well, yeah, I mean, because now you have the government. If Intel continues
Was that possible, or was it possible to just?
I mean, they're trying rescission on a bunch of other stuff. So theoretically, they could have tried to cut off the funding and go to Congress to try and actually renege on some of that funding.
How about the NVIDIA? You give us a cut and you can do whatever you want.
I mean, that I think has less to do with the government taking in revenue from NVIDIA, and that's a really open question as to whether NVIDIA should be selling H20s in China. I mean, that's a real national security issue. That really is, and I think that if we're trying to box in China, then there are a lot of things that I wish the Trump administration were doing to further box in China, including, by the way, lowering tariffs on India, South Korea, Japan.
So do you think it's a mistake then to allow these chips to be sold at all, or do you think that there's the VIG, if you will, has anything to do with this? I mean, the thing I've argued
Chinese
is
don't even want the H20s anymore.
right. The thing I've argued is if we want to allow these chips, I get the argument of trying to get these chips to them in the idea that it's going to maybe push out competition. If you think we can win competitively, that's to me a good idea, potentially.
Maybe. I mean, my friend Mike Gallagher over at Palantir has made the point that would we sell the components for missiles to the Soviets in the middle of the Cold War just to make sure that they're on our platform? If the idea is that AI is an actual national security threat, you don't want to be handing the most sophisticated chips or anything even remotely like the most sophisticated chips to a geopolitical opponent of the United States.
I just think of the 5G situation where basically we got pushed out and Huawei really, put their 5G technology in Africa and all sorts of places around the world.
I'm not saying we shouldn't sell H20s to Africa as much as I don't think Africa is really, looking for H20s
right now. Yes.
Well, and how much of it becomes?
They're looking for H2O.
Well, how much of it becomes issues where they in turn eventually pass it on to the Chinese?
If we worry about the Chinese stealing our IP, we may as well worry about, the 600,000 Chinese students who are coming into our universities. I mean, that's actually a major issue for conservatives as well. And again, this comes back to, I think, what you were saying earlier. Are we grading Trump against what would have been, in which case, much better than what would have been, or are we grading him against what I would love to see? And, I think that we can do both. I think we can be honest about saying it would have been way worse if Kamala Harris were president. And we can also say, I wish that the policy on some of these matters were better.
Can I ask, though, you point out the idea of rescission going back to Congress to get some of these things done. It feels like the Trump administration is pushing boundaries and knowing a lot of this is going to get litigated through the courts.
Unfortunately, that's been true since the Obama administration, right?
But why not just go back? At this point, you've got control of the Senate. Go back to the Senate and ask for the permission to be able to do these tariffs rather than to have businesses wait while this whole thing gets drawn through. Or is the entire intent to say, yes, we want to litigate this, we want to see what the Supreme Court says?
I think that the president really does want the tariffs. I think that he believes that he's going to bring manufacturing back on shore and that he's going to rejigger balance of trade and all this sort of stuff. I think that the question of the Senate is really one of the filibuster. And the proposal that my friend Jeremy Boring has made, and I think that it's right, is that actually the Senate Majority Leader should go to the Democrats in the Senate and say, you know what, you like the filibuster when we're in power, and we like the filibuster when you're in power. How about a constitutional amendment to enshrine the filibuster, and it gets passed within the next 12 months when we nuke it? Right? Because it seems to me that if you want to set the rules going forward, then set the rules going forward. But I think what everyone is fearful of, on both the right and the left, is that the side I don't like is going to nuke the filibuster and then do whatever the hell they want the minute they gain control of the Senate.
I got a tariff question for you, which is how you think about tariffs, how you think about national security in the context of tariffs. We have an automobile industry that we talk about all the time, that I think if we had no tariffs, we would be effectively taken over by BYD and the Chinese car companies. I don't know if you think that's, but I think people would be able to buy cars at much.
I'm not buying a BYD.
No, you'd be able to buy much cheaper prices. You'd have real competition in the market, and eventually, I think it would be probably very bad for Detroit. By the way, Elon Musk has said that we would be slaughtered.
And Germany.
And by the way, I think it would hurt VW too. I mean, it would hurt all of these.
I wasn't talking about VW.
Oh, okay. It would hurt all of these. It would hurt all of these companies. And so the question is there a national security issue to making sure that we manufacture cars in this country? By the way, we don't manufacture even, for the most part, refrigerators in this country. You would think that's a national security issue if you thought, you need to have all this stuff made here.
Well, I think that the national security implications are less to do with the car industry than to do with the kind of technology that China is loading up into the BYDs. I mean, this is a real national security issue because China does, in fact, gather data using every single tool at its disposal on all of their tools, which is why I think the Trump administration should shut down TikTok. Okay, Congress passed a law. TikTok needs to be shut down. This kind of playing games where you push off the limit on shutting down TikTok, which is a gigantic Chinese misinformation operation.
Where are the conservative Republicans in Congress and the Senate, screaming from the rooftops about this?
Well, I mean, I think there are some, but I mean, listen, the president of your own party is a very difficult person to stand up to on some of these matters, and I think that there also is the hope for a lot of Republicans, which I think is largely justified, that President Trump, everyone always thinks that the President Trump has no strategy to it. That's not right. President Trump has heterodox ideas, and then he's responsive to reality. So what he tends to do is push a limit, and then when the limit pushes back, then he accepts it and he adjusts.
There's an enemy of my enemy going on here. That's what I was going to ask you. We're all big boys and girls in this country, but over the weekend, everybody that was circulating this Trump dead was not just circulating; they were hoping that he was dead. This is, we're all big boys and girls. Okay, we get it. Is social media making things worse, and is there any way back from this point where we are?
I mean, there's no question that social media is making things worse. I mean, honestly, the only way back is for people to get out and touch some grass. Right? People actually need to go out and talk with actual human beings.
Touch some or smoke some?
No, not smoke.
Oh,
I'm very much against the marijuana. Touch some grass, get out there, and actually meet some actual human beings. It turns out that the people that you go to church with are a much better proxy for what the rest of humanity looks like than the random anons that you're dealing with on X.
Or elsewhere, but I don't know, the stuff I see is beyond the pale. You think Trump would win an election if it was held today?
Yes. Yes.
You would never know that, would you, from the way things are presented to us?
Again, I think that there's only one party that's more unpopular than the Republican Party, and it's the Democratic Party by leaps and bounds.
Well, let me ask you this then. So, at the end of this term, assuming you think that there is an end to the term,
there's an end to the term.
See,
Let's not be silly.
that right there.
No.
That right there.
He sells hats.
By the way,
People don't know.
People think
Gavin Newsom doesn't even believe that. All the same people who are like, it's an authoritarian tyranny, we're never going to have another election. I noticed you're gearing up for another election, Gavin Newsom.
So my question then is, do you see either J.D. Vance or the cult of Trump right now, where you have a president who has real control over the whole country in a remarkable way, do you see that as a one-off situation, or do you think that, and this goes to your book, do you think that politics in America has fundamentally changed, and that whether it's a Republican or Democrat in office in the future, there will always be pushing the boundaries, doing a lot of the things you're talking about?
Well, I mean, I think the centralization of power in the executive branch, which has been an ongoing project for decades. I mean, trying to pretend this is all Trump is just not true. I'm old enough to remember Barack Obama saying that he was going to use a pen and a phone when he lost control over Congress, and then using a pen and a phone.
In the last 4 years.
Yeah, and so the sort of idea that Trump is not right. But
and the court stopped what he's trying to do. We still have things that...
Well, there's pushback, but I will say I'm definitely concerned. Again, the centralization of power in the executive branch, I think, is going to continue because people are frustrated, and when they are frustrated, they look for who is the guy who can, quote unquote, make it happen. Do I think anyone is going to be able to remake Trump's coalition? No. In the same way, I think it was a mistake for Democrats to say, we'll just slot Hillary in and she'll just take over Obama's coalition. every politician has their own coalition. J.D. Vance is going to have to build his own coalition. And it's going to be kind of a weird and unwieldy coalition, right? Because on the one side, J.D. Vance is a very Silicon Valley, Peter Thiel guy. And on the other side, he's a very blue-collar Appalachia guy. How do you square that circle? Trump was so big in his persona. He is so big in his persona that he is, in his own way, sort of what Obama said. He's sort of a blank screen that you can project your hopes and dreams onto. And you see everybody in the Republican Party trying to say, well, he represents what I think. And the truth is, Trump represents what Trump thinks. There is no Trumpism. There is just what President Trump thinks, which is why he's so heterodox and why we can sit here and be frustrated sometimes by what he's doing and still say we like
administration
him.
doesn't know what's happening. They'll say you have to wait. There's one person who's deciding, and that.
Yeah, I mean, and you know, I think that is what makes Trump a unique figure.
But you got people like Bessent there, so I mean, you think that
keeping I think the markets are being held up by Scott.
Yeah.
But Scott will also tell us that the decision finally is going to come to the president.
I know. I know the guy. Believe me. I'll trade you one Colbert firing for one appointment of the head of the Ministry of Truth, which we almost got back under. You remember that? But
yes.
Every time we hear whining about, that there's somehow pressure on the free press, and I mean, are this for real? You remember Mark Zuckerberg admits they came to us and said, do not do these things.
Well, I mean, again, there's this sort of idea that Trump is shutting down free speech in America. I've noticed
the end of democracy.
It's working. Free speech continues to work extremely well in the United States. So I'm not worried about that.
But I assume you prefer that he's not suing media outlets, or you would?
I mean,
I'm curious, actually, where you land on that?
I mean, it depends on whether they have actually trespassed.
Did they deserve to be sued?
Some sort of actual.
Do you think they did, though?
Problem. I mean, it depends on which case we're talking about.
In the real world,
do 60 minutes.
Is my website done yet? Is my thing done? They all deserve to be sued, probably at this point.
Well, then you'll get the lawsuit too.
No, I'm trying to just balance it out a little.
I mean, the specifics of that particular case in which they kind of sliced and diced Kamala Harris in order to help her. I think that that probably is not a lawsuit that I would have filed.
Did you agree with Malone yesterday when he said across the board, none of them are fair at this point? Did you agree with that? When he just flatly said no.
That no media is fair?
No media can get beyond the progressive DNA.
No,
I don't know what he's talking about. We have Ben on right here. I got you.
I'm doing my best. I'm doing my best.
Journalists in general go to schools, then they think about these things, and they have
Exactly. We all have our own biases.
Right.
Will you admit that? At least we all have our own biases.
Yes.
We all have our own biases. We all. Lions and Scavengers is the name of the book. Give them some credit.
You're
here.
staying till 9 and coming back tomorrow? Is that right?
Yeah.
Okay. There's a copy of the book. You can go get it. It's fascinating about America. It is, and the state we're in right now. Coming up, the CEO of eBay is going to be coming on the broadcast. eBay, by the way, turning 30 years old, 30 years young, I should say. Squawk Box turning 30 years old next week, actually, too. So we got a lot to celebrate. Squawk Box after this.
Tom.
All right, it is just before 8 a.m. on the East Coast, and you're watching Squawk Box right here on CNBC. I'm Becky Quick, along with Joe Kernan and Andrew Ross Sorkin on this Wednesday morning. I was thinking Tuesday for a moment, but the Dow futures are a little higher. They're up by 4 points. S&P futures up by 30. It's the NASDAQ that is the big gainer this morning. It's up by almost 160 points. Take a look at Treasuries because we have seen yields pick up recently. This morning, it's the opposite of that. The 30 years right now at 496, the 10 years at 427, and the 2 years at 365. eBay is ringing the NASDAQ opening bell later this morning to celebrate the company's 30th anniversary. And joining us right now is Jamie Iannone. He is eBay's CEO. Jamie, we've got our own 30-year anniversary.
I know, congratulations, next week, huh?
We'll be celebrating next week, but I have been using eBay for forever. It feels like maybe 20, 25 years.
All right, you're one of our longtime buyers.
Yeah, what has changed over 30 years? I know you have a lot more buyers, 134 million active buyers that you're using right now. You're using AI, but if you had to say, what's the biggest difference in eBay 30 years later?
You know, I think it's the use of technology to take all the friction out of the experience. Especially now it's exciting because we're using generative AI to really make it easy to list products on the platform. Think about holding your camera up to an item and we figure out here's exactly what it is. We write the description for you. We put it on a beautiful background. So let's say your son wants to sell one of those trading cards. Before he would have had to type all the information in, take a beautiful picture. All of that is handled seamlessly now with technology. The other big thing is we're leaning into enthusiasts, right? Enthusiast buyers and sellers across fashion, handbags. We're now authenticating products. We've just authenticated our 15 millionth product. That was not something we obviously started doing 30 years ago, but these are all innovations that we've been handling on the platform. It's been performing well. You know, last quarter, we've been driving focus categories up 10%. These are categories that we've really focused on. How do we grow customer satisfaction and really drive GMV on the platform?
The AI aspect of it, I think, is particularly interesting. It's for people who are selling a lot of items so that they can do these things faster, they can manage conversations more easily. Has that led in turn to the mega sellers selling even more? Like how many of your sellers are people who are selling and making an entire living on this? How many are people who are just kind of doing it in their spare time after their jobs?
Yeah, well, we have hundreds of thousands of small businesses on eBay, and a lot of them actually I call accidental entrepreneurs. They didn't mean to become a business on eBay. They just started selling, and then they started selling more, and all of a sudden they're running a business on the platform. And it's exciting to see how the company's brought, we call it economic opportunity for all. But those new AI features are also relevant for everyday consumers. People just looking to get rid of the stuff that they have in their house. The average household has $3,000 to $4,000 of items that could be sold on eBay.
How much?
$3,000 to $4,000.
If I just go digging through my closet?
In your closets, in your garages. And if you don't think you have it, everybody says that my spouse has all this stuff that they can sell on the platform.
Right. It's his junk, not mine.
It's unlocking all of that inventory using technology, which is really exciting.
All right, I want to take a look at a one-year stock chart, maybe a year-to-date stock chart, because you've done very well year-to-date. I think you've outpaced the S&P pretty handily. Year-to-date up 46%. But if you're looking, it was down 6% last week, and that was over some concerns about the exemptions that you used to get from tariffs, $800 and less for packages that were being shipped, weren't getting taxed. But that's changed under the Trump administration's new rules. How big of an issue is that? What do you do about it?
Yeah, we're not immune to that, but we have a more resilient because of the marketplace platform. When you think about it, sellers have choices. We saw sellers open up new quarters, for example. We built seller tools like SpeedPack and eBay International Shipping to make it easier. We've been dealing with cross-border trade for 30 years now as a business, and we feel well equipped. Our guidance that we put out there for third quarter actually contemplated even the most recent changes that have been announced.
For the de minimis rules for $800 and less. So you beat expectations with your most recent quarter results. You raised for the full year. And you stand by that right now, even with these changes?
Yes, and when you look at it, the underlying strength of the business is strong. I talked about, our focus categories. These are handbags, watches, sneakers, all performing really well across the board. Motors, parts, and accessories is a huge category on eBay, well north of $10 billion. All of them performed really well in the quarter.
and strength kind of throughout the start of Q3 as we talked about at earnings.
How do you do when there's a downturn in the economy, or if there's uncertainty for consumers? Because we heard yesterday from the McDonald's CEO, we've heard from others, that the lower end of the spectrum is getting squeezed. Those consumers, middle class and lower, are having a little bit of a tougher time. You guys are re-commerce, so it's maybe buying things that have already been lightly used. How do? Do you get a trade down effect when the economy gets pinched like that on the lower end?
Yeah, it's actually one of the great strengths of eBay is that when consumers' wallets are stretched, they actually look to potentially buy used or refurbished product instead of brand new product, and that really helps eBay. Used and refurbished are actually growing faster on our platform than new products. They now represent about 40% of sales on the platform. And if you take a category like refurbished, you now get 40% off new products. You get a 2-year warranty. You get a 30-day eBay money back guarantee. So we've backed it up with a lot of trust. A lot of brands sell exclusively those items from refurbished on eBay, and so the consumers really gravitate towards eBay during those times.
When it comes to sneakers, I guess you're competing with the likes of a StockX, where they are authenticating too. How do you do that? How do you make sure it's actually authentic property?
We have an amazing team of authenticators. This quarter was our first quarter we authenticated 1 million items in a single quarter, and we do it now across watches, jewelry, handbags, trading cards, sneakers, etc. We have 8 authentication centers throughout the world. We just opened up our newest one in Japan. And to my knowledge, we've never had a counterfeit get through one of our authentication centers. So buyers love the experience. It actually helps protect sellers as well. And it's brought a whole new level of trust to the platform on eBay.
Jamie Iannone, the CEO of eBay, and congratulations on 30 years.
Thanks for having me on.
Thank you.
Coming up, a billionaire. I know who it is, so you don't have to move the monitor. I think it's Mark Lasry, but thank you. Joins us to talk uncertainty in the markets and his big bets on sports. Squawk Box will be right back.
/Prime.
U.S. equity futures at this hour. It's all about Google and Apple. Really, Nasdaq's up. S&P's managing to stay in the green. Let's get to senior markets commentator Mike Santoli. On the trading day ahead, it's second day of trading in September with October looming, but
Yeah.
doesn't necessarily mean anything, does it?
Not necessarily in itself, the seasonality, Joe. We did stumble into September yesterday. S&P down about 2/3 of 1%. Kind of nothing work. You had pressure on the mega cap tech stocks. Semis were weak. At the same time, higher bond yields prevented the broader market from being a beneficiary of that rotation that sometimes happens. Now today, as you mentioned, it's going to be a NASDAQ 100 day. Probably support the S&P 500. Since May, since we came up off that April low, you really haven't had anything much more than a 3% pullback. So you've kind of held that line. At yesterday's lows in the S&P, you were down 2% from the record high. So kind of nothing much to report there, although of course we are sensitive to kind of yields and a little bit of the hangover post NVIDIA earnings and the AI rethink that's going on. Take a look at Alphabet relative to Meta platforms over 5 years. These have kind of swapped leadership in this, digital ad-driven mega cap space, and now Google's set to overtake Meta over that period of time. You see, Google held up better. That was kind of the disillusionment with Meta's investment plans and all the rest, and Meta comes roaring out of there as an AI beneficiary. So neck and neck, very similar charts, though, over that 5-year span starting in kind of mid-pandemic. Now, take a look at the yield story. This is the 30-year yield relative to the 2-year yield U.S. Treasuries. They were this is when the Fed was still tightening. 2-year yields above 30 years were inverted on the curve. Obviously, 2-year yields now at the lows just about, pricing in 100 basis points or so of Fed rate cuts by the end of next year. As you've gotten stickiness in 30s, kind of been bumping up against that 5% ceiling. I don't think there's any magic to 5%. Long-term yields are higher globally. This is not just a U.S. story, but it does show you that the market is pricing in maybe a greater premium for longer term inflationary pressures or higher economic growth or higher nominal growth. Gold is also breaking out. It's all very similar. So you want the yield curve to have some steepness to it. Question is how much. Not a ton of real economic activity gets priced off at 30s. Final point I'll make, tons of corporate bond issuance starting yesterday, will continue for a while, and that could keep yields sticky to the high side as well.
Bottom line, I guess, and you intimated it. So there does come a time where a yield curve could be too steep because the inverted one, we know what that typically could be predicting, which is never good.
How could it get too tight? Yeah.
But okay, right. But if it's too steep, it means that there are inflationary expectations in the future.
Yes,
increasing.
and or it means that the market is kind of pricing in the possibility that the central bank will be too easy for the economic conditions.
Right.
And again, that translates into economic.
But if
it
you
only
had to
matters
pick.
if it chokes off economic activity because of higher yields.
You had to pick. Let's go with we'd rather have the steeper yield curve, or at least not
you
an
can deal
inverted.
with that, for a time. Yeah.
It's good for banks. All right, thanks, Mike.
Big hour ahead. Avenue Capital's Mark Lazary is going to be here in just a moment. Plus an exclusive interview you do not want to miss. Fed Governor Christopher Waller, he has been mentioned on the list as a potential candidate to be the next Fed chair, and he's going to be right here on Squawk Box in just a bit. And then Senator Rand Paul on the administration's industrial policy moves and so much more. A lot of conversation in just a moment.
Ash Invest.
If you haven't seen it already this morning, check out shares of Google's parent Alphabet after a favorable ruling in the antitrust case. You can see that stock is up by about 6.1%. A judge confirmed Google's monopoly in search, but he rejected the DOJ's push to break up the company or force it to divest Chrome. Google can still pay partners like Apple to preload its services, but the court said it can't use exclusive contracts for that. That does lead to some confusion, but Apple shares have been higher this morning as well. And again, Alphabet shares are up 42% for the year, up better than 6% this morning.
Meantime, Federal Housing Finance Agency Director Bill Pulte saying he's going to hold a press conference tomorrow morning with what he says is new information connected to Fed Governor Lisa Cook's mortgages. Meanwhile, Cook's legal team blasting the Trump administration in a series of new court filings. Cook is asserting that the White House lacks valid grounds to fire her for, quote, cause. Joining us right now with the latest is Scott Alvarez, who served as general counsel to the Fed Board of Governors. He's now an adjunct professor with the George Washington University Law School. Good morning to you. We also heard from her effectively saying that she didn't commit mortgage fraud. It's the first sort of full-throated defense, though limited in terms of any detail. Do you think she's supposed to come out and say something very specific about these allegations or not?
So I don't think she's set that up in this court case. Right now, she wants a decision based just on the president's order and what he used to make that order, which is simply the allegation from Bill Pulte. She's saying that she was denied due process, and so she's looking for another proceeding to have the facts come out on the mortgages, if there is indeed any issue there.
The reason I ask is there's the court, and then there's the court of public opinion, and how much you think that matters in this type of context, given the role that she's in.
So the court of public opinion is very important. She's in a tough spot because if she's able to stay on the FOMC for its next meeting, and she votes to lower rates, there's going to always be the question, is that based on the data or is that to preserve her position? On the other hand, if she votes against raising rates, or lowering rates rather, if she votes to raise rates, then folks may wonder what her basis is for that. Is that retaliation for the president's attempt to get her off the board? She's in a tough spot that way. I don't know if putting more information out will solve that problem for her. It's probably a little more complicated than we all think, and that may be why she's not issuing a special release of information.
What do you think about the strength of the president's case to fire her?
So I think that the allegation is not cause. No court has found that a simple allegation without a basis to it is in fact a cause. It'll be interesting to see what the Supreme Court thinks about that. I think what's going on right now is very important because she's asking for a TRO and then a summary judgment, which means TRO is not appealable. Summary judgment would be appealable, but that would be a case on the merits. The Department of Justice is asking for something different. They want to convert the TRO into a request for a preliminary injunction. That is appealable. If the court does that, then they could go directly to the Supreme Court or through the Court of Appeals to the Supreme Court and decide whether she can stay on the board meeting in September.
Scott, let me ask you a slightly different question. There was an interesting sort of component part of her filing, which is that she sued not only the White House and the president, but she sued the Fed itself, and she sued Jay Powell. And there's some people who've looked at that and said that's a way to try to protect the Fed and maybe even protect Jay Powell from making decisions that would have otherwise been adverse to her, or worse, putting him in a position, if he didn't do something related to her, that he could therefore be fired for cause. Can you speak to that sort of legal game going on, if that's what's happening?
Sure. I think it's natural that she should sue the board and Jay Powell as part of this action because she wants an order from the court that says to the Fed and to the chair, you can't remove me based on the president's letter. Let this play out in court before you take action at the Fed. And that does protect her and her position, because the Fed wouldn't act separately from the court, but it also does protect the Fed, because then they'll have clear guidance from the court on what to do, whether she should stay or not stay.
Hey, Scott, that aspect makes sense to me, just the idea that, you know, someone has a chance to prove their innocence, to prove they're not guilty in a situation like this. But based on what we've seen, if the evidence is true from what we've seen from Bill Pulte, it's pretty hard to justify having 3 homes where you said each is your primary residence and you've been renting some of them out.
So that is a little more complicated than it sounds, because the real question isn't, anybody who's been through the mortgage application process knows there's a lot of information that is provided to the bank, and that information can change during the process of getting a mortgage.
Yeah, but I also know as somebody who owns multiple homes, that the bank wants to know if it's your first or second, because if it's not your primary house, you're gonna have to pay a higher rate, because you are far more likely to walk away from that investment than a home you're living in.
And people keep saying it's complicated, it's easy to make mistakes. She's deciding on monetary policy. I'm sorry it's complicated, but you know, you got a big job here.
True, but think of a person who has, say, a congressman or anybody working in Washington that has a primary home in some state, and then they get a job in D.C. that's going to be temporary. They need a place to live there. Some states provide that if you live 180 days or more in a particular home, you have to declare that as a primary residence. But you may already have a mortgage that says you have a primary residence somewhere else.
But she did, but those 2 mortgages she took out were within 2 weeks of each other. I can understand there are some circumstances. For example, if you are serving in the military, you can do that. You can buy a home and list it as your primary if you're doing it for, let's say, an older relative or a child with disabilities. There are some reasons for that. If it were that simple, why hasn't she just said that instead of going through this entire rigmarole and saying it was a clerical error?
Yeah, I don't know the reasons for her approach to what she's saying publicly. I just know that there are situations where this could be, you know, it's a question of what the banks know and what she's told the banks, which is more than what's on the application. We'll eventually find this out, but that hasn't been revealed so far.
Scott, want to thank you. It's fascinating and fascinating to see what happens. We're going to keep our eyes on all of it. Before I go, you know, Pulte's going to come out with new news tomorrow. How much do you think that's going to matter?
He hasn't been put out a lot of news so far, other than, you know, just basic things. So I don't know. I doubt that he has very detailed information, but we'll find out tomorrow.
Okay. Thanks again. Look forward to talking to you again.
Take care.
All right, up next, Avenue Capital co-founder and CEO Mark Lasman joins us on the markets and his push into sports investing. Got out of some sports investing, but he's got a lot of other things going on. Then he's been named a potential Fed chair candidate, a special interview with Fed Governor Chris Waller, his thoughts on rate cuts, the economy, and the impact of the tariffs. Squawk Box will be right back.
right, welcome back, everybody. Let's talk markets, the Fed, investing in sports, and much more. Joining us right now is Mark Lasry. He is Avenue Capital Group Chairman, the CEO, and the co-founder, also a good friend of Squawk, and it's great to have you here, Mark.
My pleasure. Thank you for having me.
I want to dig into sports, but let's hold off on that because I think it's probably more important to talk broader markets right now. There's a lot of questions about what's going to happen with the tariffs right now.
Yep.
Those questions didn't seem to do very well for the stock market yesterday because it just means more uncertainty. You're on the record from back in March saying that all of these tariffs would not be good for the economy, that it would be very hard for the economy to survive with them. Have you changed your thought process after what you've seen the last 6 months or so?
I've actually been surprised at how resilient the market is. I really have. But I do think as you have higher tariffs, you just have higher pricing. And the economy has been able to deal with that. So I guess for me, I actually thought if you had higher tariffs, you were going to have lower rates. And you're still a little ways away from that. But everything's about the economy. So if the economy is holding up, tariffs are fine. If the economy isn't holding up, then you better either have lower rates or lower tariffs.
What do you do as an expert in distressed debt? Where do you find things these days? Where are opportunities? Have you been irritated that you haven't been able to find better deals?
Yeah, it's harder. I'm not going to tell you it's not. You need problems. So I think for us, the only thing we're really doing today is more, there's less distress, but you're lending money. People need capital. They need short-term capital. So we've been doing that. You've got more opportunities, I would say, in Europe. You've got more opportunities in Asia. The U.S. market has been really resilient. So I think for us, there's just less to do here.
Who do you lend money to in places like Europe and Asia, and what kind of rates can you get?
You're able to get about, I would say, sort of 12-15%.
12 to 15%.
Yeah. People need money. They need short-term capital. So people lend. Nobody can survive if they're borrowing money at 12-15 for 5 years, right? Everybody, it's more for a year, 2 years until they sort of turn things around. But a lot of it is they've got the assets there. So for us, we're happy to lend. The problem for a bank is a bank's going to look at that and say, look, I only want to lend to you if you've got a certain amount of cash flow. For us, we're happy to do it based on the value of the assets.
Because you get the asset if anything goes awry. If the Fed lowers rates, how does that change that business for you?
It changes it. I mean, you're going to be charging less. I mean, normally what you're doing is you're charging somewhere around sort of 500, 700 over SOFR. So wherever SOFR is, it's the same thing for us.
And I would assume that normally if the Fed's lowering rates, it's because the economy's in trouble somewhere else, so you can swing back into the distress side. Do you see that happening this time around?
I think it takes time. I think rates, if they go down, they'll go down about 50 bips. I don't think they're really going to go down 1% or 2%. So I think the perception is that things are going to be better. People will be able to borrow. You need to have rates go down 1 or 2%, which means that there's real problems in the economy.
Do market valuations at this point make sense to you? We've heard a lot of people saying, hey, it's really expensive right now, but then we have people saying earnings keep delivering.
I think it's expensive. I mean, for what we do, we like to buy things at a discount. I think today it's hard to buy those things at a discount, and that's fine. You just wait. You just have to be patient. I think you get in trouble when you feel like you've got to do things you normally don't do. So for us, if we're not seeing opportunities here, we'll go to Europe, we'll go to Asia. There's always people who need money around the world, and we're a global firm, so we can find that.
We just had the CEO of a Blue Owl on, and we were talking just about how in private equity land, there's so many assets that are just locked up.
Yep.
Nobody can exit anything right now. And there's also a move afoot to democratize private equity and venture capital into 401k plans and other things through these sort of semi-liquid vehicles. And whether this is going to be a great boon and a fabulous thing for retail investors and others, or this is going to be some kind of crazy exit opportunity for private equity folks who've been locked in something to hand it off to those who may
not know exactly what's happening?
Look, it's a great question. I think it's hard. I think it's hard to end up having something that is illiquid and very much illiquid, and having private investors come in who love liquidity. That to me is really the issue. It's not being sold, look, give us money and you got to hold on and it'll be fine for 10 years. It's give us capital, that's fine, and we're going to provide you liquidity. Look, to me, you've just got to be logical. If you're giving somebody money for 10 years, you can't expect that you're going to have liquidity next month or next year. And that's what you're having in all these, I think all these programs that are being set up, is this perception that you're going to have liquidity when I don't think it's really going to be there.
And therefore that's going to do what? It's going to take down this whole alts idea? I mean, does it end well? Does it end badly? I do think long term, you think the idea of allowing people in their 401ks to get access to, opportunities that have worked out a lot better for frankly wealthy people who've had access to should be a good thing. But you speak to the sort of the peril of it at the same time.
I think to me, when you're investing in private equity, you're saying I don't mind having my money locked up for 10 years.
Right.
I think for small investors, that's just very different. I really do, because they don't have access to capital as easily. So if there's a problem and they need that capital, they're going to end up having to sell that at a big discount. And there'll be people like me who will buy that at a discount, and ultimately, that's not great for a small investor. That's all.
Mark, let's talk sports, because that's fun. And
Always.
You had a sports fund that raised, I think, $785 million, maybe a little more than that.
Yeah, we just crossed
July.
$1 billion, so it's good.
Oh, so you're past $1 billion now.
Yes.
Huge interest in all of these things. You seem to be looking more at sort of new alternate sports, new ventures. You sold out of the Milwaukee Bucks. I'm guessing.
What's a Bucks worth now?
Definitely worth more than I sold it for.
And when you bought it, it was worth so much more than you bought it for in a month.
Yes.
And so why would you sell when you know it's just going to keep going up and up and up and up and up? Never heard to take a profit. That's really what you told me.
I think, look, at the end of the day, it was a huge profit.
Yeah.
For me, I'd made about 7-8 times my investment. Yeah. I thought I could take that capital, continue to invest it. Right? Yeah, West's still in. I think a number of the people are still there. Yeah. Look, the NBA is great. Yeah. And I think we're going to be investing in the WNBA. I think women's sports are doing fabulous right now. I mean, if you look at it, 3 years ago, you could have bought a WNBA franchise for $50 million. Today, they're $250 million. Right? I think in 3 years, they're going to be $500 million.
So how long before you make 7 to 8 times your investment in some of these?
I think that'll take about 10 years, 10 to 15 years. I think women's sports is growing exponentially. I think you've got huge opportunities there. I think the NBA is going to start NBA Europe. I think that'll be a huge opportunity. I think for us, what we're trying to do is find situations where you're just a little bit ahead, and then the rest of the market will catch up. And you're seeing that today.
Your favorite part about sports, do you do this as a fan, or do you do this simply as a hard-nosed investor who looks at a great opportunity?
I think first you start off as a fan. You've got to enjoy it. You've got to like it. And then the question is, can you make money? And then you start focusing on that. So, like for the WNBA, it's the teams will break even, but the appreciation will be there as you end up having more revenue coming in and more people. Ticket pricing.
Yeah. How much did you make on Seattle?
Has
that been divulged 7 or 8 times? More.
No, we did really well.
More than 7 or 8?
No. We didn't make 7, 8 times, but we did really well.
And it's worth more.
I think it is. I think it's definitely worth more. But I think any asset that you had bought 5 years ago is worth more.
They're not making any more of that island.
They're not making any more of that island. They're not making any more basketball teams. They're not making any more.
Got that in common. You're still buying. Yeah, how many of those places you got? You got 3 now?
3 what?
3 of those you got the penthouse, then you got the first floor. What you got?
We have a large family. I've got 5 kids, 14 grandchildren.
All those are worth more.
Congratulations.
Those have doubled.
They've doubled. Yeah.
At least.
If you bought an asset 5 years ago, you're going to do really well.
Hey, Mark, want to thank you for coming in. And,
Always.
You know, we're celebrating 30 years. You've been around with us for a lot of that, so we appreciate you being
No, but congratulations on that.
Great.
It's been fun.
Is it going fast or slow? Time flies when you're having fun. It's gone fast with us, hasn't it?
It actually has. It's weird when you think about it. It sort of feels like yesterday you started, and
Yeah.
it goes by very, very quickly.
That it does. That it does. Thank you, Mark.
Thank
Appreciate
you.
it. Talking about going fast, so we are going to do a quick check on 2 earnings movers right now. Macy's share is trading higher after the retailer's earnings beating estimates. It's raised its full year guidance. Dollar Tree also beating estimates as well, raised its full year forecast, but guidance for the current quarter disappointing the street. So you're seeing that stock off about 6%. You're seeing Macy's, by the way, up about 13%. Up next, Fed governor, and yes, possibly the next Fed chair is going to be on Squawk Box. You don't want to miss this conversation. Christopher Waller joins Steve Leisman for a wide-ranging interview you cannot afford to miss. Squawk returns with a possible next Fed chair after this.
Never gets boring.
Welcome back to Squawk Box. Treasury Secretary Scott Bessent will reportedly begin interviewing candidates this Friday to be the next Federal Reserve Chair. The Wall Street Journal says interviews will continue next week and will be conducted either in person or via video conference. Let's get to Steve Leisman, who is with one of the potential Fed picks, who seem to have gotten more popular as time has been going by. And even before he was mentioned, we had talked about him and talking about cuts way before that. Chris Waller. Hi, Steve.
Yes, we had Joe, and I am joined by Fed Governor Chris Waller, who, because he's right here, he's my pick right now. Thanks for joining us, Governor Waller. I want to start off with what is among the most interesting things in the market right now, which is what's happening with the bond market. And you have these, the 30-year yield inching up towards 5%. The 10-year seems to be stuck around 4.27. The 2-year seems to be anticipating, I don't know what, but a lot of rate cuts from the Federal Reserve. Give me your view of what's happening, particularly on the long end, and how you think about that.
Yeah, I think on the long end, which of course we really have very little influence over 30-year yields, they've been ticking up. We've also seen some of that globally yesterday. But the 10-year's kind of been anchored right where it is. So if there was anything that was worrisome that was driving the 30, you'd think it would also start affecting the 10. But it's not. It's kind of anchored there. And as you said, on the short end, the markets are certainly pricing in cuts from the Fed in the next few months, which is probably a reasonable estimate. So it kind of makes sense in the short end. The long end, I'm not exactly sure, and the 10-year is kind of staying there. The 10-year came down a little bit from about 4.30 down to around 4.40 down in that area. So it really hasn't moved much, and it's got a little bit of the Fed cut built into it.
The 10-year does.
Yeah, but it's 10 years out, so thinking of a couple of cuts in the next few months is unlikely to move rates 10 years out.
So give me your view of why the 2-year looks like it's potentially got a couple cuts in it. Is that your view? Is it one cut and then many more? Or how do you gain things out over the next several months?
Well, I've been clear that I think we should be cutting at the next meeting. The labor market has come in much softer. When I first said this with you, I think a while back,
Yeah.
People thought I was crazy, but once the labor market data came in on August 1st, it became pretty clear that labor market was not performing up to what everybody thought from the original estimates. But we were getting all this anecdotal evidence at the time saying no hiring, no firing, firms are laying off, rates were going up for new entrants, AI was potentially causing problems. So all that softened. ADP had big negative numbers, so all that data didn't seem to match up with what the BLS was putting out. And that's kind of where I felt like the BLS numbers have got to be off in some way. And then we found out in August that they really were. So I think because of that, and you want to get ahead of having the labor market go down, because usually when the labor market turns bad, it turns bad fast in a non-linear fashion. It doesn't just kind of creep up. So for me, I think we need to start cutting rates at the next meeting, and then we don't have to go in a locked sequence of steps. We can kind of see where things are going because people are still worried about tariff inflation. I'm not, but everybody else is. So I would say over the next 3 to 6 months, we could see multiple cuts coming in. Whether it's like every meeting, we'll have to wait and see what the data says.
And where are we headed, in your opinion? Do you have a view of neutral, of where you'd like to get to, or do you need to even be below neutral?
Well, like I said, I usually use the SEP benchmark.
That's the Summary of Economic Projections.
Summary of Economic
That's the
Projections.
average of all the Fed officials and their long-run rate.
Right, so that gives me kind of a benchmark where the middle of the committee seems to be, and I use that to think about where neutral is. Could be higher, could be lower. You have people all over the map on this. So, but if you take 3%, you're about 125, 150 basis points above that. And if tariff inflation looks like it's going to be temporary, and it's a one-time level effect, which I think, inflation expectations are anchored, and the labor market's really weakening. So our dual mandate says worry about employment and inflation, look through the inflation, worry about the employment, start cutting.
Let me give you what I think is a textbook argument against what you're saying. And you tell me where I'm wrong in the textbook. You have a target at 2%, your inflation number's at 3%, and some people argue going higher. If you cut now, are you saying we are not really going for that target of 2% anymore? Are you undermining your target and your anchoring of inflation expectations?
No, and I think that's where people mistake what you mean by looking through. You know that you're going to have this surge of inflation from the tariffs in the short run, but it's not going to cause long-run inflation. So the whole idea of looking through it is to say, yeah, we know we're going to have this blip of inflation, but it's not permanent. And so why, for a one-time level effect, you want to start, say, raising rates and damaging the labor market, the housing market, and everything else when you know in, say, 6 months it'll stop. So that's the classic view of what it means to look through is, yes, it is going up, but that's what looking through means. You're looking through saying 6 months, 7 months out, it's not going to be going up. It'll be starting to move much closer to our target of 2%. So it's not about letting inflation go. You're just looking through, and that's the critical part. It's very hard for people to think about what that means, But I'm looking through saying inflation 6-7 months from now is going to start moving back closer to our 2% target.
Do you think that over time that the inflation numbers will be clear as to what the direction ought to be in terms of how much you should be cutting, and that whether or not you start to get that help from the service side and the housing inflation starts coming down, and it'll be clear to everybody out there?
Yeah, that's why I said what we want to do is start cutting because of the labor market, but we can always adjust the pace depending on how the data comes in. So I kind of use this analogy that, when I was in college in northern Minnesota, I'd drive home for Christmas. I knew what the ultimate destination was, but how fast I got home depended on the weather, which is the incoming data. And that's kind of where we're at now. We kind of know we want to get towards neutral. We know roughly how much you might want to cut, say 100, 150 basis points, but how fast we get there is going to depend on the data that comes in.
Is the speed something where you feel like if you remain at a certain place, you're still putting downward pressure on inflation because you would remain above neutral?
Yeah, if your rates are above what you think is neutral, which for at least half of the committee is 3%, then policy is still moderately restrictive. So my other colleagues have a much higher neutral rate, so they think we're barely restricted. So that's really kind of the thing, is where you think neutral is depends on how much you think there's restrictive policy. And I think we see it in a lot of sectors. You're not seeing housing taking off. You're not seeing auto sales booming. These are things that are typically interest sensitive on the household side that we're putting downward pressure on.
Turn to another important issue out there. Your colleague, Lisa Cook, has been essentially fired by the president. What's your reaction to that? Do you still consider her to be a Federal Reserve governor?
Look, see, this is in the courts. This is no longer an issue for me. The courts will be deciding soon how this is going to play out. So I really just don't have any comment.
Has she been at work?
I don't really have any comment on this.
All right.
I haven't been at work that much. I've been in Jackson Hole in Miami and everywhere else. So.
Let me ask you just a few more questions about that. Do you feel as if this is a challenge to the independence of the Federal Reserve?
The independence of the Fed is critical for everything we do. And, there are things that are going on that make people worried. But I still believe that we have an independent Fed. People that are appointed will behave that way and act in an apolitical fashion. So I think no matter what, the Fed will maintain its independence.
You are one of the people who have been named as a potential candidate for Federal Reserve Chair. Have you met with Treasury Secretary Scott Bessent?
I've met with Scott in the past, but it wasn't an interview for this job. It was just more of talking, and particularly some of my speeches and things like that. So it was a while back, but we haven't had any kind of interview yet.
Do you have one scheduled? Is that?
No, I don't at this moment.
So just one last question here. How much concern do you have for the economy right now and the consumer? Is recession something that's in part of your thinking, one of your outlooks, or is that you think we avoid that and just have slower growth? What's your baseline outlook?
Yeah, I don't see recession in my forecast at all, but I do see slower growth through the year, mainly because of the tariff impacts. I mean, tariffs are a tax. Taxes are never typically good for growth. So, you're going to get some slow growth out of this. But I don't see a recession. But I think there's a lot of other stuff that is driving the labor market down. And I do think it's all on labor demand. A lot of talk about immigration. It's all about immigration. But if immigration was just a decreasing labor supply and labor demand was stable, you would see wages start to be bid up. You'd start seeing vacancies going up. We're not seeing that. So all the labor supply is doing is masking this declining, falling labor demand, which from a Fed's point of view is not a good thing. Our goal is not to say, hey, the unemployment rate is great while labor demand and job creation is falling. That's not what our objective is. It's maximum employment.
Governor Waller, thank you for joining us.
All right, thank you, Steve.
All right, Joe, back to you guys. Did you guys all take a vote? Do you have an opinion yet, Joe?
We think we should cut.
No, on who should be Fed chair.
Sorry. No, I was just speaking for my cut early and often, baby. Let's go. Let it rot. No, I don't know. I'm kidding. On which subject? On who should be? I like Waller. I do.
He's a research director, Joe. He worked for Bullard for a bunch of years.
I like Bullard too a lot.
You like Bullard?
I like Bullard a lot. I don't want to say. I mean, I love all my children. I don't know whether to say Chris or James.
I think we should have a little round table and take a vote, Joe, is what we should do. We've got Zervo's coming up later. We have Malpass yesterday. It's a tough call.
Yeah, we can all get around and take a vote, and not one person in the world will care what our vote is. We gotta go. Thank you.
Thanks, Joe.
Thanks, Steve. Except us. Following the president's announcement that the U.S. would take a 10% stake in Intel, Kentucky Republican Senator Rand Paul called the move a step towards socialism. Senator Paul joins us this morning to talk industrial policy and more. We've had this ongoing conversation all this morning, Senator, about, we've said the good versus the perfect, and we've said, there are things that the true conservatives like about the president's policies, things that they don't like. If I had to sum it up, you're not a big fan of tariffs or what you would call industrial policy.
Well, it's not that people in government, bureaucrats, are necessarily stupid or incompetent, but it's a debatable question. But they don't get the same signals. So the reason why you don't want your government to own anything, if possible, or to only get involved with those things that the private market can't, is that the private market sends a constant barrage of signals. And people have to respond to those every day. It's sort of a cruel world, the economy is, but that's how we get efficiency, and that's how we get cheap prices for people on different products, is because people are forced. They don't do it out of benevolence. They do it out of this fierce competition as the marketplace. Once you involve government in it, you take that away you take those forces away that breed excellence. And so I think it's a big mistake to have government ownership of things. And of course it's a step towards socialism. What is worrisome is when you see the people supporting the president just sort of saying, oh no, this is good, and it is good that the government should own. And that really worries me, because I worry that the free market movement, the movement that was a big part of the Republican Party, is being diminished over time.
I know exactly what you're saying, and just to tell you how I've sort of tried to grapple with it, the money was already going to Intel from the CHIPS Act. And free market forces did cause some hollowing out of a lot of our industries, and there are some that it would be in our best interest if we could bring some of them back. So the CHIPS Act was one way of doing it, but it was just subsidies with all these conditions. Once we already earmarked all that money for Intel, isn't it better if the government actually had a stake, and not a stake where they'd be active owners, but just passive owners? The taxpayers or the government owns the stake, but instead of just giving it to them, as long as they have child care and DEI, actually have a stake. If we ended it right here and it wasn't a slippery slope to owning 10% of every company, is there any way that's okay?
We've been giving poor people Coca-Cola for a long time, and maybe 10% of the money Coca-Cola gets is given to them. Maybe poor people should own part of Coca-Cola. No, it's a terrible idea. It's sort of compounding one bad idea with another. Okay, we gave them the subsidies. Well, let's rescind that. Let's stop that. Let's repeal the CHIPS Act. President Trump, as a candidate, wanted to repeal the CHIPS Act. He was an opponent of it. Most of the conservative Republicans were opponent of it. So, it's always a mistake to say, well, we have this one bad policy. All right, we'll tolerate a little socialism, but we don't want any more. 10% is not too bad, but 15%, you get to 15%, then I'm going back to being for the free market again. No, I think it's a bad idea.
I wanted you to come on in July, and I told you, and this was after you once again renewed a criminal referral for Anthony Fauci. This is something I've been talking about a lot, because I saw the smoking gun of him trying to get his colleagues to all say there's no way this was a lab generated virus, and there's a very good reason for him to have done that after he knew full well that the United States had funded some gain of function research, and it was walking and quacking, and it had webbed feet, and everybody knew, and that was. I think that deserves who cares what I think, but what are the chances that he's held to account someday at this point?
A big question is the auto pen, whether auto pen pardons are constitutional or legal or lawful. We do know that when President Obama first signed a law about auto pen, when he came back from his trip to India, he quickly did sign it in person to make sure it was seen as being legitimate. So I think there is some question there. I can tell you that we are pouring through millions of bits of data on Anthony Fauci. There will be a subpoena in short fashion, and there also will be news in the next week or two about things that we have found from pouring over the records. There's going to be significant revelation about Anthony Fauci in the next week.
Okay. What do you make of the new of RFK Jr. and some of the new rules and some of the new developments we've seen with vaccine. That's what I think one of the downfalls of vilifying Anthony Fauci too much is that it plays into some of the some of the people that are total anti-vaxxers, which I don't know if that's, there's somewhere in the middle, isn't there, in the way we conduct policy?
Well, I'm not anti-vaccine, but what I would say is the same way there's a Trump derangement syndrome, there's a Kennedy derangement syndrome. There are some very specific issues we should discuss, and where I think the facts are on Kennedy's side. Should we mandate vaccines for 6 months olds for COVID? So we have to ask, what are the risks and what are the benefits? Are any kids dying from COVID currently? I think no healthy kids are dying. In fact, if you go back through the entire pandemic, about 200 people in the entire country of 350 million people in America, about 200 under 18 died. Virtually everyone had a serious disease also. Virtually no healthy children died. When they did the studies on this, they could not prove that it reduced death or hospitalization because so few people under 18 were going to the hospital or dying that they couldn't prove a benefit. In Germany, they looked at every child under 18 and they had no deaths among healthy children. And so in Europe, they quit promoting this. I think the age is 12 and above in Europe. So these are really honest debates. And I think the extremists are the people on the side of every vaccine is good all the time, the more the better. We don't have to prove risk and benefit. We do know that under 18, really under age 25, there's a risk of myocarditis, presents with chest pain and elevated cardiac isoenzymes, like a heart attack. It's not a heart attack, but this happens in about 6 out of 10,000. That's a small number from the COVID vaccine, but what is the chance of death? It's smaller than that. So you should be presented with these facts and given an alternative. If the CDC says it should be 6 months, many states just get lockstep and they put it into their school program, and essentially it becomes a mandate because it's hard to go to school anywhere. Even the private schools follow this. So I'm against the mandates, and I think Kennedy makes a good point.
Senator, thank you. We appreciate it. We're running out of time. Thank you very much. Hope to see you again soon, Senator. Thank you. I think we're done. Are we done?
Yeah. Goodbye.
We are.
Time for Squawk on the Street.
Bye-bye. That was fun.
Welcome to Squawk on the Street. I'm Carl Quintanilla with Jim Cramer at Post 9 of the New York Stock Exchange. David Faber has the morning off. After that rough start to September, stock's going to get supported today by mega cap tech as Alphabet's up 7% on that antitrust decision. Waller's on the tape, 10-year 428. Our roadmap begins with Alphabet. Shares rallying in some early trade after Google avoids a breakup in that antitrust case. Apple also getting a pop. The Treasury Secretary reportedly set to begin interviewing candidates for the next Fed chair as soon as this week. And lots of retail and consumer-related earnings out today. Macy's shares up sharply right now. Let's begin, though, with Alphabet up sharply in the pre-market. A federal judge ruled that Google does not have to sell Chrome or its Android operating system. He also says the company's barred from making exclusive deals, but can continue making payments to Apple and others for default browser placement. Judge adds Google must share data with rivals to remedy the company's online search monopoly. And Jim, a lot of takes this morning on what this means after being found guilty of monopolistic behavior.
Well, look, I have to appreciate the judge. He does a very, very good job. But the key pages are 36, 37, and 38, which he says, okay, I made my decision, and then suddenly there's Anthropic, DeepSeek, Meta, Microsoft, OpenAI, and Perplexity. And they didn't really exist when this thing, XAI, but it didn't really exist. And suddenly, like, it was overrun by events. Now, that is a judge who, he had to be flexible because the case was brought before these companies meant anything. While he was looking at it, he thought they were monopolists, and then this stuff all comes out. So the case just, the actual events happened so quickly. This is something Jensen Huang, the CEO of NVIDIA, predicted, which is that this thing's going to take over. And that's what happened. So why break up Alphabet? That would be ridiculous, given the fact that Alphabet is no longer going to do as well. That was their point. Now, he said, "Look, we're looking at we're looking at what's going to happen, and what's going to happen is very different." As far as what I've been saying when it comes to letter X or Twitter, is there's just great on page 122. There's this great thing. It says, "Why is Google still allowed to pay?" It says it's like Karen Dunn, who was the lawyer for Google once she's no longer at Paul Weiss. That's a shame, but she was so smart. At one point I had to tell her, "Will you stop being so fast? Like I went to law school. I don't know anything you're saying." Said that Google would continue to receive a disproportionate volume of search queries for a fraction of the cost if they didn't have to pay, so they would be even a bigger monopolist. That's something that the judge came up with. I did not read this in the brief. So Google's profits would increase. Not paying Apple alone would result in a windfall worth tens of billions of dollars. So he was more pro-Apple than Apple was.
Yes.
So I just think this is just, you got a judge who frankly is so far ahead of his time that this reminds me, it's a little bit Microsoft, when Joel Klein was going after them in 2000, had a vision of what could happen, but he kind of stuck with the vision. Whereas here, because he felt you didn't see, it kind of felt, listen, Microsoft is monopolist no matter what, and the judge disagreed. Here, the judge thought they were monopolists no matter what, and then they changed their mind. Right. So I really have to hand it to the judge. That I think that Apple's up 3.5, but Apple was down badly yesterday. I think Apple should be up 5, and I think that Alphabet should be up 6.
B of A takes Apple to 260 from 250. If you're Google, do you bother with an appeal? I mean, they clearly are.
Only just because you want to say I'm unhappy. That would be a big waste of money. They have a lot of money. What to complain about? The question is, should justice go and say, look, we think that that there's no way you should have these kinds of agreements, because Justice spent a lot of time with Apple looking at this agreement. I don't think it's $20 billion. I think it's considerably more than $20 billion. But the main thing that people have to recognize, and the analysts seem to be a little clueless, is that before this, the question is, how much does Apple have to pay in order to have good AI? Do they have to buy Perplexity? What stream do they have to buy? Maybe they have to make a deal with Amazon, with Anthropic. Now it's split. They can go to all these guys and say, listen, do you want to be the #1 AI company? Pay us $50 billion. Pay us. We're not going to give a dime to NVIDIA. If you want to be #1, do you want to be big? Because if you want to be big, don't pay us. If you want to be Google, pay us. I think Gemini's in pretty good shape. I mean, maybe I have to pay him $50 billion. Why
So
not?
is that scenario priced into Apple at the moment?
No, that's what makes me so crazy about it. Because I look at it and I say, now, everyone was talking about, like last night, Apple was down. There were some press reports that Apple lost its #1 AI guy.
Yes.
Well, I mean, when you speak to Apple, they said, "What? We must have like 100 #1 guys because every time someone's taken, he's the #1 guy," which is funny in itself. But this was one of those situations where, before this decision, Apple's going to have to pay because there's so much money invested buying NVIDIA. Now, Apple can say there's 2.2 billion devices worldwide. Do you want to be the AI company that wins? Because there's a lot of companies spending 80, 90 billion a year on NVIDIA. And it's NVIDIA. Let's don't fool ourselves.
Yeah.
Don't fool ourselves. I mean, Amazon's spending money. But do you want to win? It's game, set, match if you pay us. Now, before I felt that if they did that, the judge would be all over them. They got a green light to do that. So why can't you? So you get, what's the gross margins on that? In the 50 billion that they're paid. How about, I don't know, 100?
It sounds like you think that precedent for Apple is more important than the lack of a breakup or a sale of
I was
Chrome or
looking
Android.
for a breakup in Alphabet because I thought the pieces were worth more than the whole. But I have to hand it to Alphabet. They're very good. They're very smart guys, and it worked for them. Look, I thought it was a win-win, which is why I was kicking myself when we sold it for the trust. I said that was dumb, but I believed we had an analyst on who was one of our people who was a contributor who I listened to. And and that's nice.
Are you referring to Cantor this morning on Squawk? What?
Nice guy.
He did say that the judge missed an opportunity to make a bold statement.
Right, you see, and I kind of felt that he'd make that opportunity. But how did I get that? From Jonathan, whom I like very much. He's from Paul Weiss. He's a great guy. And sometimes you think, well, you know what? It could be like that.
Yes.
And I do like him very much for a lot of different reasons, because his second case, I think, is the case that he brought, I think is good. But I think that people have to recognize that before the case, Apple pays. After the case, you pay Apple.
You pay Apple.
Alphabet's good. They're doing a great job. I like Alphabet for YouTube. I like Alphabet for Waymo. A lot of reasons I like Alphabet, and I don't want them to lose Chrome. That could have been bad. But I just like the idea that Apple today is in a position to decide who wins. Who is the default AI system? Because I'm not going to go type in Perplexity forever.
Right.
Anthropic.
And who do you think has pole position on that front? Is it open?
It's Gemini.
Yeah. Oh, really? Gemini.
Yeah.
Because of the.
It's easiest because they wouldn't have to do much work. But I don't understand why people don't. I think the long knives are out for Apple. I also think, like, for instance, there are a lot of people who felt that this was built in. Okay, I really need information about who they speak to. Because I speak to people who didn't think it was built.
The decision.
Yeah.
That some people feel this was not a surprise.
Shock.
Yes, of course.
It was a shock.
Yes.
People felt it was hush money. I mean, and by the way, 20 billion, it's like a lot more. Or people felt it's like, look, this is the way it's really done in the business. But what the judge says was, Apple is still going to have to give the stuff to Google because it's it's built in.
Yep.
Except for now, Google doesn't have to pay. Google can keep that 20 billion and become even more of a monopolist. Who thought he'd reasonably?
Right. How about, what's the fallout, do you think, from having to share data with competitors? Is that material to others?
No.
So that's really a sideshow to the things you're talking about.
Yeah, kind of read well.
Right.
By the way, I think if people want to understand how the MLMs work and how the whole he did a review. First he says, "Listen, I'm not an expert," but time you read it,
you think he's an expert?
Wow. I mean, I think it was really good exposition of how this game works. Now NVIDIA's not going up, but I felt like after I was like, "Ooh, NVIDIA, it's pretty good for NVIDIA." Right.
Well, we did crack the 50-day yesterday for the first time since.
Everyone, NVIDIA's like, but I saw a headline today which says NVIDIA beginning to shake off bad quarter, and I'm like, no, it was a good quarter. But like, the long knives are out. I mean, I have Martin Marietta Materials on tonight. They make rocks. People like rocks more than they like NVIDIA. Now, I'm thinking that's interesting, right? Because
materials was a good performing sector.
Vulcan Materials is the #1 stock over the last 100 years, and they make rocks too. So my problem is that I I still think that rocks don't have the growth that Nvidia has, but I could be way off base.
I don't know, man. There's a lot of, like, if you get building construction, road construction, you're gonna need some rocks.
No, I mean, by the way, 60% of the money's not spent yet. That from the infrastructure, they'll say that. I heard someone say that they were very worried about Macy's this morning. Well, they should go tell Macy's because Macy's isn't.
Yeah, we're going to get to Macy's pretty good comps and the quarter. We do want to touch on Lisa Cook's push, though, to stay on as Fed governor as she faces these mortgage fraud allegations. In a court filing yesterday, her legal team again urged a federal judge to rule the president's attempt to fire her unlawful and that she should remain in her role as the case is litigated.
You're fired.
Since the president has the right to fire Cook for cause. Jim, she did go into, her lawyer went into some more detail about the home in Michigan versus the second home in Georgia, and the second home in Massachusetts is how they frame it.
How many homes you got?
I think that you have to hope that she has to hope that what they say is, yeah, but no matter what, this does not, that doesn't impact. Somehow they're not allowed to go after her because that would be against the carve out. I don't know. I mean, look, this is, if you buy homes, there's a protocol. But I do think that the carve-out seems like I still can get a hold.
The other part of the argument is that this was on background forms during her confirmation process, and if there had been questions, either White House advisors at the time or senators could have raised them.
I guess so. I don't know. Yeah, I think that's absolutely true. I don't think you look the other way, but I do think, look, the process is very difficult. Because you have to say what your primary is, what your secondary, and I don't know the situation of when it changed and what it did. That's in the documents. I don't have it like that.
Yeah. Meantime, Steve Lee's been trying to get Waller to comment on this stuff. Didn't get very far. Although he gave a couple answers on rate cuts, but maybe we should listen to the one on Fed independence as well. Here's Waller on Squawk from earlier this morning.
The independence of the Fed is critical for everything we do, and there are things that are going on that make people worried, but I still believe that we have an independent Fed. People that are appointed will behave that way and act in an apolitical fashion. So I think no matter what, the Fed will maintain its independence.
Said he hasn't interviewed yet, although we think the Treasury Secretary is going to start interviews Friday. Jimmy clearly thinks tariffs are a tax and that they are going to slow growth, and that they might represent some near-term inflation push, but that the Fed needs to look through that to the part that will be about slower growth, not faster.
Yeah, look, when you speak to the retailers, they're all speaking of it as one time. Look, I'll tell you, I had an issue when yesterday, Signet. Okay, now that's Zales and that's Kay and Jared. And India is where they source. But I
think it's like half their merch is from India.
But they didn't cut numbers. They raised numbers. So there's a lot of companies that I think are handling this very well. So I'm not, look, is it inflationary? Yeah, but yesterday was a day where people were saying, wow, this is really going to hurt us. Before, everyone, when they first put them in, said, well, they're going to hurt us. I mean, you can't have it both ways. There's a lot of anti-Trump stuff. The tariffs are raising a lot of money. And so if you take that money away, then people think that's what causes the 30-year to go to 5.25. So you can't have it both ways. You can't hate Trump for the tariffs, then hate Trump because there's no tariffs. If the court, if they say that that tariffs, I don't understand how you can have it both ways, but only if you hate Trump, no matter what he does.
Well, I think it's more a matter of where the tariff money is coming from, right? I mean, if he argues it's other governments, most economists agree it's a small percentage, actually, that's being paid by foreign
I just keep thinking, like, even the biggest, like Apple, they can move things around. Apple's the toughest one because of China, but because we don't know what's going to happen with China. I mean, China it's like the axis of the 1951 with North Korea invading South Korea.
Well, and they have this military parade this week. Putin and Kim Jong-un in attendance. The president yesterday accusing Xi of plotting with Putin and Kim to conspire against the United States.
Well, I think the president is wise to know that this is a country that's run by the PLA. It's run by the People's Liberation Army. It used to be run by people who were a little more attuned to the world order. Now it's run by the military. And people don't talk about it like that because it's pretty naked, but I think they will be talking about it very soon.
Meantime, we're getting some comments a few moments ago from St. Louis Fed President Musalem. A voter says recent data have increased my perception of downside risks to the labor market. Core inflation running closer to 3 than 2, reflecting some tariff effects. He says tariffs will work through the economy over the next 2 to 3 quarters. The inflation impact to fade, he says, after that. Inflation to reach the 2% target in the second half of 26, and says that there are some risks higher inflation could be persistent. Policy must be based on evolving economic outlook and balance of risks. He did not comment on possible rate cuts at the next Fed meeting. But Jim, you put that together with Hammock and a few others, and a growing sense that we will be living with this for at least another half a year.
But we do have a K economy, where the top part is not being hurt. The wealthy people aren't being hurt, but there are 1,000 billionaires. Did you see that? Wow, that was even more than when Lenin came in Russia. But you have the K thing where it's like the top is people who are oblivious, okay? And then the bottom are the people who can't afford Chipotle.
Right. Now, how many times have we gone through the percent of wealth in this country that's owned by the top 10%, top 1%?
I mean, look at McDonald's. They did have to take this back. Now, it's entirely possible. I have Salesforce on tonight. And Salesforce is talking about layoffs because of AI. Those are expensive people. We know there's layoffs for the government. Let's put it this way. Who's hiring? Tell me who's hiring. I read that MSNBC's hiring, but that might have been traded.
We are going to get some labor data today in JOLTS, which will be important to look at. Jim mentions Chipotle, got some sell-side research on that name.
Yeah, finally there's someone down here who says it's fine. That $28 chicken burrito bowl I had's a lot, but maybe I should have just gone and picked it up and not give the DoorDash so much money. Look, I think that Chipotle is down to a level where it's still got a high price earnings low. Not that I want to go out and buy Cracker Barrel. That guy shouldn't have been there. He should have been there. I don't know. I mean, Julie is pretty fun. She's good. I mean, he's the CEO of Cracker Barrel. But I look at, I think that it's still too early to buy Chipotle because the upper part of the K is not as big as the lower.
Yes. We'll get to some of the other retail moves, including Macy's, Dollar Tree, Campbell's. We've got some auto numbers on the way as well. Take a look at futures. More Squawk on the Street. Back in a moment.
12 more minutes to go. Here's my slippers. $11 more minutes to go. Oh, yeah. Well, wonder why that's still up there. What's going on here? Time and sales going on. What's going on? Are we having issues with Mertrade? Come on, you idiot. Or I mean Schwab. We have 9 more minutes to go. La-ti-da. Okay, I think we'll consolidate. We're resistance to break on the SPY. Good morning, everybody. Yeah. Good morning, YouTubers. Oh, Don doing a shuffle this morning. Got the family today. Sounds like you're farting, Dun Dun. Dun 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 dun. We have 4 minutes left. Thank you, Dun Dun. I love you. For that, you're gonna like. I'm gonna say good morning to you, baby. Can I fly you to America? It's the Dun 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 Shuffle. Well, support is 640.69, and then we got the 200s right here. So we'll check to see what goes on there. Yeah. $642. What is that? Resistance on the 642.28. Yeah, that's right about resistance right there. Pulled right back to that support level. Okay, we got less than a minute, and my platform's not up. We got Google last night and Apple. The Apple's pulled back. Turn that down. And here we go. We're off to the races.
Is to prevent that from happening. Stay diversified. Areas that are doing well.
Ooh, what was that? AMD already have knife. We're at support on AMD. We could see the VWAP on the /ES. We had a huge gap up on the SPX. $22. So it's probably going to come down. Things acted slow this morning. See what happens here at the VWAP. Ten contracts on the SPY at 643 strike. We got a bull flag breakout. The 643s are could have scalped in for a buck right there for $100. We got a small megaphone. With a falling wedge. I could see 642 today. These calls, I didn't get in them, but they went up 22 cents, 23 cents. On them two candles. 25, more or less. We can have it come down and hit this one more time. And there'd be a 1, 2, 3, a 1, 2, 3, 4. So if we come down and hit this one more time and come back up, we might break out to that 643.77. One more fat candle. We're at the V-block. Dadgummit. I didn't want it to do that. Wanted to wait. Now we're at number 4. We're back to the VWAP. Could have got 2 scalps out of that already. Okay, get ready. This peak line's the VWAP, just in case you people on YouTube are curious. We're about ready to jump in this thing. See if it holds support here. 106. What about now? Come on. There it is. 1.08. We're at 114, 115. You're at resistance right now, so you either sell it. I'm up $100. There's 120. Finally got my 3. Macy's rallies after earnings beat. I got the vote in. I think about getting out of this trade and waiting. This thing don't do nothing real fast. I should have got out at 120. If it will let me. Where is it? Let's go. 110. We're at the 200. Been acting as resistance. Come on, push it. The longer you wait, the less chance you have. We're going to go down. Hims is up a couple bucks. No big runners yet. Meta's up $2. There's the drop. Right about where I said it would go. CrowdStrike down $5. It's still way overbought. Same as Netflix. Now, .78. I'm even. Today's loser is Starbucks down 230. Okay, I'm at 99, so I'm going to sell these babies right about now here at 108. Bingo, I'm out. 108, 112. Thank you. Off to the beach, where all the chicks are in reach. Dun dun. Come to Papa. Ditch your boyfriend, Dan Dan. Jimmy called AMD this morning, reversed. NVIDIA hit the 200. Hammer, inverted hammer, boom. Tweezer bottom, boom. It reminded me of James. Good job, matey. We're pulled back here again. Boeing at 233 down $3. CrowdStrike down 6, almost 7. Anybody ever been in Charlotte Airport? Customer service there sucks. They directed me 3 different ways. I said, where in the hell am I going? Needs a makeover. They need a new airport, something. Slash ES is pulling back. We got a megaphone on it too. Prepare ye in the name of the Lord. 1, 2, 3. Let's look at the SPX. SPX today on the 3rd. The strike is 64.50. Two of them. We're at 370, 380. Jim, show us that megaphone. Okay. I'll do that. I'll do that. Kind of a megaphone. Ah. One, two, three. Tweezer bottom and a hammer. Jim, we missed you when you were in Punta Cana. And I apologize for not donating to your trip. SPX. Calls. Scalping. Lotto. If you'd have donated to my trip, I might went and saw the monkeys. Strike, $64.50 at $3.40. Tight stop, indeed. Next time you go, Jim, I'll pay for your trip. Risky. Come on, baby. Jolts in 1 minute? Oh shit. I forgot. That's not good. I'm gonna get out of this trade. I don't trust it. Damn it. Stay long. Okay. I only got 2 contracts, so what the hell. Where's Sue at? We could hit the 200 on the SPX. Come on, baby. Bounce. Jolts is in. Whoop. Uh-oh. Yabba dabba doo, said the monkey to the chimp. We're at the VWAP on the /ES. And we're at the 21. Come on, baby. Did I tell you about when I was on the airplane, a gentleman asked me, Jesus, if he could sit by his wife? I gave up my seat so his wife could sit next to him. Do you think that was a good gesture? $4.40, baby. Say what? Get ready to sell this baby. $4.60. Thank you, Randy. I'll buy your next vacation. Oh my darling, oh my darling, oh my darling Clementine. Oh my darling, oh my darling, oh my darling Clementine. Do for forever, oh my darling Clementine. Google. I got some old trend lines on Google. Google just said it broke a double top. Google just broke a double top. Alex, coffee. I want to see Nicole. I haven't seen her cleavage in a week. Miss Peplini. Tesla's moving up on the pullback. Oh God, 480. I just left 80 bucks on it. Well, not 80, but. Ooh. Okay, we're at resistance. Downward megaphone pattern. Oh, yeah. We've established an ORV on the SPX at 6445.82. And we've got a downwards megaphone. And the crowd's going wild here at the sports arena. Jimmy was wrong. I'm never wrong. Well, I was still in the right call. I was in calls though, wasn't I? I went against my odds. I didn't even think about the job votes when I took the trade. I probably wouldn't have took it. We have a double top on AMD. I know I voted the other way. Yeah, kind of funny, you know. Okay, we look a little bullish here. Okay. Oh my gosh. Trying to figure out what tonight was. What is today? Wednesday? Yeah. There's $4.70. Jimmy said we look bullish. Now we've hit the megaphone up to the top. Could have jumped in them at 360. But I didn't. I want Caroline back. I miss her so much. I fell in love with her. The first day I ever saw her. It was that freckle. When she exposed the freckle to me, I just fell in love. Now she's gone. We need to make a poll in the room. Who misses Caroline's freckle? Yes or no? Michelle probably misses it. Hewlett Packard, earnings after close. There's the knife. Get ready. $2.70. We're off to 63. Zippity doo dah, zippity day. SPX, trade it my way. 64.50 at $2.70. Initial jobs claims came in a little late. SPX, are you coming? Stunning around this all over town, walking in the winter wonderland. It's a 6450 calls at $2.70. It's a falling megaphone. I hope I make enough to pay my rents. Up to 63. EMA. We could easily fall down and hit them other two numbers. So if this thing don't hold, the megaphone, I jump out and I don't have that many. I could wait, see if we hit, but that's a pretty good drop. If you can count to 4, you can make a little bit more. One bits, 2 bits, freebie, and 4 bits. Uno, dos, tres, cuatros. Uno, dos, tres, cuatros. Hola. Mexico, I use the word hola, and I use the word hola in Punta Cana. I told this Brazilian girl she was beautiful, and she says, I don't speak English. I said, well, shit. You're perfect. I don't speak English. Smooch, smooch. Oh, I understand that. Come to my room. Come on, baby. Right now it's not doing much. Kind of just stalled out. I don't know if I should just sell them and wait. Could be a cheapie. I'm in megaphone. Sit here. I'm megaphone. This is risky. I'm in a risky trade. So time will tell. Risking it for the biscuit. Now, if I could have bought them at 230 and added on, and I'd be out of the trade by now. You know, I added 4. There's 290. Now we're talking. Uh-oh. $3.40. Woo, $3.70. It's that. Did anybody have the balls to jump in this trade with Bobo? I'm out at 370. I'll take that $300 any day. I get an A+. $4.30, baby. You got anything to say about that? Magnificent. All right. Well, uno, dos, tres, cuatros. If you can count to cuatros, you can trade with me. If you count to cuatros, you might make a little bit matros. $4.70. Can you believe that? How disgusting. Well, shit. $5? You gotta be kidding me. Back to the top of the megaphone. Uno, dos, tres, cuatros. Yep. Uno. Come on, bitch. Where's my circles at? Uno. And that's dos, tres, cuatros, seis. Uno, dos, tres, cuatro, cinco. Or is it uno, dos, tres, cuatro, seis? What's number 5? Siete? Number 5 in Mexican. Okay. 5 in Spanish. Cinco. Uno, dos, tres, cuatro, cinco. Jim, thanks for educating me in Spanish. This room is so exciting. Cinco. Oh, Michelle. Ocho, nave. Wow, I'm impressed. Very impressed. Well, $4.60. That'd have been a good trade right there. I could have hit my limit. Especially if I'd added on at 230. Uno, dos, tres, cuatro, seis, siete, ocho, nueve, diez, diez.
Uno, dos, tres, cuatro, cinco, seis, siete, ocho, nueve, 10.
10.
Uno, dos, tres, cuatro, cinco, seis, siete, ocho, nueve, 10. Uno,
Uno,
dos,
dos,
tres,
tres,
cuatro,
cuatro,
cinco,
cinco,
seis,
seis,
siete,
siete,
ocho,
ocho,
nueve,
nueve,
10.
10. We're now at $5.20. I left a good $400 on the table. For 500. It's not supposed to work like that. Ucho. It's okay, Jim. We still respect you. I told that girl, I said, "You're beautiful. I don't speak English." I thought that was so funny. I had the nerve to pick up on a Brazilian. I don't speak English.
There are jobs waiting for that do lead to disruptions within the labor market long term.
Okay. Certainly something to keep an eye on, and such a crucial week as far as some of that jobs data is concerned. Thank you so much, Noah, for joining us on the Schwab Network. Noah Yosef, who's the Chief Economist and Head of Research, American Staffing Association. Appreciate your time. Coming up next is the Chartmaster, and we will dissect analyst calls for Wynn Resorts, Chipotle, and Constellation Brands. Morning Trade Live. We'll be right back.
No politics, no noise. No
We're back down to 340.
Available anytime, anywhere, on any device for free. Schwab Network.
Trading at Schwab is now powered by
So that's the 5-minute right there. Uno, dos, tres, cuatro, seis. Oh, darn it.
3, 4, 5, 6, 7.
Siete. Next time I go on a trip like that, I want to at least know how to count to 10. And say you're beautiful and whatever the English Belize is. I bet you if I said that in Belize, she would have said, oh. This is an interesting trade. We're back to 520, so 360 to 520 would have been that trade. If I'd have got, if it would have let me have 360. Wynn Resorts up next. $5.40. Are we going to double top the orb? That's the question. go put my soup in the microwave. Grab some water at least. Jenny looks like she's lost weight since I've been gone. This is plumb gross. Especially standing next to, he's lost weight too. He's lost a lot of weight.
A sharp spike to the downside during our tariff news shock, but then price has pushed above that level. Then it found another persistent ceiling here at our dark green line just above 112. Now the breakout has happened once again. So from here, we could say you could draw a trend line going across our lows here, connecting these 3 points. If you were to duplicate it, you would find it matches up fairly cleanly with those highs here. That's about where we are now. So by that measure, we are at a potential resistance point here. While we don't have any prior price action, this is a tool that you can sometimes use to give yourself potential guide.
So he's following my 1, 2, 3 theory.
127, 126, that general area here. However, if we were to look at the RSI, our measure of momentum, we can see that this downward sloping line here shows that we were seeing waning price activity. The pace of the gains was starting to slow down here, but now we have broken above that red line. We have pushed into the overbought area once again here, typically regarded as a sign of strength in a trending market. So if we were to consider our other studies here, well, we're in relatively, uncharted territory, not to, make a pun or anything, but we can see we don't have any good prior price activity to go off of here. So we can try to use standard deviation channels here.
Yep.
We have our blue linear regression line down here. That's our line of best fit. And then 1, 2 standard deviations to the upside gives us a potential supportive area at our orange line near about 124. The +3 channel comes in just below 136 as well. So some potential areas to look out for to the upside.
I used to use the linear channel, standard deviation.
112 or so, our green line, our old ceiling, that really stands out as potential support. You can also see the volume node that developed there. So that would be an area many bulls might have their eyes on.
Okay, that's a look at Wynn Resorts, and we've also got another.
He's a good chartist.
To the upside today.
I have to say it. He's one of the best.
Jenny, what do you think?
Not as good as me, but
Finally, some analyst optimism to just.
he's good. Jenny, you're so damn skinny.
Reporting about 4% contraction actually for same-store sales, with also then transactions down, or visits at least, also down about another 4.9%, while actually the average ticket size did modestly increase by about less than 1%. So that would then tell you that less people are going to Chipotle, while also still having to pay a bit more because price increases right now are being somewhat navigated by the entire industry as a whole. But I do think right now the value-seeking consumer
We just now hit the orb.
for something that is seen as more of a discount, which frankly.
We just hit the orb with a double top. So I don't know what we're going to do here. But it's just, I could have stayed in them. If you can count to 4, you might make a little bit more. There's no way I would have stayed in them. Because once we hit this resistance, I would have definitely got out of it. But it might have jumped back in on the pullback to the bottom of the orb, which is opening. Today's the 3rd. Does it want to break? Google gets reprieve on antitrust case. Terms futures mixed pre-bell. $6. I have 6449.17 as resistance beyond the orb. I'm going to go put my soup in the microwave and I'll be right back. Oh God. No. Almost a 300% trade right there. Dadgum. So that would have been, fudge, that'd have been $2,000. That would have been $2,000. And then if I'd have doubled down, That'd have been $4,000, almost $5,000 at 2:30. Jim, I love your megaphone pattern. Not too many traders know what that is. I've never heard anybody call out the megaphone, or out of all the traders I've known. Ain't that right, Randy? Say yes. You know anybody that calls out the megaphone?
It didn't happen.
Anybody know it? I had, even Mike disagreed with me. Never heard of that. I know a soup I want to master. I'm going to make some French onion soup. I had some of that. I don't think I've ever had it. Okay, well, if we're going to get crazy here, I'm going to move these calls down. To 64.60s. Never fails, huh? Puts aren't that no? Yeah? No? Not really. They're about the same. Well, yeah, they are. Puts are more expensive. I wish I was still in these suckers. God. $9. Oh, George. I haven't seen you in a while.
But if you actually consider the longer-term trend for job openings and turnover rates, we're...
George. Ain't he handsome? George. We just got a new high on the SPX at $4. The 6460s have put out 420. I'm getting ready to have my soup. I had some of this here soup. This was good soup. Jimmy will show a picture of it. Minestrone in the Italian restaurant. Oh, this bird right here. This guy didn't like me too well. He got pissed at me, actually. He kept trying to steal cookies in the buffet. I chased him down. He got mad, boy. Is that bird right there? Come on. He'd always come flying in every morning, and he'd get right where I was. The restaurant was open. There was no windows, no air conditioning. It was cool. I mean, I'm surprised it didn't get real hot in there. I never noticed any discomfort. But none of the buildings had air conditioning, but our rooms. He didn't like me. You get a little bitty scalps out of this thing. I want to wait for a bigger drop. There's the drop. Are we going to hold the previous resistance? That's the question. They're $3.10. Might be a little risky here. Could have sold it at 70. But it comes back up and squeezes. The 9's still above the 21. Ha ha! Mm. $360. I can get out $50. 3 contracts. $150. There's 360. There's 60. I'll take it. Can you give me more? I don't think so. $3.60. Oh, there it is. I think I can get more. Ladies and gentlemen, I will take it to the limit one more time. Take it to the limit, out at 390. Oh yeah, it'll be peace in the valley for me someday. Woke up in the morning, went down to the beach, grabbed me a cappuccino. It was all in reach, and the sun started to rise. What a big surprise as I sip on my cappuccino. You're so beautiful, girl. Let's go walk up and down the beach. Oh yeah. The singing day trader strikes again. Alex Coffey's talking about Google.
Driver on these phones. That said, they are still able to make some payments, and so that's why you see not only Alphabet reaction higher, but also Apple move higher. So they can't have exclusive contracts, but that means they can't pay for play just a little bit. One of the things I thought was very interesting in the judgment, Judge Amit Mehta wrote, the emergence of Gen AI has changed the course of this case. And I think that that's both interesting, but also honest and probably accurate and true, which is Alphabet's Google platform had a dominant position, still has a dominant position, but you look at sort of how AI has leveled that playing field and really allowed for new services. If you use the X platform, maybe you use Grok to ask it some questions that you used to put on Google. Maybe if you use ChatGPT, you would ask ChatGPT. And so you're starting to see how some of these technologies have disrupted a really, really strong market position. That said, today's news, optimistic, and it's really driving the market action. We saw it happen after the close yesterday.
Yeah, you know, at Alphabet, I'm looking right now at the chart up more than 8.5%, Apple up about 3%. How has the analyst reaction been?
Oh, so many analyst reactions. I'll go through a few of them. Morgan Stanley highlights this as a near best case scenario for Apple. And of course, we know that the story for Alphabet is at least clear. I don't think that breaking up the company would have been net negative necessarily for shareholders in the long run. They're going to be paid for it, but we don't have to worry about that now. When you look at JP Morgan, these remedies remove the overhang on Apple. Deutsche Bank, huge price target increase for
Back to
Alphabet,
320.
215 to 260. Wedbush, similar. This is not Dan Ives, but Scott Devitt over at Wedbush, 225 to 245. Obviously, still has the outperform rating. And then finally, D.A. Davidson. The antitrust decision is a huge win for shareholders for Alphabet. So,
Well, they're really pumping Google.
probably the time when the market really needed it too. We started to see a little bit of a shaky trade yesterday, and a nice turnaround led by two of the market's generals.
And we're looking for a catalyst yesterday, and it looks like this morning we've got one. Alex Coffey, thanks for breaking that down for us as a senior equities contributor here on the Schwab Network. And we'll get some insights now on
This girl's got too much
shaping the
pull.
markets outside of the Google Trust. And now for that, we'll bring in Sam Stovall. He's the chief investment strategist at CFRA. Sam, thank you for joining us this morning. Now, just general thoughts on the weakness that we've seen to start the week, although as Alex and I were just discussing, we did get a small boost off of this DOJ ruling.
Well, good morning, Marley. Yeah, yesterday's performance was pretty much exact on target with what traditionally happens on a sector level in September, going back to 1990. The three sectors that posted positive returns were your old-style telecom companies, you know, in a sense, AT&T and the integrated telecoms, healthcare, as well as energy, and those dipping slightly were utilities as well as consumer staples. So clearly yesterday was
320 to $4.
Safety trade as investors worried about an uptick in the 10-year yield, worried about re-injection of confusion regarding the tariff situation, et cetera. And so September just did not get off to a good foot.
And as far as your forecast for the rest of the year, you know, how do you project the market moving as we head through September and then into the later months?
I think that while we are most likely to see down arrows in September, I'm expecting to get the positive return that we traditionally see in the fourth quarter. The market has gained more than 80% of the time in the fourth quarter versus an average of 60% of the time in the first three quarters. Also, we set 20 new
That's good soup, man. That's the last of it. I got to make a new batch.
We are down slightly in September, but then up an average of 5.5% in the final months of the year. So likely that we're going to be having the positive outlook, animal spirits kick in once again to close out the year.
And as far as the Fed goes, we're constantly talking about this September meeting. I'm just looking at the Fed Watch tool, now pricing at almost a 96% chance of a cut in September. What is your outlook, moving forward, especially, we got jolts this morning, but with non-farm payrolls coming out, do you anticipate another cut this year? What's your anticipation, your base case for the rest of the cycle?
Our base case is 2 cuts for the rest of this year. One of 25 basis points in September. The Fed will sit pat and look at economic data at the October meeting. But
the NASDAQ's up 231 points.
Granted, the market has to run a gauntlet of potentially challenging economic indicators. This Friday's employment report, followed by the 2 inflationary reports of CPI and PPI. Retail sales, industrial production. There's an awful lot out there that could cause some concerns for investors, but our belief is that the Fed is far enough along the way that they will cut, at least in September and likely again in December.
God, I don't even want 643 on the calls.
We've already seen the cracks in the labor market. We're continuing to get slightly softer data. Inflation outlook, though, is sort of the one we're waiting on with some more added now tariff uncertainty with the latest ruling.
$1.39.42.
Change for
These
you
are.
to think that the Fed would not stay that course.
Well, I guess there are 2 ways that the Fed could move. Either become more aggressive with rate cuts and cut 3 times between now and the end of the year, which we don't anticipate because CPI and PPI are likely to remain fairly firm, even though we do think we could see numbers that are equal to prior months or even slightly softer. And so if, however, we find that these inflation data are being hotter than we anticipated, then we could see the Fed only cut once or maybe even not cut at all. So really, there is a pivot point right now.
And Sam, I think we just lost you there for a moment, but we were just discussing the Fed now. The market's pricing in a 96% chance of a cut in September here as we hope to get Sam back. But, we did get the JOLTS report out this morning. Job openings edged slightly lower.
Sam.
July here. But we are not getting.
Where are you, buddy?
And thank you so much to Sam Stovall from CFRA. Thank you for joining us today. We have plenty more to come here on Trading 360. Next, we've got the big three stocks, 3 charts, and 3 trades. Rick Ducat will go to the technicals, and Don Kaufman will be joining us to take us through the trades for ExxonMobil, McDonald's, and Intel. That's next on Trading 360 on Schwab Network.
I want Caroline back. Google has a double top. I wish I still had my shares. The SPXs are at $2.95 and $3. I will wait. Tip can go take a small little nap. Okay, here we go. We're getting back to the orb. Come on, baby, drop. Hit 63. You get these at 185. Prepare ye in the name of the Lord. Prepare ye. There it is. There it is. Okay, the crowd's going wild here. 185, come on. 190. Come on. Come on. 185. Num. Num num. SPX. The 64 calls. Scalping. The 6460s at $1.90. It hit 85. $2.05. I'm up $15 a contract. Okay. We got a 1, 2, 3 coming down here, and we got a little wall, the 9. Oh man, my knees are killing me. I got 5 contracts. McDonald's. Uh-oh. Three black crows. Come on. I didn't add on. I should have. 130, 125 at least. Intel, what, you got our Intel coming out?
A turn after earnings, we had a big swing to the downside that brought us to these previous lows, but then price rallied, took us back up to these old highs. So now we kind of
off news.
We find ourselves back within our pattern that we established before. It was kind of all, now that things have shaken out, we're kind of right back where we started in some ways here. So now the place to watch, 23.90 to be a little bit more specific, was this high point here. You could call it 24. High points here, and that's kind of roughly where we're finding support. It's a little bit messier here, but now very close to the downside. We have a confluence of our two moving averages, yellow 21-day, purple 252-day exponential moving averages right at 2350. So this confluence, more sets of eyes on these particular indicators lining up at the same level, could be a notable point to watch out for. We can also see too, 2250, our lighter green line, high point, low points here, matches up with the 63 EMA. So we have some added emphasis on these levels based on our moving averages here. But when we do look at our other picture here that overlays our other studies, we can see our volume node here lines up with our moving average confluence, but then right about where we are now, there's this smaller node area. Volume really thins out again, as we said before, once we get above that 25 level. So beware of fast moving prices if we do break to the upside. But for now, a bit of a holding pattern here, stuck at this volume node area.
All right, Don, coming back to you for final thoughts here on Intel or on any of our big three today.
You know, really, when it comes to Intel or really any of these underlyings, it's about tech. It continues to be about tech. It continues to be about the AI trade. And the AI trade is not, just about AI or tech. It's about the entire S&P 500. If you look at today, it is an absolutely perfect example. There are 70 stocks down in the S&P 100. 70 stocks are to the downside, but the S&Ps are up 30. It's all tech all the time. The trade to be watching very, very carefully right now is AI starting to come apart. Is NVIDIA at the forefront of that, flirting with that 170 level? And that's going
starting to come apart.
The critical juncture that we're going to see not only later this week, but into next week.
You're wrong, buddy.
Though is going to be here to stay. It's being called into question, the entire AI trade, which really should resonate right through the entire S&P 500.
The chips are pulling back.
The co-founder of Theo Trade, and Rick Ducat, our chart master. Thank you to both of you for being here today for the big.
Yeah, we'll go take a nap.
Next, we're going to spotlight the state of the stock market in Mexico with the CEO
Just short
of the
one.
Mexican Stock Exchange. Stick around, Trading 360. We'll be right back.
Morning Movers brings traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern, Morning Movers, only on Schwab Network.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips
I'll
and
be
tricks
back
to
soon.
navigate Schwab.com, Thinkorswim, and mobile-based platforms.
It's going to take a 10, 15 minute nap.
You can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Welcome back to Trading 360. I'm Marlon Caden, filling in for Diane King Hall. It's time to spotlight the Mexican Stock Exchange and investing opportunities in Mexico. Joining us now from the floor of the New York Stock Exchange is Jorge Alegria, the CEO of the Mexican Stock Exchange, Bolsa Mexicana de Valores. Jorge, thank you for being with us this morning. The Mexican Stock Exchange is up about 20% year to date, almost double the gains for the S&P 500. What's the primary driver behind this?
Well, thank you very much, Marley. Basically, I think we have
See if we bounce off the 200 here.
A flow from global investors as well as Mexican investors looking for valuation and diversification after maybe spending 5 or more years more concentrated in developed markets. I think we are seeing this shift to emerging markets, and Mexico has been benefited from that. That's the main reason why.
We've certainly seen an expansion into international markets and more emerging markets, and I know that BMV has been working hard to make itself more attractive. Part of that is the expanded partnership that you have with NASDAQ. What does that mean for the exchange?
Well, if we want to attract international participants as well, we need to adopt with international technology. So we have this partnership with NASDAQ to upgrade all our post-trade division in order to provide better services on custody, settlements and everything, which is a very important part when dealing with international participants. That's our main relationship with NASDAQ, although we are also exploring opportunities for front technology for derivatives as well.
And why is that next-gen post-trading platform so important for BMV and its modernization?
Well, as you know, risk management is quite important, and one of the key pieces is not only the depository for securities to have the safety for international investors, but also risk management-wise, we are offering central counterparty services, CCP, which are now offering risk management tools and counterparty services for international players that basically are seeing this as a very safe environment to trade in Mexico with counterparty risk almost reduced. So that's very important, and obviously the technology to handle that with state-of-the-art technology from international markets is important for us.
And in addition to adding some of this new technology, you have this new modernization blueprint and tie-in with your NASDAQ, exploring with a partnership with AWS. Why is cloud infrastructure and its role so important in Mexico's financial structure?
I think it's also related to all the upgrade. It has to do not only with the software itself, but also with all the communications and access security. And we found that the cloud and to use all this technology through AWS has been also extremely efficient and important to provide great services not only for the international community but also for the domestic market, and it's very efficient to also grow, and it allows us to grow more and faster as needed, because this is the expansion we are planning for the exchange in the coming years, and do this through the cloud with AWS and NASDAQ is the most efficient way for us.
And as you look to expand and grow these partnerships, what are some of the evolving needs that you're seeing, not just of your local, but also of your international customers?
Well, we are now working not only with the Mexican investor base, but as you mentioned, with international customers. They are looking for diversification, and we also have futures on the main index. We have options as well for hedging, and a very active FX market that allows free flows in and out from international investors into Mexico, and that has been key for getting international attention, not only on the equity segment that I'm representing, but also the fixed income world, as well as I mentioned before on the derivative side as well.
And so you mentioned those futures contracts. I know you have the E-mini S&P 500 IPC index trading in a partnership with the CME. What does that expanded access mean for BMV?
The IPC Dow Jones SP index now is listed in CME as well. We provided a license to CME, and basically what it provides is access 23 hours, 6 days a week to get exposure and hedging to the Mexican equity market. So for us, it's important to reach international players that will be accessing Mexico more efficiently through these kind of partnerships with other exchanges, in this case like CME, through the futures market. In a way, it's difficult for a Mexican exchange or Mexican clearing members, Mexican participants, to have the reach of this huge diversification or a distribution network as other exchanges like CME in this case. And with these partnerships, we get access, and we are able to put our product in front of more players in a very efficient way. We get the flow and the trading on the future side, but also very importantly on the cash side. When these global investors, they need to hedge, they go to the Mexican Stock Exchange as well to hedge the risk on the derivative side. So it's a win-win relationship, and it creates liquidity in the whole ecosystem of FX, cash equities, and futures.
And in addition to what we've already talked about, Jorge, what are some of the other innovations that BMV has added or is exploring?
We are focusing also on data. We are to provide a retail access. The Mexican market has been growing a lot for retail. We went just mainly from 300,000 accounts 5 years ago to 20 million accounts in just 5 years. So retail is booming in Mexico. We need to provide access efficiently to that retail accounts that basically are now investing in mutual funds. We need them also to move to trade directly into securities in the exchange, and market data is key for this. So we are developing all the tools on the market data side to provide access to these retail investors with better tools and better information to have them trading directly in the exchange as well. So retail is big as well.
So with all of these modernizations and innovations that you're adding to BMV, what is your vision for the future of the Mexican Stock Exchange?
We are part of the global exchange landscape, and what we want to do is to have a thriving market in terms of international players able to participate in the domestic market, but also provide domestic customers and domestic participants access to international markets. So connect liquidity among the different asset classes and the different markets is key for us, and this is where we are working with, take advantage of the Mexican economy resilience and openness that allow us to trade and to communicate with other exchanges more efficiently. So this is the way we are seeing our interaction with the rest of the world for the future of financial markets in Mexico, Marley.
We appreciate you taking the time to speak with us from the floor this morning and discuss the Mexican Stock Exchange. That's CEO Jorge Alegria from Bolsas Mexicana de Valores, the BMV. And thanks again. Coming up next, we'll have Disruptors. George Tillis will be joining us to look ahead to Salesforce's earnings, which are out after the close today. He'll preview the numbers and give us an example trade next here on Trading 360.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Welcome back to 360. I'm Marley Caden. It's now time for the Disruptors. George Tillis, our senior markets correspondent, is here with today's company, Salesforce. Salesforce trailing its large tech cap peers. They're among the 30 worst performers in the S&P 500. George, second worst performer on the Dow this year, but they do report earnings after the close today. So what are you expecting from the report?
Well, I think, the expectations are actually quite modest, I would say, looking at Salesforce, but you're right. If you look at it year to date, it's been a serial underperformer. I'm going to throw that in the same stack as Adobe. So these are a couple of the, enterprise software and application software suite companies that have not underperformed or have underperformed, but are really legacy players. Both of them, of course, for different reasons. But looking at Salesforce, I think some of the aspects of the business include and challenges include higher capital expenditure costs because of artificial intelligence integration, and also the expansion, I think, of Salesforce's business. It's not just CRM or customer relations management software suite, which is a large market share, about 25% of the global markets, competing with companies like SAP out of Germany. But nonetheless, the Commerce Cloud and Marketing Cloud part of their businesses, the data visualization and data management aspects of the business have actually been growing through inorganic means. But the other thing is recently, going back to May of this year, they made another acquisition of Informatica, which is another data management software company, for about $8 billion. So I think things soured from an investment standpoint since that particular acquisition. You have to consider also, Marley, that this is about the 40th large acquisition the company has made since 2009. So anytime there's progress and scale, and of course integrating all these different businesses with Salesforce, they keep expanding horizontally through acquisitions. But nonetheless, if you look at the EPS estimates, like I said earlier, they seem to be rather modest. The estimates for earnings, $2.75. These are numbers that are expected to be only higher by 9% compared to the same quarter last year, while sales are expected to be around $10.14 billion, up 8.5% compared to the same quarter last year, where the company earned $9.33 billion in sales. The reason I say modest is because if you look at the 5-year averages for both sales and earnings for Salesforce, they are actually in the mid to high teens. So it's trading basically at half its growth rate right now, but also half of its earnings multiple based on a historical basis. And I think that's maybe why it's been drifting sort of sideways or stationary after it initially declined, and hasn't participated since the April rally we've seen in the markets. I think the analysts are waiting for some updates in terms of their AI management progress, but also their acquisition strategy.
It's so interesting, George, that you bring up likening it to Adobe, because we used to liken Salesforce to Oracle. Now, Oracle outperforming the market and the major indices, whereas Salesforce down 25% on the year coming into earnings. All that said, can you take us through your example trade?
Sure. So if you take a look at the context of the stock, obviously year to date it's down quite a bit, but I like to zoom out and look at some of the higher level chart patterns. And if you notice on the 3-year weekly chart, the stock seems to be nestled right between the 200-week moving average below the current price, which is approximately $230, and then the 100-week moving average, which is above the current price at around $274, $275, just roughly speaking. Those levels also coincidentally correspond to the market maker move based on the one standard deviation expectation of where the stock will trade out by expiration on Friday is around $19. So these levels on the chart are higher, both on the high side and low side, or wider than the market maker move. So this gives us a more flexibility. So I think that if we consider a trade, we have to consider these range-bound levels. So I'm going to structure an iron condor, which is a neutral strategy, but I'm going to narrow down the time frame because the implied volatilities in 2 days expiration are quite high because of the expected move. So I'm going to sell right around those levels I mentioned, the 275, 280 call spread that's above the current price, and then below the current price I'm going to sell the 235, 230 put spread. So altogether, you could harvest about $2 in credit per share, or $200 a contract. So in essence, the premise behind the trade is neutrality, and that's again between 275 high and 235 low. And this premium that we're selling for credit will erode to zero very quickly. But you have to consider the break-even levels, 237 high and 277 high, forgive me. and 233 low. And then the risk in the trade is $3 for the $2 credit. And that full max loss would be achieved by expiration Friday if the stock blows out above the 280 or below the 230 low. So it's quite wide in terms of the range, slightly higher than the market maker move, which is a 1 standard deviation move. But at least we define our risk, but also reward in this strategy.
George, thanks for walking us through that earnings preview on Salesforce. Earnings expected from Salesforce out at 4 p.m. Eastern today, so we will have them here on Schwab Network. But thank you, George Tillis, for breaking that down and for the example trade as well. Coming up next, it's time for our 360 round. We'll be diving into earnings from Dollar Tree after the discount retailer topped estimates and raised guidance, but shares are lower in reaction. We'll bring our panel in to break down the report next on Trading 360.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please.
But there's a...
Carl's Way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we?
No can do.
I'll get out here.
Where are you going?
Schwab.
Schwab, a modern approach to wealth management.
Welcome back to Trading 360. It's time for the 360 round. We're taking a look at earnings for Dollar Tree. For that, let's bring in our panel. Joining us today, Arun Sundaram, the equity research analyst at CFRA Research, and Stephanie Segelski, the vice president of research and public relations at ICSC. Arun, we'll start with you. Thoughts on the report, and are you anticipating any change to your hold rating and your $97 price target?
Yeah, thanks for having me. Yeah, no, I think overall the quarter itself was solid. I think one, investors are questioning the sustainability of these results, and two, I think the stock is really down because of the outlook. Yeah, they raised their sales and EPS outlook for the year, but the EPS outlook was only raised about 2% at the midpoint. And if you actually adjust for share buybacks for this year, that actually implies the underlying earnings actually, the outlook is actually down compared to the previous outlook. So the outlook wasn't strong enough. I think that's what's sending the stock down. We haven't issued our updated earnings report yet, but we will later today with an updated target price.
So there will be an updated target price.
Yes, there'll be an update.
Okay, and Stephanie, coming to you, what were your thoughts?
You know, I think what we're saying here is a response to consumers. They are all becoming price sensitive. We're seeing even high income earners going toward those discount department stores like Target and Walmart and Dollar Tree and Dollar General. You know, we saw Dollar General's earnings come out recently as well, and we're just seeing that those sales are strong. They're, but the retailers are being cautiously optimistic as they look forward to the end of the year because of tariffs.
Yeah, and that tariff outlook is really, what seems to be driving this reaction. I'm just taking a look at shares right now, down about 6.5% following their earnings. What Arun, says is arguably a strong quarter, but that tariff impact remains. It will potentially drive up the costs, although Dollar Tree did say they expected demand to be steady, as we have seen the consumer looking to hunt for more affordable products at its store. Arun, do you think that it's just this coming quarter that we're in right now that we need to be concerned about, or is this going to potentially be a long-term issue for Dollar Tree?
Yeah, so I think so Dollar Tree over the last few years has kind of changed their pricing strategy. They don't just sell things at $1.25 floor anymore. Now they sell things at $3 price points, $5 price points. That's attracting higher income households. But I also think it's eroding the value perception that you used to see at dollar stores, because as you raise prices to these higher price points, you're introducing more competition, especially competition with the retail behemoths like Walmart, Amazon, Target, and so forth. So I think that's why investors do question the sustainability of these results. But yeah, no, I think they just finished Q2. They're in Q3 right now. I think Q3 has started off a little bit slow for Dollar Tree. That's another reason I think why they didn't raise their outlook as much as they could have. And yeah, generally I think retailers are cautiously optimistic for the rest of the year. Tariffs are going to have a bigger impact for Dollar Tree in the second half of this year. The company is right now in the midst of raising prices. They started raising prices towards the end of Q2. We'll see that more price increases in Q3 and Q4, and that could have an impact on demand. So we'll have to see.
And Stephanie, similar question, coming to you. Dollar Tree said that, when they made their adjustments, they assume that the tariff rates are going to stay in effect through the end of the year. What is your long-term outlook for Dollar Tree? Do you think that we are going to see some price erosion here and some customers leaving because the prices are getting higher than they want them to be when you have a name like Dollar Tree?
Dollar Tree.
I think that's going to depend on what other retailers do. So we're seeing other retailers respond similarly, where they are having to raise some prices. Now, Walmart or Target has more options because they can spread those prices across greater items to keep some of those necessities that consumers are looking for, those prices down. So I think that they're answering the call to the point that was just made that getting in the higher income consumer by offering more products is the right thing to do, but they are risking losing that sort of traditional Dollar Tree feel by offering more and more products. But consumers are going to continue, especially through the holiday season and as we continue this talk around tariffs, to look for bargains. I mean, we saw that in the back to school shopping, where 60% were shopping at discount stores and 45 to 50% were shopping at the dollar type stores.
And Stephanie, staying with you there, you just mentioned holiday shopping. This seems to be something that's coming up more and more with tariff impacts. Do you think that more people are going to be seeking out some of this broader offering from places like Dollar Tree and Dollar General as we come into the holidays, knowing that prices are going up?
I think they will. The number one place over the last few years, at least, that consumers have shopped have been the discount department stores like a Walmart or a Target. But we have seen an uptick in the shopping done at the Dollar Generals and the Dollar Trees because people are being price conscious, and we've lived in a highly inflationary environment since the start of the pandemic. So, people are being cautious about their dollars and where they go and how they spend them. So I think that this holiday season, we're still going to see a strong holiday because we're still seeing good retail sales, but people are going to be shopping for those discounts and looking for more. The problem is going to be for the retailers. Some retailers have already said, we're not going to offer the deep discounts that we once did because we've got a bottom line to protect as well.
Well, Dollar Tree shares down more than 7% now following their earnings release this morning. But thank you both for joining us for our 360 round today. That's Arun Sundaram from CFRA Research and Stephanie Sigelski from ICSC. And thank you to all of you for joining us on Trading 360 today. You can download the free Schwab Network app, available in the Apple App Store, and you can tune in 24/7 on schwabnetwork.com. I'm Marley Caden in for Diane King Hall today. Fast Market is next.
Goodbye.
Caroline did a better job.
Schwab Bank Investment Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features.
We're at the 200 here. We got a snake.
Management solutions, all designed for investors.
We got a setup here on the SPX. The 6450s at $1.85. We got snake, breakout, tempting pullback into a double bottom. Got a hold. It could hit the 200 EMA. Let me try something here. These are the 6450s. And 6450s at 180. Take it to the limit one more time. It's got a hold. Damn it. Come on. Got to hold here or I'm getting out. This is the 200 EMA. Oh. Come on, baby. Let's go. Oh! Oh no. What the hell's going on here? Let's go. Okay, we're at the orb. I should have added, man. I wanted to add. Again, that's 2 ads that I missed today. 150, 155. No, you didn't scare me out of adding. I was pretty confident with that 200 EMA. I just got busy doing something else and took my mind off of it. I thought about it, but I was only down like $25 and I didn't want to add on. If I was going to add, it would have been more like a little bit cheaper. So I'm okay. I'm up 25 a contract. I could sell them here, but I want to see if we break this next. Well, no, I got a 1, 2, 3. This is our next resistance. Uno, dos, tres. Uno, dos, tres, with a double bottom off the 200 EMA. And it's a falling wedge. Largemouth falling wedge. I made that up. So if anybody copies my largemouth falling wedge, they're full of shit. Oh, don't say that. I want a break. And it's losing money. Uno, dos, tres. What do you got to say, Mr. Green? Are you trying to put fear in the market?
It's actually a voting member right now, so I mean, his comments are just his comments. I'm not sure if it carries that much weight.
You want my opinion about Pow Pow? He sucks. So take that. Shove that up your butt. We are waiting. No. Oh. Looks like you're right. Be number 3 on the falling wedge. If it touches down here, I'll add, but if it don't, I won't. And I'll add 10 if we get to 120. Let's go. You can do it. Well, could have got 140, but I did again. Didn't do it. Stuck to my guns. Break it. Now we got to break this here 63. If we can get that, or I get out right now, I think we're going to break it. There's 210. Tell me when you're going to get out. 215. Come on. One of them, 2 bits, 3 bits, 4. If you can count to 4, you might make a little bit more. If you count to 3, you can trade with me. So the target of resistance no, I don't want that. Oh gosh. Jimmy, you did it again. This is your first exit idea here after the 3 soldiers. Oh, 255. Okay. Okay. There you go. 265. Jim, you're magnificent. 275. Whoop, 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 whoop. I'm out at 270. Anybody got anything to say about that? Anybody got anything to say about that? You should have held on, Jim. Very good charting, Livid Goose. Don't be scared. Oh, yeah. So that was a good trade. Now we're back at the 200. If you can count to uno, dos, tres, cuatros, you can trade with me. Uno, dos, tres, cuatros. Uno, dos, tres, cuatros. Uno, dos, tres. Prepare ye. Oh, here we go again. Get ready. Get ready. 155. The crowd doesn't know what to do. Jimmy got back in the trade. SPX 6450s at $1.55. Three black crows. That's what I want to type in. Jimmy took a small mat nap. I don't know how long I was out. Does anybody know? Didn't even look at the clock. $1.90. $1.95. $2. There's $45 a contract. Damn, he did it again. This guy, $2.15. Oh. Angel, have you ever met a character like me before? Say yes or no. Angel. Honey. Rum bum bum rum bum bum. Me and my drum. Rum bum bum. Me and my drum. Dude, come on now. You can do it. We have any Italians in this room? I don't think you know what you're doing here, Jim. So we had the falling wedge. We had the breakout with, I mean, these candles are very impressive. And I hit my target area of double top and got out of the trade. right about here. And then we came back in with 3 black crows back to the old resistance, which is now support. So we need to hold this. We had the snake, 3 black cores, break out, pull back. Now let's see if we can keep this, because I don't want to add. I didn't even look at Mr. today. I'm up $25 a rum-pa-pum-pum. I'm up 50. I could have sold these at $35. Contract, but I didn't do it. Oh, I think they went higher than that. More like 215.
Productive over the last couple of quarters, right?
She got pretty eyes.
Yeah, you know, whenever we look at Disney, we have, nice insight into the 2 main segments that you just kind of hit on, the streaming segment and then also the park segment. Because these are things that consumers really like to talk about. They're really passionate about. They've been, hot topics over the last couple of years as consumers kind of transition from that traditional cable to streaming, and something that we've been tracking for a while. And when we look at streaming at large, we actually see Disney doing the best job of all of their peers.
Disney sucks, chick.
When you look at the different brands under Disney's umbrella, from Disney Plus to Hulu to ESPN, you can see Disney Plus up at the very top of that chart, up about 28% year over year. And this is a good sign for those forward-looking web visits. These are people who are, logging on and also potentially signing up. And a lot of this, too, if you see Hulu kind of down there at the bottom, some of this could be due to the fact that Disney has done a good job of organizing its apps and making it easier for users to access the content they're looking for. So now, if you're using the Disney Plus app, you can access your Hulu content, you can access sports, you can switch right from your Saturday morning cartoons to, college football now. And so I think that this has proven that, Disney has proven that it can execute here on the streaming front. Just a couple of years ago, it was losing $1 billion a quarter in streaming, and now the streaming gains are offsetting the weakness in traditional and it's, linear.
Randy's ahead of me.
I think that this has been a big win for Disney, and this is one they're leaning more into live.
Mike been on here for a half a year or longer.
Talk to you guys. We say live sports is really driving viewership. This is what consumers really want. This is also driving those ads.
Randy.
This is where you have a captive audience and people who are, actually staying put and watching those advertisements. And so, this new ESPN Unlimited option that just dropped last month. This is something that we're watching pretty closely.
I'd just go ahead and block
It has,
time.
an expanded offering of sports, but also a heftier price tag. And so this is something where
You
we
kinda
see Disney
turned
continued pricing power here.
dovish on me.
It's looking in the right places when it comes to its live TV offerings and trying to make it as easy as possible for consumers to find the content they want. You know, they're essentially reinventing
I think he was
the
jealous.
that they offer, and also making sure that they can watch all the live sports.
Because he couldn't get it right, and I always did.
Streaming is definitely a bright spot in at least our Disney data. And then the weakness would be.
He hated the 1 minute time frame.
You know, we can bring up
Here we go.
But, you know, we don't necessarily know the traffic from Disney. We do know from Disney though that when consumers go to one of their Disney World
Give me
parks,
125.
they're spending more money. I think last quarter they spent about 8% more on average, but I would say that that's the weaker spot in our data. Whenever you're looking at this chart, you can see that trend of forward-looking web visits.
Bomb chaser, God.
Looking a park trip that's trending down. On the flip side, offsetting some of that weakness is an uptick in Disney cruises. And
Again, I missed the add-on.
more on that later, but definitely kind of a split view in our eyes. We see some, you know, some strong momentum from the consumer and streaming. We see a little bit of weakness when it comes to overall foot traffic, but a little bit of conflicting data there because we see some pockets of strength and also signs that when consumers do go, they're spending more money.
Megan, you can't help but spend more money when you go to Disney, let's face it. I mean, Disney, here's the way I describe going to
I liked
Disney
him.
or anyone
But no, I liked Yoko for a long time, and he kind of
The
got.
guy who's paying the bill, a little less happy. He's just a little not as happy as everyone else that's there. Now,
A little out of line with
when
me.
you get to ESPN and what they're doing, whether they want to admit it or not, ESPN's their crown jewel. And this move,
I don't care if you fuck with other people, but don't mess with me, Bobo.
and basically owning the NFL Red Zone, I hope it works out because the NFL Red Zone is the greatest invention since the internet for men watching sports.
Bullshit.
And so I'll be interesting to see what they do with that because that is a gem of a product. So we all know what is happening with linear TV. There's doubters about sports.
Yep,
But there
I'm one of
shouldn't
them.
be doubters about sports, and there especially shouldn't be doubters about the NFL, Megan. Now, NBA, other leagues, we can have a discussion on, but the NFL has never been more popular, and this is, you know, I don't know where.
Okay, this is do or die here.
One of those big companies, what Tom said is accurate. Something's always
Give
going
me
wrong.
130.
Linear TV may never.
Give it to
go
me.
away
There it
again,
is.
But at least this company seems to have streaming figured out now.
I got
a
it.
Big
130.
around its neck, Megan.
Yeah, no, you're exactly right. I think that the live sports and the
And it drops.
grow in this area is really smart for the company as a whole.
Dang
This
it.
is a bright spot and a significant driver for the stock and for, you know, the positive momentum on the branding front for Disney at large and its banners to be the place that consumers can turn to watch the content that they want to watch. Disney is an entertainer, right? They want to make their consumers happy, and so it's a prime example of that. I think that on the parks front, you know, Disney is doing and taking some steps to refresh the offerings at the park to keep consumers coming back for more. I think they have a Cars exhibit planned and a Villains section of the park, which should be really fun. Another area that we haven't talked about.
Oh, I know what I need to do here in a second.
Strengthen that Disney Plus.
Where's my towels?
Release of Lilo and Stitch. We saw that was a huge blockbuster.
See if I got.
Probably the
Yep,
top
I got money in there.
among, you know, U.S. films released this year, and it just launched on Disney
Okay, we
Plus
really need to
today.
hold this, or I got to take
See
my
the
loss.
ripple effects on how, you know, one segment of their business impacts the other segments of their business, but certainly live sports is the bright spot right now. And, you know, whenever you look at this stock long term, you know, if you look at this on just the year, I think the stock is up around 5% year to date. But if you zoom out and look at this on a 5-year basis, the stock is down pretty significantly. And we're actually seeing signs of, you know, continued traction in streaming. And at least on the consumer front, you know, we have a really nice growth and interest in its Disney Cruise Lines.
It's 3 add-ons.
Still seeing that interest in its other, you know, experience offerings, and I think the parks have some significant.
Oh,
room for improvement.
jeez.
But when we think about this, we're actually pretty bullish on this company at large, just because we do think that it's starting to focus on the right things.
Yep, it seems like, they'll get picked up from one segment of their business if one kind of turns down.
Well, they're dropping
at this
it.
point. But I got to clarify this. Megan, you watch football, right?
I do watch football.
Yeah, Kevin said, man, I just wanted to clarify. He didn't mean that, though, at all. And I'm
Well, it's
sorry
got a
that,
personal guy.
Alabama Crimson Tide got crushed last weekend.
It was a rough Saturday, I won't lie. It was a tough, tough day.
All right, Megan, great stuff as always. Appreciate it.
Should be ask employees what they're watching.
VP of Research at Lightfolio. Kevin, you look at this one. She mentioned, this stock was $200 about 5 years ago. So it has made some inroads, but it's been a choppy trade the last couple of years. How do you want to look at this one from a trading perspective?
Tom, let's say that I don't know if I'm bullish.
I'm looking at the
or
SPY,
bearish in Disney, but what
and
I
I'm
have
trading
identified
SPX.
is a very low IV percentile. It was 8. I think it just ticked up to 9.
Oh, that's
On
why.
the Thinkorswim platform. So there's where there may be some opportunity. Buying that inexpensive implied volatility. Tom, what I looked at is it's slightly a bullish trade, but you can basically make the case it's range bound. I went out to October 3rd, so I gave myself a full month, and I bought the October 3rd 120 call, sold this week's 120 call, just the 120 call calendar, and it gives you about 11 Vega on this trade, Tom, and it's got a little bit of a long delta, but the Vega component might be just as important here because it's trading at such a low implied volatility as we get into the fall. But Tom, you're looking for a range-bound trade or a slight move up towards that 120 strike, but this is not a trade calling for any big move in either direction, frankly.
All right, yeah, let's break this one down. It's kind of the same setup of KG's trade as far as duration goes, right? The call diagonal is a time spread with a vertical embedded into it. This is just that time spread or calendar spread to the upside here. Going out to that same October 3rd weekly cycle, 30 days expiration, buy the 120 call, sell that same 120 call in the September 5th weekly options that expire in 2 days, paying roughly about $1.75 debit on that. Probably trading closer to $1.55, $1.60, so you can get it a little bit cheaper. Stock has pulled back with the market kind of leaking oil here.
Leaking
At
oil.
this point. But if you pay the debt, you pay.
I've never heard that one before.
75. It's going to be $175 in risk on this. But Kevin mentioned, the apex of profitability on this trade is at.
I'm going to go do something real fast.
You've got
I
a
don't.
range, maybe.
Well, I'll stick
between
around for another
117
15 minutes.
and potentially just above 123 to remain profitable on this position in an inexpensive way. And Kevin, when you look at this, you get those opportunities to roll or adjust that short option up to 3 or 4 times over the lifespan of the trade to collect credits, right? And that's the whole idea with this. You collect credits, reduce that risk every time you do. You take in some credits.
PDD's running.
Right?
One of the beauties of the calendar spread is your ability to get that net debit, which is now between 155 and 175, and chip away. And when you do that, you chip away at the break even, you're collecting theta, you're lowering the net debit every time you extend duration, and hopefully it stays in this range, because obviously you're targeting the 120, but each time you extend duration, you can change that strike. It gives you a lot of choices there, Tom.
Yeah. So good look at the long calendar on the 120 strike there. You do have some assignment risk on that short option that expires over the next 2 days, so keep that in mind also. All right, let's take another quick break here, guys. When we come back, we're going to take a look at the name of the day, and that's Alphabet. The Google parent stock is sharply higher after they will not have to divest their Chrome browser or Android operating system as part of the Department of Justice antitrust case against the company. Stick around.
Damn. It's not being fair to me. Oak. I'll be right back. Walk away for a second, see if that helps.
Trading at Schwab is now powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals. You can spend less time searching and more time learning. Trade brilliantly with Schwab.
Welcome back to Fast Market here on the Schwab Network. Let's discuss Google Alphabet. Shares are up 8.8% today, hitting record highs. Not surprisingly, after that Department of Justice note that came out. Let's bring in George Tillis, Senior Markets Correspondent here on the network. George, we've talked about this one repeatedly on our show, and one of the things that always stuck out to Kevin and I, and we always discussed it, was the fact that, hey, Google was the cheapest on valuation out of all the Mag 7s due to all the headwinds, you know, not only from the Department of Justice, but maybe search business, competition heating up. But this kind of, you know, gets rid of one of those headwinds, right, at this point?
It does. And I think there's always been I mean, all these, you know, I'm going to call them mega cap monopolies. That's effectively what they are. You know, Apple and, of course, the others out there, Microsoft and so forth. There's always a regulatory overhang, just because of the scale and size of their business, the nature of their business. But nonetheless, this was significant overhang for Google, which still relies majority of its revenues on search. The other concern out there was AI, and I think if you look at Gemini AI, many times now, if you just do a search, Google will publish the results of that search through Gemini. I think that's also tackling some of the issues on bypassing traditional search algorithms into artificial intelligence. And even if you use, you know, other platforms, perhaps even like ChatGPT or OpenAI, those platforms also index and they do publish citations of the results of search. So in the back end, you know, OpenAI is going through search algorithms using Google's interface. So I think perhaps the aspects of artificial intelligence out-competing or bypassing Google search was a major concern. But the other concern, of course, was the regulations and potentially their Chrome browser, which is still very popular, but you know, I wouldn't say, and this is just kind of my view of it, doesn't necessarily have a monopoly in that area, even though it has the largest market share. It has about 68% of the browser market. The next one behind that is around 15% with Safari, that's Apple. And other fringe ones like Edge Computing, Edge Browser for Microsoft, and there's other ones out there. So it's not the only party in town. It just happens to be the dominant player for various reasons. Perhaps, again, that it's very favorable in how it interfaces with search. Also, I mean, I like the platform from the standpoint of having all my logins always available right there across multiple devices. But at the same time, again, there was a lot of concerns about antitrust and the browser. It seems to be abated now based on the district court that viewed it wasn't necessarily anti-competitive. That's creating a catalyst. But if you just look at the stock, since going back to around May, it's just been churning higher, slowly and surely moving to the upside. Post-earnings as well, which were in July, the stock actually dipped. It was quite surprising, but they bid it up. And since July earnings, it's been moving higher. And if you look at the July earnings, by the way, it was quite robust, not just from the standpoint of being estimates for sales and revenues, but the composition of the breakdown was quite impressive. If you look at cloud, that grew around 31.6%. Subscription revenue grew 20%. And search, which is the dominant revenue driver, was only higher by 11.7%, but total top line sales were 14%. So my point is, suggestively speaking, that Google is already moving away from search as the primary driver. It still is, but the other aspects of their business are growing. And the composition of the growth is very meaningful, because if you look at top line sales, and I talk about this all the time, now top line sales is important. It's the top line of your income statement. But the manifestation of your profit margins is also important. If you look at gross margins, they were higher by 16% year over year. That bested the top line sales of 14%. It gives you an idea that they're growing very efficiently. The net income growth also was close to 20% at 19.7%. So the bottom line metrics and the margin metrics were impressive, as well as impressive other metrics, including subscription revenue growth and cloud growth.
George, I'm going to keep my question real simple here. This stock was undervalued with a black cloud and a blanket over it for a long period of time while this
ain't working out.
They didn't get out scot-free, though, George. As you know, they're requiring greater data sharing and prohibiting exclusive deals that could stifle competition. So they didn't get out completely scot-free. But, George, this was a cheap stock for a long time. This being resolved, and the ensuing rally today, is it still cheap or is it more fairly valued?
So, we talked about this, I think, over the last couple of quarters, and one of the things about value aspects of stocks is, you need to bundle in momentum. And Google just didn't have momentum for quite some time, and it's got slow moving higher momentum and price action, and I think that institutions figured out the value. It took some time because I thought there was a lot of competitive threats because of artificial intelligence, but nonetheless,
I don't want to sell it.
if you look at the valuations now, price is moving faster than earnings now, so the multiple is expanding. The stock is trading based on, right now, the estimates for earnings in 2025 at around $9.95, 21 times earnings. It's 19 times next year's earnings, which is slowly moving higher as the price keeps moving to the upside. These are, again, about 20% cheaper, these metrics, both this year and next year, than historical averages around 24 times earnings. So if you look at EBITDA too, this is important because EBITDA growth for the forward 4 quarters over 20%, that's higher than the 5-year average of 18%. And
we didn't hold the gap.
Again, are expected to be about 13%. That's lower than the historical average of 15%. So what I'm trying to say is
what are you trying to say?
20% discount to its 5-year average. So one will maybe say it's still cheap, even though it's made a nice move since the May lows. But nonetheless,
we could drop 64.20
in the low
another
teens.
$2, $7.
So for what it's worth, they seem to be growing more efficiently, and I think that's more important than total top line sales growth, which at times we talk about this also, that many stocks which show decelerating revenue growth may not necessarily be a bad thing as long as they're growing EBITDA and net income margins at a faster clip, which seems to be the case for Google.
All right, great backdrop for us. Appreciate it. That's George Tillis, Senior Markets Correspondent here, always giving us a good overview of these names that we discuss, especially on the fundamental side. Kevin, so I looked at a strategy in here that, I think a lot of people are looking at this going, boy, the stock shot up. We got an RSI above 80. Boy, I missed this stock move, Kevin. But we saw a bunch of price target hikes across the board in there today. Some people putting them up to 270, 265, things of that nature. So I looked at a strategy that allows you to maybe take a bullish stance on it, but then also maybe give you the opportunity to buy the shares if it does fall from current levels, about $230 a share. So looked at going out to the September 19th, the monthly options, Kevin, just 2.5 weeks, and selling the 225 strike put. Cash secured put here, Kev. You're going to collect roughly, I've got a 310 credit on there. That's where it was trading earlier. It's trading closer to 320, 330 right now because the stock has pulled back a little bit. But if you collect that 310 credit, that's what you can make on this trade.
Let's go.
Above 225, the strike that you're selling it. You've got a lot of risk on this, over $21,000 if the stock were to somehow go to zero. but it takes your break even, Kevin, if you collect the 310 credit, where you start getting hurt on this one below 221.90. That's about 3.5% below the current share price in there. Kev, give me your take here on the cash secured put in case you missed it.
It's the same profit graph as a covered call strategy, Tom, but below 225 or the break even around 220, just under 222, you got to be willing to either trade out of it or take the stop. Besides that, this is a bullish play. You're right, though. It does have a fair amount of risk because you don't have a put bullish on.
Yep, you just keep the credit if it stays above 225. If you're willing to buy those shares and still short those puts, it goes below 225. You got that price, you're going to buy it just below 222 bucks. So at a 3.5% discount to the current share price. So good way to look at that one as an example trade in there. All right, that's going to wrap it up for us today here on Fast Market. Stick around though, right here in the Schwab Network. Next Gen Investing is coming up.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account.
Getting better now.
Solutions.
Need a breakout. Kind of went below my expectations.
Unlimited ATM fee rebates for cash withdrawals worldwide. No overdraft fees. And enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
No politics, no noise.
Go, baby.
No sell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
Whether you're a bull or a bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an educator.
It's going to be a long day.
It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Go get my water while I'm waiting.
Welcome to Next Gen Investing. I'm Jenny Horn alongside Alex Coffey.
Haley, and as we check in on markets here, we are pretty mixed across the board with S&Ps and NASDAQ still higher. Well, the Dow's down about 0.5%, our biggest laggard, and the Russell down about 0.2%. So it does feel like this natural progression of the fallout of the Russell, then the strength of the NASDAQ and vice versa. But today has been a relatively quiet day, I will say, to generalize here, as it's just felt like a whole lot of the same across our major averages.
Yeah, and I think I can make an argument that it's really not that strong of a NASDAQ day outside of two particular names that have a news story driving the action. You know, you look at Alphabet, you look at Apple after the ruling that came down yesterday, basically at the close. There's not a lot else to be excited about. Maybe a third of the names are higher. You look at the Magnificent Seven names. Yeah, Tesla's a little bit higher. Nvidia's basically unchanged. Meta has turned higher here, and Microsoft down a little bit. I would say it's kind of a mixed bag outside of.
Didn't look at Meta today.
Alphabet.
That could be over here on
Apple
my.
and Alphabet are carrying a lot of that weight today, with Alphabet up almost 9% and Apple up over 3%.
Yeah, and actually also not a bad day for Tesla either, at 3.6%. So yeah, we are seeing strength in our very selective names, as well as very selective earnings winners, as we do still have some earnings to parse through. But on this show, of course, over the next hour, we will focus on equities pretty heavily in some of these analyst calls, earnings moves, as well as, of course, discussing all things Alphabet. We'll kick things off with a nice food focus, as it is noon here Central Time in Chicagoland. So what better to talk than all of these various things that make us hungry, of course. We will also be then diving into
You're hungry?
Meta, Reddit, as far as the latest technicals to keep on your radar. And, of course, further discussing Alphabet right now, really with a landmark case, perhaps clearing what was one of the worst-case scenarios, and that was the divestiture of Chrome. So definitely seeing a nice move out.
I could sell them here at $1.
Discuss the latest with some of these
Then
ESPN
hope for a dip and buy the dip again.
Football kickoff and the NFL kicking off this week, definitely in center stage.
Right now we're inside the Kettner channel.
One of our biggest winners, really, of the session, that being Macy's, raising its outlook here and definitely clearing that.
And we hit the 63 and the 200.
That I think was in front of so many of these department store chains.
Yeah, no doubt. Tons to get through. Looking forward to the Alphabet conversation. Looking forward to chart and trade some of these social media names. But, you know, nothing says next gen like soup and macaroni and cheese and McDonald's. So, kind of a staples-driven, group here. But talk to me about why we're seeing a lot of green in this bunch.
Get to the top of the bottom of the
Frankly, going into this report,
see, we got way oversold there. There's the orb.
Seeing a nice lift today of 5%, as they did beat the street expectations for their fourth quarter. But what I think that is still very important to this story is the very gloomy tariff-related challenges they do still see ahead. So net sales came in line. They were down 3% from last year. Tariffs, though, expected to really take a toll on their bottom line as we look into fiscal 2026. They gave estimated adjusted EBITDA to decline between 9 and 13% on a year-over-year basis, as about 2/3 of the projected drop in adjusted earnings.
I didn't see your level. What was your level?
To tariffs.
Oh,
so
yeah.
The snacks business, which includes some of my favorite brands like Goldfish, Snyder's, also continues to face significant pressures, with organic sales dropping about 2%.
I'll give you an A.
Snack sales have now contracted year over year, though, for 6 consecutive quarters, though management did try to say that they expect some stabilization into 2026. So hopefully that's the case, because I will say that I know that this was
Randy.
definitely, again, a better than feared report. There's still a lot of work to be done, though, in a lot of these staples names.
Yeah, and it seems, too, when you look at these kind of conglomerates of snacks and, food, is as brands start to, fall out of favor, they just keep trying to buy more.
I don't think she knows what food is, Alex.
I just don't know that it's just not the category. I just don't know how well snacks
she needs to eat.
It's not necessarily just that the snacks that they have, but it seems like a different style of snacking is taking place with perhaps a little
She doesn't know what snack means.
U.S. consumer in the last couple decades, and it's been kind of a slow.
He'll take it.
I guess tough go of it. Bouncing back a little bit today, but low margin business, little shocks like tariffs and the impacts of aluminum cans or aluminum and steel and all these things and all that can make a big difference for these companies that operate on very fine, margins at large scale. Doesn't help that they're also struggling core business-wise as well. So relief rally, but doesn't change the picture. This is pretty ugly-looking chart.
It is, and I will say, to speak to that, not only are we seeing this impact across the board with specifically steel and aluminum, but also just the rising food costs, rising labor costs. I mean, all of this does not paint an easy environment for a lot of these names, which I think speaks to some of the story of Kraft Heinz. Now, with this obviously plan to split into two separate entities, news we got yesterday, that would unwind much of that $46 billion merger from back in 2015 that did create one of the world's largest food companies. But Morgan Stanley is adopting a more constructive view following that decision to split into two. They did upgrade the stock to equal weight from underweight, also raising their price target modestly to $29 a share. But it does come again after we got that announcement yesterday. They did also, I mean, it's been of note that
Come on, break out.
being the largest shareholder with a 27.5% stake, expressing that he was disappointed with the breakup. But I think that right now we've seen actually it work really well for a name like Kellogg that, of course, now has two separate entities. I do believe that one business is doing a bit better than the other, but that has been a win for those that are looking at like Kelnova and WK Kellogg, that seemingly has worked. And we know from totally different sector, but like GE, for example, a breakup wasn't a doomsday call by any means.
Yeah, and the reason it can work is there is aspects of this big food business that are doing okay, and it's like a lot of the sauce-related things. So
yeah. Yeah. Jim's back, trading the king on his throne. Put the guns on, back in his zone. $40 for a hooker, he'll never forget. Some deals are shady, but fewer regrets. Markets of money, make it turn on the machine. Buy low, sell high, living the dream. Stacks on stacks of financial feast. Choose the rule, got accounts to increase. Charts on the screen, the market will tank. Shot T in hand, and he's ready to bank. Numbers dance on in the chart like a hot Vegas night. Waiting on bull flags like they're gonna take flight. Markets of money, make a turn of the machine. Buy low, sell high, living the dream. Stacks on stacks of financial feast. Choose the rule, got accounts to increase. Refocused and dialed in. Got a market to conquer, and we're ready to win. Punta Cana was a blast, but it's now in the past. The market is his bitch, hit the money making switch. The king's got swagger, he'll never fall. When the bell rings, we're making money for all. Markets of money, make a turn on the machine. Buy low, sell high, living the dream. Stacks on stacks of financial feast. Choose the ruler, got accounts to increase. Markets of money, make a turn on the machine. Buy low, sell high, living the dream. Stacks on stacks of financial feast. Choose the ruler, got accounts to increase.
We're at now 105. I was added too many times too early on that one. I should have waited for the big daddy, but okay. We just need to get up to the even mark. We're kind of smooth sailing now. If we hold to 63. Let's go. Yeah. This is going to be one of these trades where I get out even and I'm going to regret it. There's a gap up right there. That's a good sign. See that little gap right in there? Somebody bought it to ask. I'm even. So I either sell it here and be thankful, or I just hold my, means I was down so much, down $900. No. I didn't want to say that out loud. I was probably down more than that because it got down to 60. Okay. Now, just give me a little more. Give me at 150 again. Come on, bitch. There it is. Ha ha! Yeah! Thank you very much. I'm out. Anybody take that trade with Bobo and was scared? Because I was. No shit, Sherlock. I was real scared there for a second. I'm still in. Ooh. Well, I'm out. I ain't trusting shit. My level's the 200. Well, I got this channel here still. And I think that's the previous one. Yeah, that's the previous. Is your levels between 643933 and 644069? Is that your level? That just left me $150 on the table. We hit my first one. 643933. Oh. Okay. Okay. Oh boy. The crowd's going wild at the sports arena today. I went into that resort with lower than expectations. But when I got there and saw the food bar, I had real high expectations. I said, this is a good looking food bar, in my opinion. Better than the ones I've ever seen in the 4 resorts I've been at. And it was, people were saying flies in their food, and it didn't bother me none. Now the bird did. I didn't like the bird up there getting what he wanted. He hawked at me a couple times. Bark, bark. There's 170. Jeez. So that would have been, oh my God, 170. That'd been $50 a contract times 15. That'd been $750. I'd have made $750 on that trade. No, I didn't calculate that right. 30 times 15. I had it wrong. I made more. No, I had 20. I sold them at 150. I was right. Oh well. Well, there's a big knife. I got a discount if I want to get back in. Should I jump back in, Livid? I think I'll wait just a little longer. We got a megaphone right here out of 3 white soldiers. Tough business decision.
Anything else that you're watching here of note? Because a lot of these names, so we did just peak out. It's like, how do we recapture that upside that we were in? I mean,
See how she she leans back? It's scary.
Year here from 52-week lows.
Yeah, so the confluence that we mentioned earlier of our 63-day EMA and our trend line, now we can see that also lines up quite closely with our linear regression line, our line of best fit based on closing prices there. So perhaps even a little bit more weight on that particular area near about
Your lines are sloppy.
721 or
That's
so.
not right.
Notice as well that this area, the green line that I mentioned, 700 being that lower boundary.
That line ain't right.
That same 720 area.
Oh, he's
that's
doing
where
off that
the
wick.
nearest volume node
This-
is to the downside here. So that would be the heavy trading area to watch, the potential congestion area that the bulls would hope to find a foothold there.
Okay,
So,
we're back
the
to
next
$1.05.
volume area right here is
Washboard Jim's got what he
smaller
wants right here.
7.
Hey Jim, should I jump in them at $1? The 6450s that you called out earlier? Yeah. Don't go in big, just in case it pulls back and hits the 63 or the 200. Okay, thank you. Off the 21 EMA. We're squeezing between the 21 and the 9. Back at $1. Yeah, right straight to the Now we got a head and shoulders, and we got two of them actually. It could come down to this trend line right here. That's if it goes down to this trend line, I'll add, or I add now. I'm gonna add now. So you could hit this one right here. And we're at the 50 SMA. There it is. That's what I wanted. $0.65. So I got $1.65. 3 black crows off that right shoulder line. We've hit it twice. This is the sweet spot. Right shoulder, left shoulder line, head, right shoulder line, boom. Livid Goose, do I get an A+? Average 83 cents. You get an A. Oh, stabbed me in the back. I know where you come up with that A, because I gave you an A. If I'd have gave you an A+, you would have gave me an A+. Uh-huh. Jenny, would you put on some weight? You're hard to look at. You can barely hold yourself up. Look at you wobbling. Alex is starting to stand like her. So I'm the skinniest woman in the world. I'm very skinny. My towels should be done, but I'm going to wait until my alarm goes off because I'm in this trade and I don't want to leave it. What's new? about even. Well, it's been a tough day here in the second half. September is a month you always remember. I think it's always been the roughest. And then the turnaround month. I will be back. See what Diane Hall has to say.
Are now, they still have that $190 price target, but they still deem this a win for shareholders. And then you also have RBC Capital. They've boosted their price target to 260 from 220. They haven't outperformed a rating, which you know is essentially the equivalent of a buy rating, guys.
Yeah, and I mean, today's move, I think, speaks just, volumes to that, because I was kind of downplaying that. We haven't really seen much movement on the back of some negative DOJ news. It's sort of been brushed aside because Alphabet's so giant, but obviously, hey, today's move is a clear sigh of relief as we can finally move forward with some of the concerns regarding Chrome and its overall massive parts of its business. So I appreciate that, Dane King Hall, as always, the host of Morning Movers. And now, as we do look to trade this name, of course, for example purposes, Alphabet clearing a major hurdle. Today's pop is definitely notable, but also the fact that we're at all-time highs is something to consider.
And kind of a nice breakout from both the highs back in July of last year and then connecting those to sort of the highs of the end of last year. Really only had maybe a session before it gapped lower the following one where it's been above that trend line. So you could say perhaps hitting maybe a little bit of an escape velocity here in a bit of a breakout. So if you think that party is going to continue and you want to trade it from the bullish side, I have a way of that I think is kind of interesting to look at this because it's always uneasy, I think, to buy something when it's up almost 10% at all-time highs and feel super comfortable about that. So how do you deal with that? Well, you can look at a strategy that controls that risk, and in this case, it really controls the risk because it's a upside call calendar selling, next week and buying the September 19th expiration 250 calls. Only a 40-cent debit. So that means you only have $40 at risk per spread. It's a smaller trade, but one that would participate if it does move up, particularly towards 250. So very customizable, but to me, most importantly, risk-defined and controlled, allowing a trader to be, relatively nimble in this strategy by doing a smaller trade after a big move.
Yeah, and I mean, today's move is nothing to, I think, brush off. It does feel very abnormal to see a name as big as Alphabet up now 8.8% on the session. And remember, we're still off of highs of the day by about $1. So at least now helping the overall price activity on the year. We're now up 20% year to date. And just modestly, about 0.4% from that all-time high and off of lows by 64%. Now, we will leave it there for our Alphabet discussion. Now, coming up next, we'll examine the streaming space and really how ESPN's app relaunch has impacted viewing habits ahead of the football season finally getting in full swing.
Do. Yes, I am. I'm getting beat up right now. I'm going to add a ton of them right here.
We're just getting started. Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
I was even. Should have got out.
I'm Nicole Petalides, live from the New York Stock Exchange.
Nicole.
Schwab Network, available anytime.
I missed
anywhere,
you.
Any device, for free. Schwab Network.
Believe me, when it comes to investing, you'll love Carl's Way.
I love Carl's Way.
But there's a Carl's Way is the best way.
It is the best way.
At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
You people
Let's
are
move on,
rude.
shall we? No can do.
I'll get out here.
Where are you going?
Schwab.
Schwab, a modern approach to wealth management.
Opportunities don't stop when the market day ends. So neither do we. Schwab gives you round-the-clock access to over 800 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
No, don't.
Welcome back to Next Gen Investing. It's now time to talk a very important and topical
God.
conversation in regards to the NFL football season, of course, kicking off this week. And that's, coming now tomorrow, as I do check the date here. So now to discuss more about this ESPN app and some trends we're already seeing really take off, I'd like to welcome in Seema Shah, VP of Insights for Sensor Tower. So Seema, thank you so much for being with us today. Let's start with this app overhaul and really what you're already seeing from this data, of course, having just launched now in about 10 days ago.
Exactly. So it wasn't a new app per se, the way that HBO did with Max. It was more of a relaunch. Just to throw that out there, because the way we manage our data is we only count downloads once, the first time an app is downloaded. So even though this is sort of a revamp, we wouldn't count it as a new download. But despite that, we saw a huge surge, about 122% growth in downloads.
Cash Carey, been talking.
September, I would say August 21st to September 1st over the prior 30 days, and another over 40% growth in daily active users over the same period versus the
You got 60, 40, 87 on Spy.
So that means a lot of new users are coming, and not only that, the company has been able to reinvigorate prior users who had downloaded the app and sort of have moved away from it over the past couple
We're
of
at
months.
support.
We saw that
This is where I was heading
users are
to.
resurrected users, so people who come back to the app, were up 115% month over month in August 25th. So a huge surge in both downloads and engagement on the app since the revamp was launched.
And Seema, my first
I'm
thought
just getting
was,
too far out of the
okay,
money
so
now. I ain't been this far out in a while.
Football, but it looks like in your data, or the Sensor Tower data here, it also was a massive increase year over year. So you can almost strip out, hey, this is just seasonals.
We got
because
25 cents.
The seasonals are the same if you compare to the same thing last year.
Exactly. So the seasons are the same, but yet all of the growth numbers are accelerated from the prior year over the same period. So yes, it's both.
Yeah,
It's
this-
coincidental, right? It's the launch of college football and now going into the launch of, the pro starting, but also just the fact that they reamped the vamp. And there's a lot of stuff going on with the app that's different, right? So now they have something similar to Reels called Vert. They have an AI-powered, more personalized feature called Sports Center for Me, which is for users. So there's a lot more to the app than what was there before. You can see multiple screens, you can see live scores, so there's a lot to make the app more engaging and probably to drive usage going forward. Not only that, Disney has invested a lot in the last couple of months on advertising for ESPN, right? So ESPN has garnered a huge portion of Disney's ad spend within the last 2 weeks, And at the same time, that allocation spend has heavily skewed towards Facebook, which it has a very broad platform and reaches a very broad audience, which is likely also helping drive these gains.
Seema, how important is it that they're monetizing their sports content? We know so much from the last several years that live sports programming is the current holy grail of sort of traditional advertising models on TV, radio, because the rewatch just isn't as powerful, where if you're on a Netflix or one of these streaming apps, you can watch it at your own time, you can walk away, you can pause it. You can't necessarily do that for a sporting event. And it seems like they're spending heavy now so they can monetize that experience down the line. Is that fair to say?
Yes, and live sports, as you noted, is very key that you're seeing streamers, including Netflix, at live sports events, because that's what drives real-time watching, I guess, and it makes the platforms more attractive to advertisers because you have the users right there, right now. They can't skip it, they can't pause. And so it really makes the platform more attractive. So it makes sense that Disney would want to monetize this type of content as much as possible, right? And also to be competitive with other streamers who are trying to do that with different parts of sporting, right? Including like Netflix having the game on Christmas, etc., right? They're all trying to capitalize on the actual real-time watching and drive their advertising spend.
Okay, and you mentioned some of the competition in the space. I was curious your thoughts on the saturation that now feels like it's flooded sports viewership market in particular because it's lucrative. I mean, hey, it's how all these companies make a ton of money, but is there any then fatigue from a consumer standpoint? Because I've read some of these estimates that are, ridiculous. I think it's roughly like $700 a season now to watch, which is ridiculous, but is that then weighing at all on some of their now forward-looking growth? Because based on so far, not so much.
I think so, right? They're all spending a lot to get this content rights to play all these sports on their channels, and so that's why they're charging so much. But I think there is fatigue on the part of the consumer. So
It'd be nice to get back to the 63.
Like the old school cable model where you would bundle and you get a lot of services for included, and I think we're seeing that happen more and more because, as you said, on an a la carte basis, it's become very expensive for users, and I think to some extent it's also a little confusing. What day are you watching on what streamer to see the game, right? Are you seeing the game for your team? Do you need to get, the NFL package? And so I think what you are saying is true. It has become a little bit more complicated, and so we have started to see more bundling, and I think you'll see people kind of be selective, right? So if you already have Amazon Prime, then great, you can watch Thursday Night Football, right? And if you have Netflix, you'll watch the games. But I think for someone like an ESPN, right, for them to have these more personalized features is also to get people to be engaged during this season, but also more year-round, right? So that they don't have these lulls in users, I guess, and engagement because, of seasons ending and whatnot. Because I think it is complicated for users at this point.
No, that's also a really good point. With this app relaunch, you see so many new offerings like, WWE and various, outside of the NFL type sporting events that I think will be huge. So Disney definitely throwing some cash at the problem, but seemingly it's paying off, at least in the short term. We so appreciate it. Really great conversation. Seema Shah, VP of Insights at Sensor Tower. Now coming up next, last but not least, it's time for Under 30. We are looking at Macy's, a rare winning day for the stock as we are now up over 17% on really better than feared perhaps results in their quarter and also now some updated guidance to the upside.
Trading at Schwab is now powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals, you can spend less time searching and more time learning. Trade brilliantly with Schwab.
I'm Nicole Petalides, host of Trading 360 and the Watch List.
I'm green.
The New York Stock Exchange, where we bring you breaking news, experts.
I got
CEOs,
45
influencers,
contracts, so
and
I'm kind of
analysts.
sweating it.
It's all available on Schwab Network.
Whether you're a bull or a bear, you'll want to catch the latest market action.
I'm a
on
bull,
Morning
baby.
Movers with me, Diane King Hall, live from the
Diane, I'm always a bull. Nicole, I missed you. I was about to ask you if you wanted to go to Punta Cana.
On the premium brand side of their equation.
Macy's.
At the time, the estimates were already expected to be quite a bit lower.
I ain't
compared
looked
to
at
last
Macy's
year.
yet.
So they beat the bottom line estimates at 41 cents, so they beat it by 22 cents because the expectations were 19 cents. That was
God.
expected to be about 50 to 60% lower.
$3
than last
bounce.
year, where they generated 53 cents, so it was much better than
Expected.
but nonetheless, it was still down compared to last year. And sales, which were also down 2.8%, beat the estimates by $100 million, coming in at $4.8 billion. But they slightly raised their guidance for the upcoming quarter, as well as for the full fiscal year, at the margin, at the midpoint levels, both for earnings and sales. And I think the important thing here is when you're dealing with department stores, which have a lot of fixed capital, it's all about operating leverage. And if you look at some of the constructive numbers within the report, total system-wide same-store sales, which were actually expected to be down by about 0.5%, were higher by 1.9%. And if you look at their operating leverage for their foot traffic stores, not just total system-wide, because that would include some of the e-commerce components of the business, that was higher by 0.8% versus, again, a system-wide decline of 0.5% or 0.5%. So those numbers were improving, and that's an operating leverage number that analysts want to see to improve the bottom line, and that can have quite a bit of gearing effect to the price action. I think that's what we're seeing here with Macy's today.
George, total return wise, the stock has finally kind of stopped going down over, a longer,
Right.
more medium time frame, 3 to 5 years. Sometimes you got to start by just going sideways for a bit. As you talked about, sort of that gearing effect, and maybe something they could perhaps parlay into future success. Are they turning a corner?
It's quite possible. I mean, turning a corner starts with one quarter. This is certainly one quarter. I think there's also some other pressing concerns that may end up stalling this rally, and I could be wrong. It could continue from here, but I've been doing this long enough to know or have seen a lot of times you see these big gap up days, and then it just stalls out. And that's a manifestation of, give me some more, tell me something more next quarter. And it could, like I said, continue from here. But nonetheless, if you just look at some of the other constraints, first off, valuation was really cheap at around 7.5 times earnings. So if you're growing,
Seen a lot of these double bottom
basically,
breakouts
if you're not growing
today.
your earnings or sales, typically stocks will trade in the mid to high single digits in an earnings multiple. It already was. With this quarter,
Got
which was
another
better than
one.
expected, and the guidance, which was better expected, especially the operating leverage or same-store sales component, there's a reset of the expectations. That's why we're seeing the price higher today. I did notice if you look at sales in total, at least in the last 4 quarters, they're still down about $3 billion in dollars and cents from where they were in 2020. But I did also notice that compared to 2020, they earned around $584 million. In the last 4 quarters, they earned about $569 million. So the ratio of sales to earnings is actually more favorable now in the last 4 quarters. That's pretty meaningful. But at the same time, they still have about $5.5 billion in debt on $3.3 billion in equity. And that's going to be a little bit of a constraint, I suggest, going forward for Macy's. So kind of a mixed bag here, some goods, some bads, but nonetheless, a nice move today.
Yeah, absolutely. 17.5%, nothing to brush off, but also the lingering concerns do still remain. So I think great points there. Appreciate it though, George. For all the
George.
Macy's today with a near 18% move to the upside. That will do it for Alex and myself for Next Gen Investing. Coming up next, we have the watch list.
George.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Opportunities don't stop when the market day ends, so neither do we. Schwab gives you round-the-clock access to over 800 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
Morning movers, be the first to find out what's shaping early market action. Tech check, options corner, futures focus, technical analysis. Morning movers.
According to this chart, we can drop a lot more.
And tune in every trading day at 8 a.m. Eastern, only on Schwab Network.
On the 5 minute, I can go to 5. We broke support on the 5 minute.
welcome to the Watch List. I'm Sam Barnes in the chair for Nicole Penelides today. It's 2 p.m. here at the New York Stock Exchange. Here's what's coming up on today's show. We'll break down the results of Google's antitrust trial and the broader impact on Alphabet and the tech sector. Then we'll break down some investment strategies for the current market environment and why it pays to be disciplined now more than ever. And we'll bring in our panel to discuss Macy's earnings after the retailer posted its first positive quarter for same-store sales in multiple years. But for now, let's take a quick look at where the markets stand with only 2 hours left in the trading day. Surprised to say we are off the session's highs now. The S&P 500 has lost some altitude, now just sitting on the line to the upside, 6,418 points. The Nasdaq, no doubt, getting a lift from some of those tech names, Google and Apple, of course, saving the day as far as that antitrust ruling is concerned. We'll dig into that throughout the course of the program, but it's a mixed picture. We have got the Dow Jones very much on the back foot. That's the laggard in the session, 0.6% lower, and the Russell 2K also underwater by 0.5%. We, of course, get some macro data coming our way in the next couple of days. We are continuing to digest what we got as far as the JOLTS numbers this morning and also factory orders, a bit of softening there as far as the labour market is concerned. But let's take a look at what else is on the move, because while we didn't see too much of a move as far as equities are concerned initially off the back of that data, we did see a move lower in the 10-year yield, down 1% in the session at 4.20 now. So that's important to watch ahead of the NFP on Friday. US dollar index at 98. Gold is higher. That's been a big story as we see that safe haven demand and appetite for gold. Crude oil is lower today, and that coming off the back of some of this talk around OPEC perhaps looking to actually hike production at that key September meeting on Sunday. And Bitcoin is higher today to the tune of 1.5%, levels of 113. For some of the biggest stories in the market, let's welcome in Kevin Hinks, our host of Fast Market Schwab Network. Hi, Kevin. Hope you've been having a nice day there. Takeaways from Zscaler earnings. What are you seeing?
Well, Zscaler came out.
All right, we seem to have a bit of technical difficulties there with Kevin. We will try to get back to him as soon as we can. In the meantime, this is the state of play for this afternoon, but let's take a look at the bigger picture now. I'm very pleased to say Schneider is here, Chief Strategist at MarketGauge.com. It's been a long time, Mish. So nice to speak to you on this side of the planet. And let's just talk about the takeaways from what you're seeing.
Dang, honey, you're having too much fun.
Concerned. I mean, it was quite poetic that we started things off on a weaker note to start what is traditionally a bit of a tougher month for equities, but also bonds as well. What's your steer on the markets right now, Mish?
Well, first of all, great to see you, Sam. So happy to see you on this side of the pond, as they say. Well, you know, it's so interesting because this whole month of August and now into September, we have really measured the market by its weakest link, and when does that weak link become more of an anchor? And we keep seeing the same weak link over and over, and that's two major sectors. One would be transportation, which has definitely not participated in the way, say, the small caps have done lately. And the other would be semiconductors, which of course is the big surprise, as semiconductors have been really the reason for the market rally for the last couple of years. However, neither one of those sectors are critical yet. And that's why we keep seeing rotating buying. And of course, the news on Google yesterday, Alphabet, was another big reason why we're seeing Nasdaq up. So I think you have to kind of tread lightly right here and wait to see what happens with these two key areas. You know, small caps are rotation, but they were still got to only about 3% from its all-time high. And of course, retail, which has done better than most people expect, is still so far off from its high, which was made in 2021. So there are concerns, but there's certainly nothing screaming bearish just yet.
So the market is starting to respond with some rotation. No doubt there are some conversations out there about how this time is different, particularly for the case when you look at small caps. It's especially because we've got some of these rate cutting expectations coming, and also, as you say, the AI story.
Which sectors are you looking at which are emerging perhaps as the sort of big winners here?
Well, I wouldn't exactly call this emerging, but you know, I've been a big gold and silver bull for quite some time, and that has done extraordinarily well. And looking outside in terms of non-traditional assets, I think Bitcoin might have actually seen its bottom at around 107. Still has more to prove.
Oh,
so
really?
I've been looking outside of the traditional, but I've also been looking into energy.
I don't believe that, honey.
Drops, obviously energy might be impacted, but there are certain areas that have been holding up, like solar energy, interestingly enough, and also obviously uranium. And now we're looking at natural gas at a potential bottom. Kind of would avoid oil because it's been a big political football. So that's kind of where I'm going right now. And then outside of that, believe it or not, Rivian, which has been really strong over the last few days, looks like it's having a major breakout. And then of course we go to my vanity trade from there, and that would really be more tied to the diet drugs.
Yeah, okay, so there's a lot to unpack there. Let's start from the top and what we're seeing in gold, because we're continuing to see another record today. What do you make of what we're seeing as far as, you know, appetite and demand for safe haven trades, particularly because of what we're seeing very much on the long end of the yield curve?
Well, yeah, I mean, gold, interestingly enough, there's more gold reserves now than treasury reserves for the first time in 30 years. So that kind of tells you the central bank buying has been relentless. I think what happened with gold is a lot of people started to get negative on it because it couldn't break over that 3,500 level. But nonetheless, it was in this giant consolidation. So what's happened now is like a true commodity. When we get to a point where the sellers do not come out in strength, but the buyers come out and buy more in strength, that really sets you up for a parabolic move. And a lot of speculators that have been on sidelines might be coming back in. But certainly now, looking at this price, it looks like 3,800 to 4,000 is certainly not unreasonable. And yeah, this is reflecting the cracks that we're seeing with the potential in the bond market, yields rising while the Fed's supposedly lowering, the potential that the Fed may not be as autonomous as it was, what's going to happen with tariffs, and now the whole legality of that situation. I mean, there's a lot. The debt, of course, continues to rise. This is what's spooking the market to a degree, and gold is our mirror for that.
Okay, let's talk about your vanity trade because, you know, it's been an interesting time for some of these companies, you know, as far as
Sure has.
that you were talking about with regards to some of the obesity drugs, you know, some of the beauty names as well. I mean, one name that comes to mind is Ulta. I mean, we were sort of trying to get to the bottom of why we saw such a strong performance as far as those earnings were concerned, you know, whether this is a consumer trend of people being mandated to come back into the office. So could you sort of encapsulate, you know, what we're seeing there, and you know, this overarching dynamic, you know, with regards to some of the pharmaceuticals and also your Elfs and your Ultas of the world? Because, I mean, Elf was a different story. I mean, they're also dealing with, you know, sort of the demographical trends, but also with regards to their market exposure overseas, tariffs, etc. But how are you looking at all of these names?
Well, thank you, Sam. You just gave me a third reason why to be very bullish in Ulta, going back to the office. Well, you know, we have two kinds of things. First of all, makeup is still relatively inexpensive, which is why very often it's recession-proof. Not saying we're going into recession, I'm just saying that when people are starting to be more careful how they spend, especially women, they will buy makeup. That's number one. Number two, of course, is the diet drugs. And if you watch any television, regular television, or even Hulu, because we've been watching some stuff there, every other commercial is some form of a diet drug, Zepbound or Mounjaro or, you know, just Wegovy. And what's so interesting is, like, looking at Eli Lilly, which is still relatively undervalued, they're actually advertising for people to come work there. So what we're really seeing now is these drug companies are gearing up for not only producing more of these diet drugs, but I think the eventuality of making them cheaper. And then you have to look at that domino effect. So what happens to this tremendous number of people who have struggled their whole life and now don't have to? They buy more makeup, they buy skin supplements. We saw a company like Nu Skin, which was dead.
They eat bologna.
From 8 to 12. We're looking at companies even like Stitch Fix, because you can buy clothes at home. They send it to you, which could be very comfortable for some people. Ulta, obviously, we just talked about. Elf Beauty, even though it had a tariff impact, came soaring back. And looking out at dating apps. So I think what you have to really look at right now is these become more mainstream? And by the way, I just saw Serena Williams do a whole ad for it too, and celebrity focused and more affordable. How much of that's going to be impacted in terms of the GDP? And there's been predictions that it could be up to 6% of an impact on that. So you're talking about a mega trend that should not be ignored.
Fascinating, the sort of impact that these weight loss drugs are having on the broader market as far as trading themes are concerned. Because then, we were also talking earlier today about Constellation brands, those in the
That's funny.
of beer and wine. I mean, people are choosing to be more healthy, and that's having knock-on effects for those that are in the business of energy drinks, etc. So it's a really interesting point you make. I do want to pick up though, Mish, on what you mentioned about some of the renewable energy plays, particularly in light of the political headline risk. How should one be approaching that?
Well, I love expression, so I've been saying all energy hands on deck, because really that's what we need to be able to keep up with the electricity demands of AI and data centers. And of course, China's also been experiencing a big demand, and they've been really at the head of the realm in terms of solar energy. So it's not just US centric. But if you look at some of the solar stocks, we actually really like Jinko Solar because it is a Chinese company. But even First Solar, these stocks look like they're trying to bottom, not look like they're about to sell off. They've already bottomed. And then, of course, beyond that, what do we have the most of here in the U.S.? That could
Mr.
really
has a
work
1,
in
2,
terms of
3
energy.
coming
It
up.
would be natural gas. That's why I keep focusing on natural gas even more than oil. And these producers do not want to frack when things get too cheap like they just did. So we're seeing natural gas back over $3. I think that could be a significant breakout. We'll have a look and see. But maybe I wouldn't touch wind energy as much, but I certainly do like that. And of course, uranium, which if you look at just the ETF URA, it's back over $40. That's a good pivotal spot. That looks like it has quite the future as well, even if we're not quite at nuclear just yet.
Yes, but it certainly is getting a look in, isn't it? Thanks to some of the folks over in Silicon Valley. It's interesting how they can sort of change the perception sometimes. Mish, we have to leave it there. It's been such a great chat as always. Really appreciate your analysis and insights today. Mish Schneider, Chief Strategist at MarketGauge.com. Coming up, we've got Options Corner, and Tom White will join us to highlight unusual options activity from the day and how investors are looking to trade on recent news of HP Enterprise, Herbalife, and ConocoPhillips. Stay with us.
Mister's dropping more. Hard to say which one to use. I'm going to use Oh, hell, it's almost triple straight bottom. Oh, technology stocks with whale alerts in today's session.
Just getting started. Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and
Well,
much
HPE
more.
has
Best of
earnings
all,
tonight.
You can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Welcome back to Watch With. It's time now for Options Corner, where we analyse unusual options trades seen throughout the day. Let's welcome Tom White, host of Fast Market Schwab Network, to tell us about the bullish trade you've found for HPE.
Yeah, Sam, I think somebody's setting up maybe for an upside surprise here going into earnings after the closing bell. The option market priced in about a plus or minus 7.5%, 8% move post earnings. It's a low price stock. It's about 6% off of its all-time highs that we saw in January, and it's rallied about 90% off of those lows that we saw in April. So expectations starting to grow here a little bit into this report. They're going to rely a lot on their AI, what the company says. They had a backlog of over $3 billion in their AI segment from last quarter. EPS is supposed to be down about 14%, but revenue is supposed to increase by about nearly 14% from year-ago levels. So yeah, you can see here from the chart, expectations pretty elevated going into this report. And I saw some unusual option activity, but not a pure earnings play going into this report. They went out in duration. They went out to the November monthly series, so about 79 days till expiration. Trader came in and bought 3,000 of the November 22 strike calls, paid an average debit of about $2.35. So the break even where this trader starts to profits above $24.35 over the next 2.5 months. That's about 6.5% above the current share price, but well within that one standard deviation move that the option market's pricing in at this point. Call volume is about 2.5 times normal daily average volume that we've seen over the last 5 trading sessions. So yeah, not surprising on a cheap stock like this. If you look at some of their competitors, Dell, the stock fell even though it was a pretty good report on the basis of maybe their AI revenue for the current quarter wasn't that good. But the HPE's got a pretty good backlog. HPQ did pretty well after their earnings. But the bar's pretty high on this one, and this trader's betting that over the next couple of months we're going to see some more gains in here.
All eyes on those earnings. And next up, walk us through your bullish trade you found for Herbalife.
Herbalife, yeah, this is a blast from the past. Remember, starting in about 2012, Bill Ackman from Pershing Square called it a pyramid scheme. He took a big short position in it, and then Carl Icahn came in and said, no, I listened to the company and I'm going to take the opposite. I think Ackman ended up losing $1 billion on this trade, and Carl Icahn made $1 billion. So yeah, it's been out of the headlines. It's kind of an overlooked stock at this point. They make those shake supplements, personal care products. They're trying to get into the GLP-1 frame also at this point, but they were just at a global consumer staples conference that Barclays sponsored yesterday. They came out with some new, presentations on what they're going to do. Digital first business transformation. North American sales they said we're improving. Company plans to enhance shareholder value through more debt reduction. They're trying to reduce about $1.8 billion in debt at this point. So maybe that was maybe a catalyst for this trader coming in. But they went out to the January of 2027 options, Sam, and this is, a pretty long dated options. We sometimes call these leaps. About 499 days to expiration. Trader bought 20,000 of the January 2027, the 17.5 strike calls. They paid an average debit of $1.50 on these calls, so the break even of $19 over the next over a year and 3 months or so. That's about 91% above the current share price. The last time this stock was above the 19 level was exactly 2 years ago. Yeah, you need a pretty good ride on this one. Call volume is about 25 times normal daily average volume that we've seen over the last week of trading.
Okay, we're here.
We don't see big size trades in a name.
Triple bottom.
Like Herbalife, and maybe that's why it
Mr.
stuck out to me. But this trader thinks he's giving himself plenty of duration on this position, but taking a long-term outlook here with the expectations that, hey, maybe we'll get back to 19 over the next year and a half.
Maybe that's what the young ones are drinking now, Tom. They're
God,
not
it's still
drinking,
high.
Beer and wine. They're maybe onto the shakes and the herbal teas. I don't know. But finally, you found a neutral to bullish trade for ConocoPhillips.
Yeah, Relation Brands kind of confirmed that, didn't it, Sam? As far as kids aren't drinking beers anymore with crazy kids. ConocoPhillips, COP, shares down about 4% today.
No, they're just smoking weed.
That they're going to cut 20 to 25% of their workforce. They're going to have a meeting, all hands meeting tomorrow morning that's going to maybe confirm this. Who knows if it's 20, 25%, but that's what the reports are saying today. Also, oil down about 2% earlier in the day. That was lending some resistance to the price of some of the big oil companies at this point. And Roth Capital actually came out with a note and says they keep their buy rating on the stock, $108 price target. They said that this is a positive reaction for this stock if they cut that many employees. But that's a big red flag, I think, maybe for a lot of investors at this point, and maybe that's why it's down 4% on the day. But we did see a trader come in, probably trying to take advantage of this pullback that we're seeing. We saw a put seller in here, so this is a neutral to bullish type of stance this trader took. He sold 4,000 October monthly options that expire in 44 days. He sold the 97.5 strike puts 4,000 times. Collected a credit of about $3.60. So that means the break even where this trader starts to lose money is below 93.90 over the next month and a half. That's only about 1% below the current share price. There's a big open interest on this strike also, so maybe just adding to shorts at this point. But yeah, this trader thinks stock's going to potentially rebound, and maybe this pullback on the announcement that they're going to cut some of their workforce is an overreaction at this point. So neutral
yeah, it is.
Stance from this trader.
All right. Thanks so much for that, Tom White, and highlighting some of that unusual options activity in the market
Maybe
today.
some more tea.
Coming up, we will break down the results of the Google's anti-fraud
The clothes should be
case
done pretty soon.
beyond the search giant. The watch list will be
My towels. Says they're done now. I'll give it a few more minutes.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Trading at Schwab is now powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals, you can spend less time searching and more time learning. Trade brilliantly with Schwab.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions.
I'm still in these things.
Directly with an education coach.
Oh.
It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Welcome back to Watch List. I'm Sam Vargas, American for the New York Stock Exchange.
What the heck?
Ruling that Google will not have to divest from its Chrome browser. To break down the results of this case and its broader impact, let's welcome in our next guest, Corey Johnson, the Chief Market Strategist at Dystrophy Capital Research. Thanks so much for joining us. What do you make of this ruling? I mean, some are saying that it won't change a thing. It's a bit of a nothing burger, but I'm just curious what your view is.
The nothing burger, yes. This was a really weak penalty for a company that has been convicted of running a monopoly.
Nothing burger.
And, you might not think, well, geez, I get the search engine results I want from Google, and I see what I can get. But, we are really damaged as a society and as capitalists and as investors from all the opportunities that would be there if Google had not illegally maintained this monopoly in the ways that they did. So the fact that the judge issued some very weak penalties to Google. As you mentioned, they're allowed to keep their Chrome browser, something the government had asked that they should not be able to keep. They're going to share some data from their searches. Think about how Google's business worked, right? Think about how they became a monopoly. They gather so much search. They had a really good search engine back when there was competition in the search engine business. They came out with a better mousetrap, but because they garnered so many search queries, they garnered search information, and it became the index for the internet. But then they used that data to build other businesses around it that no one else could compete with, and they kept other people from the market by keeping that data themselves. So the judges said they have to share some of that data going forward. But the fact of the matter is, we don't have competitive businesses in, say, travel.
Mr. didn't hold the triple bottom.
70% of hotel and flight search traffic sent to their site, and so Google Travel is the primary place where travel happens. One could argue we have higher airfares because Google is capturing all of that revenue from the airlines to get those things out there. We don't have a competitive media, right? 2,500 newspapers have gone away in the U.S. since 2005. There are 200 counties in America that don't have newspapers. We have an uninformed public because the advertising market is in a stranglehold from Google and Facebook. So it really has changed our society, and it's kept us from having businesses out there that might offer better mousetraps.
That's not the reason.
Give investors like me places to.
It's because of the internet. And because of fake news. We can't believe the news anymore. It's one-sided. It's not neutral. So you're wrong. I mean, I threw my TV out 5 years ago. I haven't had a TV in this room. I don't have a TV. You're an idiot.
To having to share some of that data, but do you still see an opportunity where there could be alternative search engines, and especially from an investor standpoint, where you could also have AI assistants that rely on the search data to improve?
I mean, the judge talked about that. How our courts take their time, they weigh the facts, they take some time to think and write and actually come up with sensible judgments. At least that's the goal of our court system. But technology doesn't wait, and technology rushes ahead. And the threat of AI to Google is really interesting, even within Google, right, where they've got their Google Gemini project and product. Google gets paid by generating a list of clicks and having users click and go away from the Google site. They don't get paid for giving you answers. They get
The
paid
sell-off's
for giving
been
you
pretty
links.
straightforward.
So the number of clicks that go into Google, we've seen that people are actually finding the answers that they want through Gemini. That's actually not a great business for Google, because what it really means is they're not generating lots of click income, that people are finding the answers really quickly. It used to be people would go onto Google, do a search, do many searches, and every search result or every 8 searches.
Tesla's been going straight down.
Now that number is up to 60 search results generate a single click. Now, Google's been able to make up for that by raising the prices on the ads. The scarcity of the linking has actually created higher prices for them. But over the long term, it's really not good news for them, because they're not generating the number of clicks that they used to from every single search, and that's going to hurt revenues.
What does this tell us about the regulators?
I think it's interesting. I mean, they won the case. They got their conviction of a monopoly through their discovery and through their prosecution of the case. They did in fact determine that this was a monopoly, and it does bring back memories of what happened, at least for old people like me, of what happened with Microsoft and Netscape and the browser wars. And those penalties also, when Microsoft lost that incredible antitrust case 20 years ago, it wasn't that the penalties were so strong. The penalties were criticized for being weak, just as they are in this Google case. But Microsoft was really curbing its own ambitions and behavior, and ultimately allowed a company like Google to come into the world and dominate technology. And so one wonders whether Google, just trying to watch their flank and making sure they don't make big mistakes, has also lessened their desire to go after other businesses for fear of giving more, both in the US and the EU. And I should also point out that, as you experienced in China, and as we see all around the world, technology, and because of networking, tends to pick very few winners. There aren't the competition we saw in businesses of old, with the car industry or the department stores or things like that. Because information is generated by information, they tend to congregate. Our social media choices are quite limited. We don't still have Friendster and MySpace. It's all about Facebook and Instagram. And even you see companies like Snapchat and Twitter, or now X, have very, very small markets compared to the giant of social media. The same is true of search. The same is true of networking. The same is true in China with Chinese technology companies, as I pointed out. So the regulators have to work harder and faster to prove these monopolistic cases, to keep us from having so few voices, so few companies in control, and to provide the world with more options.
What role, if any, do you think the Perplexity bid had in all of this? As far as them setting their sights reportedly on Chrome, which gave perhaps a bit more credence to that.
Well, or one wonders if they just entertained it and let the word get out, so it looked like they were considering doing something. Also, Perplexity trying to step in and cleverly recognize that this asset might be available to them. It's also interesting to see some of the big cybersecurity vendors offering alternatives to Google Chrome. You've got Palo Alto Networks doing that. You've got Zscaler, which reported results yesterday? Time flies. Yes, it was yesterday. It was Zscaler results also offering their own security-enabled browser. So there is some competition on the margin there. But I do think that the emergence of generative AI tools, which I think a lot of people, when they first start using them, use them more for search than anything else. Of course, they can do so much more and are doing so much more. But those sort of initial experiments with AI, or the big AI players, and I'll put Perplexity in there, I'll put XAI in there, as well as obviously the ChatGPT product from OpenAI and Claude from Anthropic. I don't think we're going to have so many competitors in the future of AI as well, in part because it's so expensive, but also because of those network effects we were just discussing.
Yeah, well, I mean, no doubt the move has earned Google a price target boost from the folks over at RBC Capital. I mean, they've been talking about how this had been a significant overhang.
Some of them are looking like they're coming to a good support.
But analysts have also been talking about how
Chipotle.
There's also been a black cloud, and those were Dan Ives' words, a worry over Apple stock, which is also popping today, as this is likely emerging as a beneficiary of all of this.
Yeah, and I think you might look out for,
Puppy?
because of this long-term partnership with Google. I mean, I think we can remember when Eric Schmidt was actually on the board of Apple, and the companies have been so close for so long. Eric Schmidt, the former CEO of Google. And I think that, one wouldn't be surprised, and we've seen some news of the possibility that Apple is looking at engaging with Anthropic or engaging with OpenAI, and maybe now engaging with Gemini to provide.
Target had a 20-day low.
A real
I got 91.
Top engineers at Apple in the AI departments there, who surely could not have been motivated by finding out that their company is looking at scrapping Apple's AI for an Anthropic partnership, or now maybe, and I think one to keep an eye out for, is a Gemini AI Apple partnership. Probably nothing we'll see in the expected product announcements next week. Apple's not known to jump super fast in these kinds of things, but I think it's something to keep an eye out for.
Yeah, it's almost a case of you can't beat them, join them. That's certainly what we're seeing playing out in mega cap tech. It's been a really great conversation, Corey, but we have to leave it there. Corey Johnson, Chief Market Strategist at Epistrophe Capital Research. Appreciate you joining the show. Still ahead, but we'll break down investment strategies in an extremely dynamic market environment and why it pays to be disciplined. That's coming up next on the watch list.
Why it pays to be disciplined.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
A fresh take on the hottest trends in the market, from every click to every tick.
There's no fear of missing out on Next Gen Investing. 1 p.m. Eastern, only on the Schwab Network.
Welcome back to the watch list. I'm Sam Biden. In an extremely
Not a good day.
dynamic environment, our next guest says it pays to be disciplined. To discuss his outlook on the market and some investment strategies, let's welcome in Ed Siddell, who's CEO and Chief Investment Advisor of EGSI Financial. Thank you so much for joining us. It's a macro-heavy week. How are you tying it all together?
Well, thanks for having me back. And for us, we believe in rules-based investing. Having said that, it's important and paramount to, when we look at what's going on in the environment, to really adjust a lot of those rules as things occur. And for us, that includes, increasing our allocation to precious metals, gold and silver across the board. For us, we still like technology, AI. We think we're in the beginning stages, the early innings, if you will, and we see a lot of upside potential on that. We like financials going forward as an entire sector. We love small caps, especially as the continued deregulation occurs going forward. It's really going to spur on the economy. We think those areas of the economy are going to gain momentum and have continued growth.
We got another dose of uncertainty from the tariff headlines in recent days. I'm just wondering, how you're sort of telling clients how to navigate some of that and what your thoughts are.
Cooler heads prevail. Really, when you try to time the market, you're going to wind up losing. And
No, you're not.
That, through earlier this year when tariffs.
If you'd have caught the 200 SMA when I called it out, EMA, when everybody wouldn't mention it, the timing was perfect. Just because we have a couple red days don't mean we're dying. We've had a heck of a run here last week.
only in September, but at least one more time this year for a minimum of 50 basis points, 0.5% going into next year. And those two things, it's going to continue to spur on the economic growth in the markets as well. And investors, we're already seeing that, even though the Dow is down and the Russell is kind of even, it's kind of going up and down a little bit. But if you look at the S&P and the NASDAQ, you know, they're positive. So investors, they get it. They understand the bigger picture right now.
All right, so be disciplined, stay diversified, and hang in there seems to be the messaging. You know, certainly a few positive catalysts as far as, I mean, if that is overturned with regards to tariffs, I mean, that's something that the markets will have to.
Oh, your way. Economy grows fast enough, you can absolutely. We are in a much better position than many of those other countries to grow our way out of it if we can get our act together.
And I want to give a little bit of optimism. Right now, we've got Gen X, which is our generation, small, starting to take care of the boomers, which is huge. 75 to 80 million people, 45 million here. If you want to be optimistic, I think, Michelle, you'd say that when we get older, the generation behind us is about 80 million strong. So we'll have more taking care of fewer. I hope that's a reason for long-term optimism.
Well,
I hope.
Yes.
If they work.
And when you look at the GDP equation, there are two things that go into it, right? Productivity and population growth, especially working population. So if the working population goes up, yes, it is absolutely.
Working population, she's got it
More
right.
than fine to sit in a rocking chair somewhere and have
Somebody else take care of you?
Somebody else pay for me. It's going to be great. Michelle, as always, love your insight. Thank you very much. Just getting out of Bertha Coombs for the CBC News Update.
Thanks, Brian. President Trump suggested today that he could deploy federal troops to New Orleans in his latest threat to use the federal government to crack down on crime in Democrat-run cities. The president deployed the National Guard last month in D.C. and has also threatened to send troops to Baltimore and Chicago. In a social media post, Louisiana's Republican governor said he welcomed the help from New Orleans to Shreveport. The conservative network Newsmax filed a lawsuit today accusing Fox News of suppressing its right-leaning competitors. The lawsuit says Newsmax would have achieved greater pay TV distribution and won over more advertisers if it weren't for Fox News. Fox did not immediately respond to a request for comment. And Superman will fly back into movie theaters in July 2027. Director James Gunn announcing the official release date today for Superman, Man of Tomorrow. It is the sequel to this summer's creative reboot of the iconic superhero franchise, which stars David Corenswet as the Man of Steel. How many Superman movies have there been at this point, Brian?
Otis, Bert, I actually don't know. Bertha, I don't know, but it's all, for me, I know I'm an elder statesman at this point. It's always going to be Christopher Reeves. You know what I mean?
Yeah, he's been through.
Otis, Berg, Bertha Coombs, thank you very much. All right, up next, the under-the-radar, quietly sector that is enjoying its best run in about a decade. Stick around.
Crypto Watch is sponsored by Crypto.com.
Crypto night, you're a lucky man.
Crypto.com is America's premier crypto platform.
We got a 1, 2, 3 breakout and a 1, 2, 3 bottom.
and Chief Investment Officer or Advisor of there. Still ahead, we will bring in our panel to discuss Macy's earnings after the department store posted its strongest quarter in several years. The watch list will be right back.
I'll be right back in a minute.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh.
Yeah, Schwab lets you invest in
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties. Carl.
Schwab.
I'll be right back.
Approach to wealth management.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Hey, Dad, I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The 2 grandchildren, planning for their college educations. Someday it'll be their turn.
Welcome back to the watch list. Let's bring in our panel now to discuss Macy's earnings. Charlie O'Shea from O'Shea Advisors and Catherine Black, partner at Lead Food, Drug and Mass Market Retail at Kearney. Thank you so much to both of you for joining me today. I mean, Catherine, let's kick things off with you. I mean, Macy's, a big surprise, better than expected earnings. They also put out a fairly good forecast, the best comp sales growth in 3 years. How are you looking at things?
Yeah, look, the department store landscape is really interesting right now because in a lot of sectors we're seeing consumers trade into value. And Macy's is kind of a mid-market player. And what we're seeing in department store is value like JCPenney, Kohl's, tending to have pretty negative comps. Macy's did pretty well. And we're seeing them outperform really a lot of the segments in the market. And I think that's really down to consumers liking their value. They're doing really well in their managed space, in their leased space. So brands that they're bringing in, they have strong brands in Bloomingdale's and Bluemercury who are appealing to higher income customers, and that's doing well in segments of the economy where consumers are still spending. And they've got great heritage brands, which are doing really well at the moment.
Okay. I mean, Charlie, how much of this do you believe is, part of their turnaround strategy?
Sam, I've been following this company for roughly 25 years now, and I can't count the number of quote-unquote turnaround strategies I've gone through. This one seems like it might have more legs just because the competitive environment is so soft right now. You've got Saks struggling, you've got Kohl's struggling, Penny struggling. So their core competitors are actually performing pretty weakly right now, and they're going to get hit from the off-price stores are killing it like they always do. So this is the time for Macy's. If they're ever going to pull this off, it's going to be now. And the one thing I'm a little concerned about is all the store closures. I've never been a fan of retailers closing a lot of stores. I think they're valuable assets if properly deployed and managed. And I think one of the things that I'll pay a lot of attention to going forward is what happens to e-commerce sales. Because when you close a physical location, studies show that you lose e-commerce sales in those markets because you lose your brand identity. And that's something that Macy's cannot afford right now. They've got to keep the brand moving. They've got to keep the consumer feeling positively about what's happening in the store and on the website, and they really can't afford a hiccup.
Okay, it's interesting that you say that. I just want to stick with that theme for a second, as far as the turnaround strategy, just because you sort of alluded to the fact that it might be different this time, no doubt taking advantage of some of the weakness we're seeing as far as competitors are concerned. But I do want to pick up on the fact that they also talked about prices set to rise. I'm just wondering how much of what we saw in the quarter that's just gone was some of that pull forward, as far as consumers trying to get ahead of some of those higher prices.
I think that's a fair statement. I really do. I think the consumer is skittish right now. We're hearing all the noise about tariffs. Your guest earlier was talking about tariffs. The consumer is kind of, stuck between a rock and a hard place right now. Do I spend the money now and maybe, later on down the road I regret it, or do I not spend the money down and later on down the road I regret it? So you're kind of in a push-me-pull-you environment right now for the consumer, and I think that could be a driver right now. But again, I think, Macy's is gaining a little bit of traction, and that's encouraging to see if you're a Macy's fan, and I think they've just got to continue to, to block and tackle.
Yeah, okay. I mean, as far as the company is concerned, they're still fairly bullish on the outlook, but Catherine, they did also warn about what could be a fickle consumer down the road. I'm just wondering, as someone who looks at mass market retail, what does this say about, the middle class, particularly because we also know that, higher income earners have been seeking value too? What does it tell us about consumer trends right now?
Well, look, we see that in the Macy's earnings as well, because certainly Bloomingdale's and Bloomsbury outperform the core Macy's brand stores. So we are seeing that kind of play out in their numbers as well. But you're right, that middle income shopper is still shopping. I think Charlie's exactly right that our research shows that significantly more consumers did their back to school shopping, for instance, in July than last year. I think it was 12 percentage points more consumers
Nile
shopped
got
in
70
July versus
million.
last year. So there is a pull forward effect. And the other interesting thing is, at least for the next quarter or so, when prices start to rise, it's not an immediate pullback typically for consumers. It takes a cycle or two before you see the volume declines to outpace the price increases. So I think at least for the next quarter, they'll continue to look strong, and we'll continue to see momentum, particularly from the higher income shoppers, but still the middle income who's still spending. But certainly long term, you've got to watch for tariffs. We know that consumers are concerned about that. We know they're watching prices. We also know that they love coupons and discounts, and Macy's has a strong discount coupon play, so that will also serve them well in the short term.
Yeah, no, I've got to say also, as we sort of combed through earnings reports this morning, it was a fascinating tale of two retailers with what we heard from Dollar Tree, which seemed to be sort of surprisingly in opposite directions as far as the reaction is concerned as well, even as, consumers are value hungry. But, to your point, a standout within the department store kind of category. Just got to keep it up, I suppose. So it's been an excellent chat. Thank you to both of you for joining me on this very interesting day for Macy's. Charlie O'Shea and Catherine Black there. So that is going to do it for the watch list. You can download the free Schwab Network app available in the Apple App Store and tune in 24/7 on the SchwabNetwork.com. I'm Sam Vardas. Thank you so much for tuning in. And Market on Close is coming up next on the Schwab Network. We'll see you tomorrow.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account
Well,
built for
the
investors.
Magnificent Seven haven't sold off that bad.
It's time to look forward
Find the next trend.
from every click to every tick.
There's no fear of missing out on next gen investing.
Available anytime, anywhere, on any device for free. Empower your portfolio with the Schwab Network. He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
Wish I remember who I charted Wolf for. I nailed that one too.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Morning Movers brings traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern, Morning Movers, only on Schwab Network.
You're right, matey. They're bearish. You're feeling bearish right now.
Hey, Dad.
Dad,
Question for you.
how come Grandpa don't sleep with me anymore?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and my advisor Jennifer, she was with me with the.
Well, they nailed that music perfect on that. I hate the commercial, but when they changed that music, it's perfect. I have to give them that much credit. Dad, how come Grandpa don't sleep with me anymore? Today's not the day to be trading. Oh. We're at the bottom of my support channel. I didn't even think about that I charted this morning. Look at that. We hit that support. I just now noticed that. 640.69 is what I did this morning. On the SPY, I didn't think about where that number come from. Now I know. So we could turn around here a little bit. It's now post power hour by 2 minutes. The 6430s it moved up 20 cents there from the last time I looked at it. Are we going to get an end of the day trade? Question is. Here's that Marley
I'd
chick.
like to just get your thoughts on, September. I'm going to refresh my FedWatch tool. We were at 96% just a little bit ago. Pretty much baked in at this point. But for the rest of the year, what are you looking for?
Yeah, pretty clear the first cut will come, or the next cut will come.
Baked in, huh?
I believe it was Fed Governor Waller last week that made the argument for a series of successive cuts following that. He's kind of been at the leading edge, arguing for rate cuts from the Fed Board of Governors recently. So, yeah, I would assume, I think the market is pricing in a series of rate cuts over the next 6 to 9 months.
You think so?
Probably feels like the equity markets are pricing in more cuts than even the bond market.
Oh.
So with that said, are you keeping a close eye on any of the rate-sensitive industries, and do you think there's any opportunity there?
Yeah, one company I think that's been really beaten up by the interest rate obsession in the equity markets today is Apollo. They benefit from higher rates, but not to a massive degree. That stock has really struggled here over the last 3 and 6 months as anticipation for rate cuts has been rising. Lower rates is not a positive for them, but it's also not a big harm. And I think the market has kind of punished that stock excessively, and it's attractively valued today. We own it in our Argent Large Cap ETF, ticker ABIG, and we like that one quite a bit. And then on the other side, you have stocks that are clear and significant beneficiaries of low interest rates. And those two that come to mind are D.R. Horton, America's largest home builder, and then also United Rentals, which is a non-residential construction company. Of course, we get more non-residential construction in this country when interest rates are lower than when they're higher. So those two stocks have appreciated significantly over the last couple of months. There is increasing investor appetite and enthusiasm for construction names. And my anticipation is those stocks will continue to do well because their valuations aren't super demanding. And I think we're going to see an increase in demand for their products.
Well, thanks, Jed, for taking the time to have that conversation with us today. We really appreciate your insight. That's Jed Ellerbrook from Argent Capital Management. And now we're going to welcome in Kevin Hanks, our senior equities contributor here on Schwab Network, to get his thoughts on today's action. Kevin, nice to see you as always. As we approach the close here, just what are your thoughts overall on the day?
Marley, this is a day that started out with a lot of positive thoughts with the Google Alphabet news and the stocks that were moving along with it. And the bottom line is those were the stocks that were strong, and everything else has been relatively weak. You only have 3 of the 11 sectors of the S&P 500 that are still positive. Obviously, Google Alphabet news has got communication services up significantly today. Also, Tesla has got consumer discretionary kind of strong. But this is a day that seems to be stumbling into the bell here, Marley, as
doing something,
really holding on the S&P and NASDAQ to positive. Dow, Russell, they've been down most of the day, Marley, since the beginning. So yeah, this is a day that is going to be kind of sheltered by the Google Alphabet strength. Pretty weak day across the board, actually.
It seemed this morning, Kevin, that Google ruling was going to be enough to be a catalyst to move things upward, but around the unchanged line and down on the Dow and the Russell right now. What were your takeaways from that Google ruling? Were you expecting it to be as favorable towards Alphabet as it was?
A lot of people were bracing for some type of bad news, with the extreme being that they were going to have to get rid of Chrome or sell it or IPO it, do something, spin it off, and they didn't. They got to keep Chrome, they got to keep their Android, they got to keep the system that allows them to pay for search. So I think, and that's, by the way, that's what really helped Apple. That's why Apple is stronger today on this news, is because that relationship gets to stay intact. Now, one of the reasons that the judge ruled this way was because they're really, as time goes on, Google Alphabet's monopoly on search gets a little more dicey as all these AI search companies start to impede on their business. So I think that was part of the reason why the judge ruled. Now we'll see over time how Google Alphabet competes, but certainly a positive ruling for Google Alphabet stock up, significantly today.
Yeah, right now I'm just taking a look up close to 9% right now. So Apple also up more than 3% on that news as well. And it's a big day for retail. We sort of had a tale of the good and the bad for the retailers today. So I guess we'll start with the bad news. We'll start with Dollar Tree. They took a hit. They topped second quarter earnings and revenue estimates.
I'm not sure. I'll have to ask him.
Their third quarter forecasts.
I think he's taking some time off.
Right now, trading down just about 10%, Kevin.
And there it is, Marley. It shows you the importance of guidance in that three-headed monster that is the earnings release. Earnings per share, 77 cents, easily beating the 42 cents estimate. Revenue, 4.57 billion versus 4.48. Good, solid beat. They had net sales up 11.8%. Same-store sales up 5.9%. Good, solid numbers, but the guidance, the underwhelming guidance is what took this stock down just a little over 9%, Marley.
Yeah, it's a tough one, too, because management came on and said that they do expect the consumer to still be looking for these more discounted opportunities to save money on groceries and apparel and less expensive home decor. But their tariff impact was just too great for them to bear in terms of the reaction. On the flip side of that, we have Macy's, who's up 18% right now, 18.5% on their earnings. They also topped estimates and raised their outlook as well.
A lot of good news from Macy's. Big beat on earnings, 41 cents versus 19. Beat on revenue, 4.8 billion versus 4.7. They closed 60 stores. So even with that, the same-store sales was up 0.8%. Take those 60 stores out, and the same-store sales were up 1.1%. So good, solid numbers. They raised the guidance on revenue and same-store sales going forward. They have their CEO, Tony Springs, came out with his bold new chapter strategy for Macy's. Really a nice surprise out of this company. Like I said, the stock up.
What happened here?
Really solid day for me.
Oh, shit.
It was a very solid day for them. And Tony Springs kind of echoed a similar sentiment that was echoed for Dollar Tree, even though they didn't have similar reactions, that the consumer is resilient and is continuing to spend despite the fact that we are seeing price increases. Macy also acknowledged they are instituting some price increases here. Now, Kevin, I know you've seen lots of companies attempt these turnaround efforts here. What is it that Macy's is doing right? Because generally when you hear you've closed 60 stores, that gets met with some pushback. But here, they're getting highly rewarded in Tony Springs' turnaround efforts for Macy's.
I think investors see Macy's as a good brand that just needed to streamline itself and get itself more lean and agile, close the stores that are dragging down sales and profits, leave open and support the ones. Remember, they still got 350 stores. So this is not a small company with a massive real estate footprint that has really, in their worst of times, kind of kept them in business because they own a lot of the real estate. So yeah, this is a pretty good story. I think investors love the fact that they're making the tough decisions on stores that aren't profitable and really focusing on the ones that are, Marley.
All right, let's close it out with Salesforce, Kevin. Not a great year for them. They're trailing their other large cap peers down almost 24%. Earnings coming out here shortly. We'll have them on this show. What are your expectations for Salesforce?
Salesforce, this is going to be a key day for them because this is a company that not only has struggled throughout this year, but they're sitting right at their 50-day moving average. So this is going to be interesting. They've got to really, their AI platforms are doing well and showing good growth, and their agent force and their data cloud all doing well. But it seems like in its history, Marley, this company, when they make an acquisition like they did in May when they purchased Informatica, the stocks, if you look at the chart since May, it almost goes into a winter where it just can't get any traction. So I think this earnings for them is a chance to change the narrative away from that. Remember, they have done a lot of their growing through acquisitions. And some of the investors don't really like how much they spent. They spent $8 billion
on Informatica. So I think this is a chance for them to change that narrative to the upside. It's going to be one worth watching for sure, based on the fundamentals and based on where it is on the chart.
Well, we will be watching, Kevin. We'll have it here on the show coming up in about 45 minutes. But thank you for joining us today. That's Kevin Hanks. And coming up, we'll be joined by the team at the NASDAQ to discuss the trend in flows in August and buying activity for retail investors. Market on close. We'll be right back. Stay with us.
Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free. Schwab Network.
Hey, Dad, I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The two grandchildren, planning for their college educations. Someday it'll be their turn.
Shit. That's probably the problem right there. I'm gonna turn this thing on. Been so many years. Oh, there we go. Interesting. Let's see what's going on. One of my monitors got unplugged.
Had large cap equity driving as you. If I were to double click into the NASDAQ index lens, which I think is a bit interesting,
the 6430s, I think we're going to go up.
Surprise to a lot of folks, QQQM, but that insatiable appetite for yield continues to rear its head. Things like the covered call strategies, QQQI and JPIQ, were certainly really at the top of the list. But there's two that I think are two sort of themes that I think are interesting to double click into that we saw during the month. One was flows into sectors like, or I should say themes, like cybersecurity and AI. I know the gentleman, I just saw the screen, the gentleman you just had on was talking about AI. So yeah, we saw cyber and AI, which at NASDAQ, if you were to talk to the folks in our research department, they talk about those as digital utilities. So I think view them less as thematics and more digital utilities. If you're starting a business today, those are core to what you need. So we're seeing them take on more as almost core parts of portfolios for those that are adopting them. And so that was something that rose to the top of the charts in August. And then lastly, one that was interesting, I think, was banks.
God, come on.
Is one of the ETFs that we have associated with one of our indexes. I think it was a combination of strong momentum in the sector, positive earnings, as I'm sure you've seen and talked about a lot over the last month, and certainly potential interest rates. So sort of this confluence.
We had such a good run yesterday.
To see significant flows into that strategy. And I think we've talked before about the NASDAQ Dorsey Wright momentum scores. For those that are interested in relative strength, momentum-based investing, this is a 5.9 out of 6. So strong momentum behind
Still could drop more.
Banking sectors in general.
It's interesting too that happened in August because we got their earnings earlier in the earnings season. So to see it then, and also knowing August is seasonally a time when people are on vacation. and it's before school starts, and so you don't see as much action. But I guess it speaks to the rise of ETF and the retail investor. I do want to focus specifically on QQQI just for a second because I was taking a look when I saw it in your notes, and I mean it has rapidly become a standout covered call product.
Absolutely.
This girl thinks she's really smart. Sometimes I don't
33% just
believe what she says.
January of 2024 puts it in direct competition, with some other big names that we're constantly talking about. What do you think makes QQQI so attractive?
Yeah, I think that's such an interesting story for us. So if you look, we have a variety of products in that realm that have launched, and I think it's been such a standout. As you mentioned, January of last year, they're creeping up on $5 billion in assets. It's really been an amazing story. I think it's a couple different things. One, the combination of the Qs and income is really an incredible story. We're seeing that across our suite. But the thing about the issuer that manages QQQI is a firm by the name of NEOS. Next Evolution Option Strategies is what NEOS stands for.
Where there's a ton of calls that are way out of the money right now.
I think they've been incredibly effective at educating the marketplace. They also are doing a lot of work with retail
That's the
investors.
6450s and the 6445s, and I don't like either one of them.
All sorts of types of investors, including retail.
6430s.
More and more critical in the ETF sort of ecosystem and the buying that they're doing across not just large cap equities anymore, but really starting to dip their toe and wanting to learn more about these traditionally institutional-like strategies and being able to now access them through the ETF vehicle.
So you just mentioned education. I'm so glad that you brought that up because I noticed in some of the materials that you offer some education. You have seen this influx into ETF, into the space, but people aren't necessarily comfortable because there isn't a great deal of understanding because, like you said, they are generally
6430s
that now retail investors are looking at. What are some of the resources that people can access as ETFs become more of a staple?
Absolutely. It's interesting. I've been in this industry for close to 20 years in ETFs, and there's never not a time we're educating. There's always new investors coming in, and it's so exciting. It keeps us all on our toes and keeps things very interesting. But it does. The onus is on all of us in the industry to continue to educate. And so NASDAQ, as we've talked about regarding the retail investor survey, retail investors in particular are becoming more and more critical to the capital markets and as investors in general. And so we have looked to find ways to continue to educate and raise brand awareness for NASDAQ Index as that key when it comes to education and products. So we actually have a relationship with a platform called Blossom. They are Canadian-based, but rapidly growing in the U.S. and actually all over the world. It's a social community focused exclusively on investing and more long-term investing. So how do we educate investors on portfolios, portfolio construction, true long-term investing? There's 400,000 members as a part of this community, and they're going at 50,000 a month. So I think it's really indicative of this desire to connect.
Well, that's kind of fast.
What they're doing within their investing portfolios. So we have something there called the
400,000, and they're going 50,000 a month. I mean, that don't sound right.
QI, for example, you can go in there, you can find out all about it, find materials on it, on our indexes in general. We've actually produced a set of what we call the NASDAQ note cards. If you go on Blossom, you can see them, but it's based on financial literacy. So what to do if you just are growing your family, what to do if you have a job, what can you do to grow outside of just your salary. All sorts of different things that you can do to learn in a very short little infographic. So all sorts of different education that they can go on Blossom's Education Hub and find. And then it's not just from NASDAQ, there's a whole host of other bouts of education that you get from ETF issuers and the like out there on the app, and they just went on the web as well. So highly recommend going there to try to find education as you can.
And I know this is a bit outside of our normal conversation, but how important do you think it is that as we're seeing
These things will move if this thing bounces.
And even younger, much younger people starting to try to trade their own money and don't have much of it as they're early in their careers. How important is it that they be financially literate and use tools like this?
I think it's absolutely critical. I'm sort of off the script as well as you and I normally talk about, but I'm an original founder of an organization called Women in ETFs. And we were founded over 11 years ago. I founded the Chicago chapter. Proudest thing I am of my whole career is that. And we actually dip into college and dare I say into high school.
What?
To try to teach financial literacy, what benefits can come of not just getting into this career, getting into finance.
Come on,
but
give me
what can
80
you do
cents.
to
I'm
earn
gonna
your
try to get in
money?
at 80.
I think it's so important for people coming up, starting to get their first jobs. They don't think they have enough. You always have enough.
There it is.
$1, $2, $5. You think, I don't make enough money. I'm barely, making ends meet.
Okay.
Just a couple dollars.
Wish me
Invest.
luck.
Get a large cap equity broad market ETF.
Risky.
No fees. You can get invested and you can start to make an impact on your own financial portfolio.
All right, I'll bring us back to what we normally talk about. I feel every time
What do you
we have a
normally talk
conversation
about?
international
Men?
and
Yes.
people moving into international investments. I anchored Trading 360 earlier today and interviewed
Okay.
the CEO of the Mexican Stock Exchange.
Yes.
They are about 20% up year to date, outperforming the S&P 500. Are you still seeing a lot of inflows into international, or is that starting to pull back?
Still seeing it. In fact, it's accelerating. So in August, it was about a little over 40 billion into U.S. large cap U.S. equities. International was 17 billion. So creeping up to about a third of the flows we've seen in equities so far this year. Not showing signs down. Continue to show really strong by our NASDAQ Dorsey Rate Momentum score, depending on the product that you're looking at, but really starting to see it. Performance is saying, when we talked last time about this performance going to drive some of that, I think we're seeing it, but we're certainly seeing people at very least come back to neutral and now pay much more attention.
Always a pleasure to have you in studio with us.
Thank
We really
you.
appreciate it. It's Jillian Delsignore from NASDAQ joining us. And coming up, we have Options Corner. It's that time. We'll bring in Kevin Green. He'll be joining us with the levels that he's watching as we head into the close. We're back after this.
Need a boom boom. Go. Break it. I am a lady. It's now 2:30. We've got a double top to break. We just hit resistance. We got to break that. 64.23.93. I'd like to get like a big old $2 bounce. I don't like the sound of that at all, that commercial right there, when they bring that volume up. I mean, I don't like it at all. It's tense. There's a buck. $1.05. Come on, give me $1. I want to win $1,000.
Traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content.
We got the 200 EMA and the 200 SMA, and we busted my double top resistance.
Trade brilliantly.
There's 125.
Hey, Dad.
Dad, God, stop it.
When did Granda?
I don't want to listen about your grandpa sleeping with you. Dad, how come Grandpa don't sleep with me anymore? Well, I told him not to. You were wearing him out. Afraid he might have a stroke. We've seen a lot of these days where they just pull back and pull back and pull back and pull back. Little mini scalps. I get out now with $40, 45. But I want to see if this gets to $2. There's 140. I mean, I'm tempted to sell it right now. 160. That's 800. That exit idea if you're in this trade with me. Thank you very much. I love you. Come on. This breaks. Boom. We're definitely in a place to get out of the trade if you're caught up in it. I know I sell it and I'll go like $3, $4 and I'll go shit. So I got to get out. I can't take it. I'm up $100. I mean, 1,000 grand. I'm up $1,000. I'm out. $2. There it goes. No. $3.10. No. Shit. $2 had $3. You know what that means? That meant $2,000. $2,200. I'm giving myself an A+. Magnificent. Waited all day for that trade. There's 2,000 right there. 290, 295. I had this monitor that I've got, I don't know, a long time. Every bit of 20 years, and it still works. One of my first monitors I had on my computer, one of the best ones. It's called got a VOC on it, or AO something slash something OC. Well, that kind of sucks getting out of them trades early.
Where are you going?
Schwab.
Schwab, a modern approach to wealth management.
Binge watch the market with the Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com and on all of your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free. Binge watch the market with the Schwab Network.
Accelerate your market knowledge.
And shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hinks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Welcome back to Market on Close. I'm Marley Caden. Let's take a moment to discuss the commodities market. Lots of things to discuss here with gold hitting another high. So we'll welcome in Dan Deming, the managing partner at KKM Financial. Dan, always great to see you.
Damn, look at them.
You know what we're going
What you saying go to $4 or $5?
Gold was already trading in record territory before we got the release of the JOLTS report this morning. Then those softer numbers helped keep it buoyed for the rest of the day. You know, what are your takeaways there, and how much higher can gold reasonably go?
Well, Marley, yeah, it's a shiny object in the room, that's for sure, with this resurgence to the upside. And, you know, we came off the intraday highs, so we backed off a little bit here after hitting 36.40-ish. We're currently trading around 36.21, up just under 1% of the day, but it would be a new all-time closing high either way. You know, I think the jury's still out, Marley, because of the shifting dynamics. Certainly, the rate expectation is helping gold. The idea that rates are going to continue to move lower, not only here in the U.S., but globally as well. And, you know, the metrics of central bank activity just can't go, you know, without being discussed. I think I saw a metric in the last week. I'm not 100% sure on this, but it seemed to be appropriate that possibly now central banks own more gold than they do U.S. dollars, and that's, I think, the first time in maybe several years, if not maybe history. But nonetheless, the idea is that central banks are supporting the gold market and probably will continue to support the gold market as long as the U.S. debt situation continues to escalate. And I think that lower rates are only going to continue to propel
It's
it.
$4.
And I think that further has, I think gold
That'd have been $3,000.
And where it's, I'm not going to limit it to a target because it just feels now that it's continued to break out to new highs, Marley, the momentum is to the upside.
And you did remember reading that correctly, Dan. I have it here in my notes. Gold reserves did surpass the U.S. Treasury holdings for the first time in 30 years.
There it is.
Yeah, 30 years. And, silver also riding this wave on gold's rally as well. They hit their highest level, I think, since September of 2011. Can we expect them to continue moving together?
I think to some degree, yes. I think that, if we continue to see gold maintaining this upward momentum, I mean, earlier in the year, I believe silver was outperforming gold at one point, but nonetheless, silver still has that industrial aspect to it, but as long as it's still viewed as a semi-stored value to counteract maybe exposure to the U.S. dollar, it still, to us, it appears that silver will tag along with the higher levels in gold if that continues to trend.
God darn it, 530.
So we have to go there. A weaker dollar right now, dropping against its peers after we got that JOLTS data, including the yen and the euro. As we have this continued weakening labor demand, where do you anticipate? I've seen some arguments that
Golly.
is essentially trading in range still or basically flat.
I got freaked out because I was up so much. And
what are your thoughts there?
Oh man.
It's holding this low.
$450 a contract times 10.
July, the fact that really through August into early September here, we have been a very tight range.
$4,500 on that trade.
Yeah, like 97 half on the low end. Currently 98.60 on the top end. So it's a dollar wide.
Oh shit.
Right now, as far as the price action for the month of August. So to me, it feels like it's coiling here. It's going to take its hints from the Fed message moving forward.
580.
Some of the economic data here in the U.S. and then the trade scenarios. But at least at this point, it hasn't deteriorated more. And I think that that's the key here is it's been able to
Anybody take the trade?
Find a range, even with some of these dynamics under the market really being a pretty good headwind to gold. So I'd say short-term resilience is a positive when you look at the Dow.
Good job, Randy.
But any weakness below 97.5 and a continuation of the weaker trend in the dollar versus gold, I think could precipitate further downside for the dollar as we move into 2026.
All right, let's close it out talking about oil here. We've got oil down 1.5%. We are coming into another weekend with an OPEC Plus meeting and another potential output hike in play here. Where do you see prices going here, and what are the technicals telling you?
Well, the technicals are telling me, we made that near 1 month high just in the previous session. So this give back, when you look at it over the price action for the past month or so, Marley, it has not broken the downtrend yet, but it's right there. So any further weakness below 63.5 would, in theory, break this slight experience for the better part of August. So that's the level on the downside. And if we see further weakness, I think, I think you and I spoke about this a few times here. We still see.
I don't even want to look at it now. It's probably going to go to 8.
Mid to upper 50s handle as we move through this process and into the end of the year, early next year. Just based on, again, you're seeing manufacturing slowing for the most part. Again, that could indicate global demand could be decreased for crude. If OPEC comes through what is expected, at least holding up this 2.5 million barrels per day initiative that's really been ratcheted up here, and any further increase, I think would be a major headwind for crude. And I guess the outlier will be if they decide to hold or possibly change their narrative. But as of right now, it appears that the market still thinking that they may balk at any significant increase in production, but if they show any signs of further increase based on what's already in the market, there could be further downside for WTI.
And Dan, we don't generally talk about natural gas when we're together, but I'm taking a look and it's the only gainer as I'm looking at oil and energy right now, up almost 2% on the day.
Look at that, right to the orb.
There, and what's your expectation for natural gas prices?
Well, natural gas, yeah, but yes, it's finding a little bit of stability here. It's not unusual to see dispersion between natural gas and crude on a daily basis or even over a period of time. Europe kind of got its act together here in the first part of this year, and it seems like they've been able to kind of manage their supply issues and.
Well, one red ticket today. That last one made up for it plus.
It's just a significant amount of overproduction.
But if I'd have held them, we're at $7.40 now.
Some headwinds for natural gas because of the overproduction, and there's other.
I knew it was going to go up.
So the market that
I was up.
Years, if not decades.
It was up $800.
Short term, it looks to me that if we see
I'd been up $7,000.
appears to be in a better position now than they have been in quite some time. That there's still enough supply.
700% increase.
Exportation that natural gas is probably not going to find too
800.
much upside and possibly even drift back down towards the
900. 900.
We appreciate you, as always, taking the time to chat commodities with us and break all of that down. That's Dan Deming from KKM Financial. And coming up, we'll close out our market session. We'll get the big picture from our team at Charles Schwab. Stay with us.
Schwab Bank Investor Checking. The checking account.
Caroline was better than you, honey.
The highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you. With unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because
golly, there they go.
To your Schwab One brokerage account,
$8,000.
manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you
make
can
it
start
$9,000
and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account
That
built
sucks.
for investors.
We went to 9 something.
Morning Movers brings traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern, Morning Movers, only on Schwab Network.
Opportunities don't stop when the market day ends. So neither do we. Schwab gives you round-the-clock access to over 800 of the most popular stocks and ETFs, plus a wide variety of
So that's 1,000% increase.
all with 24-hour support from trading specialists who understand the ins and outs of 24
Just in
hours
that little 5, 10,
no
15,
matter the hour. You can trade
20-minute run, 21-minute run.
No politics, no noise. From bell to
10:30.
bell, available anytime, anywhere,
1100
any
almost.
device for free. Schwab Network.
Welcome back to Market on Close. We have just a few minutes left in our trading day. That means it's time for the big picture. So we will welcome in our team from Charles Schwab. Joining us today is Joe Mazzolo, the head trading derivative strategist at Charles Schwab, and Kathy Jones, our chief fixed income strategist at the Schwab Center for Financial Research. Kathy, we'll start with you today. Just some takeaways on the choppy day that we've seen so far.
Yeah, we got a lot of data today. That was pretty significant. We got the JOLTS data, the job openings and labor turnover survey, and what we saw there was that a slowdown in the labor market was confirmed, particularly with the rise in layoffs. That was a surprise. Not only was this month up a lot, but last month was revised up. So we're starting to see the labor market give way, and I think that that's important.
Jeez, 1090, 1140.
Policy. And then the other information we got was the beige book later in the
That'd been $10,000
For the bond market, that's important because
on $800.
Economic conditions in the various districts.
Randy.
Informs how the various governors will vote, and the bank presidents tend to vote in line with what they're hearing in their districts. And what they heard was kind of stagnant to slower growth, if I had to sum it up in a couple of words. So all that kind of buoyed the bond market a bit, but still a lot of uncertainty going forward about inflation. So despite the fact there's slower growth, we also have inflation pressures continuing to hold up.
And we'll get more inflation data next week, but as we look ahead to the rest of this week, we had jolts this morning. We do have that Friday jobs report coming. Joe, for you, what are you expecting from the jobs report here, and how much of an impact does it potentially have on both the September meeting and then the meeting?
Well, I think the estimate is about 75,000 jobs created, so definitely kind of skewing towards the downside in terms of where that number has been. And then you look at the revisions that we saw over the last couple of months, it doesn't paint a rosy picture for jobs. The market's reaction today I found very interesting because the market had a few setups in where it could have been really positive. So you had the Google announcement where they basically don't have to give up Chrome. That came out last night, and we saw the futures move off of that. We got the Facebook and we got the job openings, which kind of pushed down the 10-year yield of about 4.2. Actually, at one point we were trading 4.19, so that's definitely the bottom end of the range from what I've been seeing. But I think if you look at how the market reacted, yes, we're up, but the breadth I think is important today, because you got about 2-to-1 decliners to advancers. Not quite, but almost 2-to-1 decliners to advancers in the S&P 500, and the strength is really just centered amongst a few stocks. So, when we get to some of the data that was a little bit weak, specifically on the economic front, that's when you see investors, and what they've been doing is that they've been moving back to what they know that's worked. It's been the max out, and they're kind of eschewing some of the other names that had been doing well the last couple of weeks.
I think we may have just lost Joe there for a moment. So Kathy, I'll come back to you. As far as your expectations for the job report, we did get the JOLTS data today, signaling that there's a weakening labor demand. We're having some issues. As far as September goes, still pricing in a nearly 96% chance of a rate cut in September. But what does the rest of the year and the rest of the cycle look like beyond that, do you think?
I think the difficulty the market has right now, the bond market is pricing in a series of rate cuts all the way down to about a 3% Fed funds rate next year. That's possible, but given where inflation is, given where economic growth is, given how easy financial conditions are, it may be too aggressive to price in that kind of a move. And we'll see more labor market, and to expect that Fed will come in meeting on the 17th. We've already basically heard that signal from Powell and other members of the Fed, so that seems pretty likely. And another one in December wouldn't be surprising. But you'd have to say that at that point, barring a big drop off in economic activity or a surprising drop in inflation, Fed funds would probably be about where they're supposed to be at that stage of the game. It's not a cycle where we're seeing a significant weakness in the economy such that you would expect a big drag on growth, a big drop in inflation to carry Fed funds down to 3%. So my concern is the market's kind of ahead of itself. A lot of choppy data. It would surprise me if the dominant trend just continues to be yield curve steepening as the market expects short-term rates to go down, but long-term rates kind of hover where they are.
And Joe, coming back to you, when we lost you there for a second, you were talking about sector performance, and at last I looked, only 3 of the 11 in positive territory today. As far as the technicals are indicating to you, what are you seeing in terms of sector performance?
Yeah, we're going to snag that right there at the 20-day moving average for the S&P 500. And in terms of sectors that have outperformed, just today alone, it's 2-to-1 decliners in the S&P 500. Really, the only strength I was seeing recently has kind of been, seen a little bit in you've seen a little bit in discretionary and some in financial, but in terms of technology and industrial, some of two of the sectors that have been driving growth through the majority of the summer, those have really started to give up a little bit. It's not something that causes concern, but I do think that it speaks to the fact that as the economic data starts to slow, investors continue to go back to kind of what they know to max out, and that is what's powering the business.
That brings our big picture panel to a close for today. I want to thank you both for your time. It's Joe Mazzola from Charles Schwab and Kathy Jones from the Schwab Center for Financial Research. And coming up, we have the bells about to ring here. We've got earnings on the way. We'll bring in our closers panel to take a look at Salesforce and American Eagle. Coming up.
American Eagle.
Trading at Schwab is now powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals. You can spend less time searching and more time learning. Trade brilliantly with Schwab.
Accelerate your market knowledge and shift your perspective into full view. Real-time example trades, full hours of trading. I'm coming in. Catch me on Fast Market, weekdays at noon on the Schwab.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Boom! Look at that, 1340.
What's up?
1450, I mean. To the top of the orb. That is frickin' 1660.
Yeah, chocolates are in bed.
Can you imagine? 1600. 1750, okay. Shove it. That'd have been 17 grand on that trade. $17 grand. It was tough to sit here all day and not trade. I mean, I traded 3 or 4 trades, and then I got in that one and I got fucked. I took about $600 loss, and then I wait and wait and wait and wait and wait, because it just didn't seem like, you know, you'd have to be in and out of them within 4 or 5 minutes, and they weren't moving. And then I decided to go ahead and get the calls at the end of the day, right around 3:30, and the thing runs to 1790 into close. That'd been 17 grand on $800 investment. And I said, watch these things go up, because the way the day was, I mean, just kept sucking it and sucking it and sucking it down, sucking it down. And I got to looking at the day before. I mean, we had the big old gap down and we had the big run up. And it was a huge run. Then we gapped up this morning because of the earnings and went into that Darvis box and then pulled back again to the first Fibonacci there, 32%, 38%, and held right to almost the closing price, actually almost exactly at the closing price. To a T. I mean, it was easy to read. And I wanted to scalp it a few times here. And I did. I got in somewhere up in, I forgot where I got in. I think it was coming down on this knife. And it just sucked me out. I mean, it just went dry. I went in at $1, added, and 80 cents, and then added at 65, and then it just kept going down to 5 cents. And I mean, that little bitty, hardly any move, $5 move. And then this. $800. Went to $17.90. And I got out at $180 and $2 because I was up 800, almost 900, $1,000. Not 1,000, but almost 880. So that's tough. I mean, we just kept going and going and going and going and going. I wasn't in it too long. Just kept going. So, yeah. Days like that, I mean, I've always said it's worth sitting here. Even on the boringest days, it's worth sitting and waiting. Because I've seen it happen so many times. And today was just like, suck it out, suck it out. And we didn't move that much. And then you hear all the crap that these people are talking about, and September will be the month to remember. September this. And this Marley, she's no help. She reminds me of some of them people on CNBC. Squawk box, fearmongers. Caroline wasn't like that. This girl talks too much. Oh well. So I'm going to get out of here. That'd been nice to get in there and get that $17,000. Golly. But I get emotional when I'm up $1,000. I don't know what to do. I get freaked out. Okay, well, I gotta go. I'm gonna watch some videos, go to bed. I've been a little tired today. Good job, Jesse.